All right, welcome back, everybody. Shares of Lowe's are actually moving higher right now. The company reported better than expected profit and revenue. Its outlook pointed to potential business improvement in the year ahead. That stock right now up by about 2.3%. Joining us right now is Michael Baker. He is senior research analyst at D.A. Davidson. And Michael, what in the report was the most important? Was it the traffic trends that are here? Is it what they're seeing about the potential for growth in the year ahead?
I think it's simply the same-store sales in the fourth quarter. Home Depot comped positively yesterday. That was their first positive comp in about 2.5 years. That put the pressure on Lowe's to do the same, and they did. The bar was elevated, and they cleared it. The 0.2% comp, their first positive comp in 2.5 years. It shows that the home center space has really bottomed. Margins were good. Outlook was good. All those were very helpful, but they needed to hit that comp number after what Home Depot did yesterday, and they did.
Yeah, the Home Depot instant reaction was that the stock was lower. Now, I know it traded higher later in the day, but what's the difference between what we initially saw in the Home Depot report yesterday and what we see with Lowe's? Or was it just taking time for the street to really think through what Home Depot was saying?
You hit it wrong, baby.
Well, that was a little bit about the outlook for 2025. Home Depot did give what looks like a conservative outlook. On the call from Home Depot yesterday, it was pretty clear that business is going pretty well right now, but they're setting a low bar. So in a way, Lowe's doing something similar. Their guidance is a little bit below the street as well. But because Home Depot already told us that yesterday, it makes it not look as bad. So I think that's the difference.
So they have the benefit of reporting after, because Lowe's sees 2025 comparable store sales flat to up 1%. I think the street's expectations were that comps would be up 1.1% for the year. So again, it's a very similar tone to what we heard from Home Depot yesterday.
Exactly. And not just Home Depot, by the way. Throughout earnings season, what we've seen is most of the retailers, the big box retailers that we cover, have beat on the top line. In fact, about 80% have beat on the top line. 0 have guided to numbers for 2025 above consensus. Everybody either in line or even below. That's what we've been seeing. I think the idea is why set a high bar? Why put the pressure on yourselves? Set makeable, beatable numbers. We saw it from Walmart last week. They called their guidance starting point, prudent, measured. There's a lot of policy concerns out there, policy rifts, as we're calling them. That's our acronym. So it makes sense just to guide a little bit more conservatively.
So was the Walmart sell-off last week overdone?
I think so. Yeah, today we like the sell-off was entirely because of the guidance. And if you listen to the call, again, the words they used were prudent, measured, a starting point. One interpretation was the consumer's falling apart. That's not at all what Walmart was saying. In fact, January was their best month of the quarter. Their business is fine. They're just setting the low bar.
Okay, so the overall trend after hearing from several of these companies is they may be cautious, but you're not as cautious on this. You think the environment's pretty good, the consumer's pretty good, and you would stick with these names?
I would. The fourth quarter sales were the best sales trend of the year in 2024. So we're seeing the consumer outspending. Again, there are some risks on the horizon. We call them risks. That's rates, that's inflation, that's FX, that's tariffs. So there's a lot of uncertainty. So it makes sense to be a little bit cautious. And the truth is we have seen a little bit of a slowdown earlier in the year after a really strong holiday.
You guys are idiots.
Retail sales have been pretty good. So we're more positive than not on the consumer right now.
Okay, Michael, thanks a lot. Great talking to you this morning.
Thank you.
It's 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. On today's top stories, the House narrowly adopting a multi-trillion-dollar budget blueprint last night. 217 Republicans banding together to pass that measure against all Democrats and the lone GOP holdout, Kentucky Representative Thomas Massie. Meantime, officials in Ukraine confirming they reached a deal with the U.S. over access to Ukraine's deposits of rare earth minerals. Now, they're saying that the plan would involve the creation of a joint investment fund and is directly connected to security guarantees for Ukraine. The agreement could be finalized and ready to sign later today. We'll keep our eyes, of course, on that very, very big story. And then the board of General Motors approving a 25% dividend hike to 15 cents per share. It's also authorized $6 billion in share repurchases. $2 billion worth of those shares will be retired, and you're looking at that stock up on the back of that news a little over 4% right now. Meantime, take a quick look at the futures. 125 points higher on the Dow. You're looking at the NASDAQ up 130, 140 points there. The S&P 500 up about 25 points. I want to get straight over to Frank Howard to look at this morning's market.
We wanted you to do,
Our egg names?
yeah, Beggy Quick,
Beggy Quick.
Yoke
Along
Kernan,
with Yoke Kernan.
Andrew Ross Cluckin, and we're now going to turn it to Frank Hollandaise.
I wasn't expecting that,
Well
guys.
done.
That was not. That's a good one, though. I like that one. By the way, happy NVIDIA Day, guys. Huge day for the markets today. Taking a look at NVIDIA right now. NVIDIA higher in the pre-market, up just about 2% right now. Out of its blockbuster earnings report after the close, analysts polled by FactSet, they expect $38 billion in sales for the quarter. That would be a 72% increase from last year. The stock's had a bit of a sluggish start to 2025. You're seeing some of the drops and kind of moving sideways since then. It's about falling about 3% year to date, also about 15% off of its all-time high. Again, NVIDIA shares are up just about 2%. And tonight, make sure you tune in to a CNBC special report at 7 p.m. Eastern, where our John Ford, he's going to break down the quarter with the man himself, CEO Jensen Huang. All right, moving on, another earnings mover this morning. Anheuser-Busch higher by about 7% right now, up just about almost 7.5%, after topping expectations with its fourth quarter revenue despite an annual decline in volumes. The CEO telling CNBC that drop was due to weak demand in China, which is actually the world's biggest beer market, and Argentina. The maker of brands including Bud Light, Budweiser, and Michelob Ultra has seen its shares climb almost 18% this year. A bit of a turnaround from the action that we saw last year from the stock. All right, moving on, looking at shares of Supermicro. They're soaring this morning. Take a look at this chart right here. Shares up over 24% after the chipmaker filed its delayed quarterly and annual reports with the SEC just in time to meet the Nasdaq's listing deadline. This restores it to compliance with financial reporting requirements. It also removes a major overhang from Supermicro, whose auditor resigned last fall, saying it just couldn't rely on management's representation of the company results. Again, shares of Supermicro, they're up over 24% right now, year to date. Huge run up. You see, it's mostly in recent days. Shares up just about 86%. Andrew, back over to you.
Okay. Frank Holland, thank you, sir. Frank Hollandaise, I guess.
Hollandaise. Coming up, Rockefeller International with Rashir Sharma on why he's bullish on investing in China. Then later, Congressman Ro Khanna joins us to talk about the passing of the GOP budget plan, the impact of Doge, and much more. Stay tuned. You're watching Squawk Box, and this is CNBC. There's the futures this morning, not too bad. About 127 points now on the Dow. Let's talk markets with Monica DiCenzo, head of the Global Investment Opportunities Group at JP Morgan Private Bank. I don't know, Monica, you're just really not that excited about this market, are you?
It's hard to be very enthusiastic given some of the headline risk and volatility.
You've been risk on for 2 years. You've done well.
Yeah.
There's some headwinds. They're apparent to everyone. That could be good, though.
I think it'd be very good. Many of my clients still have too much cash. So for those people, this is great. But there are also people who probably have a little too much risk on. They owned a lot of tech. They did really well. They own a lot of private equity. There haven't been exits. They need to think about rebalancing and just making sure your portfolio is ready for a different volatility environment.
Right. So don't stay at the party too long, but you don't.
I learned that lesson in college.
Like call the Uber, but yeah, right. But you don't leave yet.
No, you never want to completely, obviously, sell down and de-risk your entire portfolio. If you did that during COVID, for example, you saw how quickly things can turn around. But that doesn't mean you shouldn't have some portfolio protection on. Many clients I work with still don't own enough fixed income because for so long it didn't make sense. Even though we're worried about inflation, fixed income still makes sense in a portfolio now. Rates are higher.
You think the odds are better than 50% that in the next 6 months we get a 10% pullback?
Oh, I think so. And by the way, I'd be okay with that because I think that would be healthy. What you need to see is a rotation and people start to reposition portfolios again out of these one or two areas that did really well and start looking at other parts of the market. And you're seeing that. That's why the equal weighted S&P has been outperforming.
So range bound, but positive.
Yeah.
We're just under 600. You're looking for 6,400 at single digits.
That's our base case for year end. That assumes you're like low double digit earnings growth, but multiple contractions.
Okay, so I'm uncomfortable. I don't have any tech, but let's say I did have some tech. I'm
Yeah.
uncomfortable. So what? So half go where? What do I do?
So I'd want to look at it in the context of your portfolio. And the answer may be sell none, but if you have a lot of cash, do you buy some fixed income and bonds to balance that? Do you think about adding portfolio protection? Do you look at uncorrelated assets, infrastructure, real assets, gold? That's what we just want to make sure people have that balance. People probably got a little too overweight growth in their portfolios the last few years because again, it was the right trade.
Would you like the Fed to cut a couple of times this year? And would it mean you'd have to give up some economic growth? You'd have to acknowledge the economy is slowing to get the cuts?
Yeah, I mean, that's still our expectation is for 2. I think the risk clearly feels like less than that, and that's what the market
does.
is. I think that's what the market's starting to prepare for. That you could see. I mean, the tariff question is a big one, right? If you worry about inflation, then that's the other side.
Are you
of it.
worried about inflation, or are you worried about the consumer in a possible labor market weakening or slowdown?
The big question for me is labor. As long as people have jobs, they're okay. If that changes, then that changes our outlook. But on the inflation side, again, I think about where do people have risk in portfolios? Where do my clients have risk? And many haven't necessarily positioned for a world where perhaps the tail event is that you have inflation and rates moving higher again. And so that's what we're trying to prepare people for, whether it's trying to manage their floating rate exposure or again, looking at assets that would perform well in an inflationary environment.
So during the Biden years, the market did pretty well with what was perceived to be a very high regulatory
Yeah.
environment. If you dismantle that regulatory environment, but at 22 times earnings, I mean, is it still, will it be a positive?
I think it's a positive for some sectors. I mean, you think about where we've been waiting to see more M&A, so healthcare. Actually, we've been waiting to see M&A in general. So that's, by the way,
And
good
it didn't
for
happen. Andrew pointed that out
didn't
yesterday.
happen. Good for
Still
certain
hasn't?
sectors. Still hasn't really picked
Why?
up, but the pipeline's really strong. So I think companies are ready if the environment gets a little bit more
No
forgiving.
exits, you said, for private
Haven't
equity?
seen many exits, but by the way, if that changes, it's a reason we like financials. It's good for banks who obviously participate in the M&A cycle, and it would be good for private equity. So why we've seen a lot of people look at secondaries on the private equity side. People need liquidity. There haven't been exits, and so if you can offer someone liquidity, you can get things at a discount. That's a great trade.
Interest rates are not, prohibitively high for M&A. I just don't see what. So if you think it's in the works.
Well, it is in the works from every
Yeah.
investment.
What do people
banker
tell
you
you?
talk to.
It's
It's
working. They're
just-
all your
it's-
friends. aren't they?
They say in the works.
Yeah.
They do. Selling or buying, both, because there has to be both sides.
Not like a
Well,
spigot where you turn it on. and
Look, the flip side is think about what Steve Cohen's saying.
Yeah.
Go straight to Steve Cohen. Do you think Steve Cohen's one of the smartest investors in America?
Others have echoed similar things supposedly too.
Right? He's in a very negative
Elliot
camp.
Griffin, yeah.
He thinks the market's moved, and now we're going to be in some kind of rut for some period of time between tariffs, between taxes, between investment, between Doge even. I mean, he's got on a temporary basis. Maybe
Yeah.
he's got a longer term view that it could work out on the other side. I don't know, but I'm saying right now he
Do you
doesn't.
agree with that? Monica?
I do, because if you're running a company, how do you plan when you don't have visibility? And that makes it really hard. Again, I don't think we're not calling for 10-20% drawdown by year end, but for the next few months, it makes it, the market feels opaque, and that's challenging.
Okay, great. Thanks, Monica.
Of course, thank you.
All right, when we come back, we're going to talk about investing in China. Rashir Sharma joins us on why it may be attractive, why maybe David Tepper was right. Plus, a close call at a Chicago airport. This is kind of terrifying. I don't know if you've seen this video yet. If you haven't, you are going to want to hear the details on it. Squawk Box. We'll be right back.
Time now for today's Aflac trivia question. What was the original name of Dell Computer Corporation? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. What was the original name of Dell Computer Corporation? The answer? PCs Limited. Founded in 1984 by Michael Dell, the company was rebranded to Dell Computers in 1988.
A Southwest Airlines plane narrowly avoided a collision with a smaller business jet at Chicago's Midway Airport yesterday. The FAA said that the business jet entered the runway without authorization. In fact, I believe there's audio from the air traffic control telling that jet not to enter the runway. The Southwest flight crew performed a so-called go-around, but this was pretty heroic. They pulled up seconds before landing. They were just about to touch down when they saw the business jet that was entering their space. That flight later landed without incident, so kudos to the pilots on board there. The FAA and the NTSB are each investigating.
It's a flex jet, right?
I think, I don't know the details on the business jet.
I mean, yeah.
But
It's
it just,
like a
it
wheels
just,
up.
and look, the thing that I can't figure out is how do we make this system better? I mean, this goes, maybe it's a
can't
technology
make
story. No, you
have to
can
make it
though.
better. If the pilot ignores what air traffic controllers told him to do, I don't know.
Sure, but I think one of the things that's happened is these airports are so congested right now.
With so many
and we're-
business jets.
No, and we're landing so many planes so quickly that the opportunity for
It's been like that
disaster
for years, though.
is much closer. But if you're landing planes every 60 seconds, when the
I
flex,
think you have to have 2 minutes in between.
but
But
when
it's been
the
that way for 10 years.
sure, I'm just
So
suggesting that-
nothing's happened. So this is a cluster that probably, and once again, you would not,
Okay, well-
you would not get into a car if you just do the numbers and compare the risk associated. You would never get in another car, especially not some Uber, somebody you don't even know how they drive. You would never get in a car, and so just, I mean, you can just say, oh my God, the sky is
I'm not
falling.
saying, oh my God,
But in,
I'm just
but
saying-
in number, in probability and risk
I'm not.
terms.
I'm suggesting
Okay, so
hopefully
but I
the risk
don't,
is good.
but I don't understand what you're saying there.
I'm
But
saying
the-
that I think that we have to have
If
we
it's
have to rethink the system.
Then what do we do with
Because if we-
cars? If it's 100 times more likely to die in a car wreck, what do you want to do with that? Let's focus on that problem first. If it's 100 times more likely to die that way.
I don't think we've come up with a solution for that one. I think that I think it's actually a lot easier to solve this than it
I don't
is
want to
that
get
because there's a
T-boned.
lot less of them.
We were just talking, I don't want to get T-boned when someone runs a light. I don't, those are, a lot of people consider stop signs and red lights optional.
Yeah. Well, that's why you have to be.
And then you throw in the pot's legal. Great.
Coming up, Rockefeller International's Rashir Sharma joining us to talk investing in China and how the landscape has changed under the Trump administration. Squawk Box returns right after this.
I don't know if it's 100 times.
washboardasset.com.
We're watching shares of BP. The company announced plans to increase its annual oil and gas investment to $10 billion through 2027. It's part of a strategic reset following sharp profit declines. The company planning to provide more details in an investor presentation. It starts at 8 a.m. Eastern Time this morning.
Shares of AB InBev are rising after the company reported better than expected fourth quarter sales despite a year-over-year decline in volumes. Total volume fell by 1.9% in the quarter and by 1.4% over the full year, which the company largely attributed to weak demand in China and Argentina. The company's CEO spoke to our colleagues in Europe overnight about the potential impact of tariffs.
We don't think that we're going to have big topics to discuss during this year in terms of tariffs. There is always like secondary impacts. But we are watching this, what the development is, and we are prepared to use other levers that we have to offset costs if we have any.
That stock is up, I think, about 8% this morning, yes, and about 17% just since the start of the year. Make that 18% for the year to date.
Coming up, we're going to talk to Fanatics CEO Michael Rubin for all things sports betting, collectibles, and this year's Fanatics Fest. As we head to a break, take a look at shares of Lowe's. Profits and revenue both beat expectations. Comparable store sales also topping estimates. We're coming right back after this.
Now.
China's President Xi urging officials to remain calm in the face of internal and external challenges, signaling that the country may take a measured approach in dealing with U.S. tariffs. That's according to reports out of Beijing. Joining us right now is Rashir Sharma, Rockefeller International's chairman and Breakout Capital founder and CIO. His latest piece for the Financial Times is titled, "Is China Investable Again?" And Rashir, lay out your case for this.
Well, my answer, Becky, is that it's always been investable. It's just that what's happened now is that there's been a big shift in sentiment. The big shift in sentiment really started with the DeepSeek announcement, because that sort of showed that China is still very much in the innovation game. And then the other thing, which I had pointed out when we last spoke about my top trends of the year, is that the market had become really very cheap, because after Trump's election, there was almost a fire sale with a lot of pension funds in the US saying that this country is uninvestable, Trump's going to come, he's going to excommunicate China from the rest of the world, and at least the US listings. There was a lot of negative narrative on China, and the Chinese market was trading at nearly half the valuation of the US market. So my point here is that there's been a big shift in sentiment. Now, of course, I don't think the fundamentals have changed. I still feel the Chinese economy is likely to keep slowing. Its growth rate is likely to be 2 or 3% on average over the next decade in real terms. But I do feel that the market had become too cheap, and I think that as we look now for more international opportunities, China should very much be in that mix.
Rashir, I can't help but think back to David Tepper, who joined us at the end of September on Squawk Box and said that he was buying everything China. Was he just very early on this? Did he see this before everybody else?
Well, I can't speak in terms of obviously, a great gut instinct for able to do that. But I would say this, though, that let's also be clear what this Chinese rally is about, which is that the original argument for buying China in September was that they're going to stimulate very heavily, and that's going to end up in terms of lifting the market. That didn't really happen. Even now, that's not happened. The rally is still very much concentrated in Chinese tech sector. If you take out the Chinese tech sector, the rest of the Chinese market is really not doing much, even in a strong year like this. The market is virtually flat. The domestic market, which doesn't have many of the tech stocks listed, is virtually flat. So I think that it's a case of being right, maybe for the wrong reason, which is the fact that people are expecting the stimulus to do a lot. Instead, all that's happened is that there's a big sentiment shift triggered by DeepSeek and the fact that people are seeing value, but it's very concentrated as yet in the Chinese tech stocks. Now, I think that should broaden out, because Xi Jinping, I think, is very aware that he needs the private sector to help grow. He's facing the headwinds from the US, the uncertainty with the tariffs, so he needs the private sector now. So he's trying to make the private sector more of an ally rather than the hostile attitude that he adopted a few years ago. So that's a change. But so far, the rally has nothing to do with the stimulus. It is very much a sentiment shift triggered by low valuations and the fact that the DeepSeek moment has shifted the perception on China's tech prowess.
Just in terms of the risks that are still at play here, I mean, we think, or you think, I should say, that things are going to be okay with the tariffs and other things that come along. What's the potential for this to get out of hand?
Yeah, I think there's a lot of fear in the marketplace, and even in the US in particular, that how is Trump going to be with China? But everything that I've seen out of Trump, suggests that, there will be some tightening of investment rules or so, but generally he's been softer on China than even Mexico, Canada, or somewhere else. That's the revealed preference. And the one irony of this moment is that if you look at Trump's first term, the best performing market in the world in this first term was MSCI China. Now, of course, there were other reasons there, but, and Trump did do tariffs and stuff, but overall there are other factors at play here. So I think people are too obsessed with how Trump's going to be with China and trying to base investment decisions in general on that. We don't know what Trump's exact mind on China is, but so far the real preference is that he's been softer on China than I think that most people would have expected at the outset.
One of the things you wrote about that really surprised me is that you say China now has more than 250 companies with a market capitalization of over $1 billion and free cash flow yield of more than 10%. So 250 in China versus fewer than 150 of those similar companies in the United States. That kind of caught me off guard.
Exactly. So that's the kind of reason which in fact even caught me off guard, to be honest, Becky, because I didn't expect China to have so many such companies, which just tells you there's a lot of value creation. And some of these Chinese tech companies, the Tencent, Alibaba, a lot of these companies are throwing out a lot of cash flow now. Now, of course, the difference in China, as I also write in the piece, that in some way the market is more competitive than the US. That if you look at the various industries there, the concentration is a lot less, the competition is a lot more intense when the US, the big companies tend to dominate across sectors, particularly tech. So that is the irony there, which is not that great maybe for some investors who are looking for moats and stuff. But in general, yeah, that just tells you how much value there is. So again, just going back that, I'd spoken about this last time as well, that I think that my favorite paid trade of the year is, long BYD, short Tesla. I mean, I just feel that that's just, telling you about what the valuation gap is. One, even after the rally this year, trades at less than 1/5 the valuation of Tesla, which is BYD, and sells more than twice as many cars as Tesla does. It is growing very fast in many markets. So I think that there are those kind of relative value opportunities to be had there. Now, of course, I don't think that we should bet our entire fortune on China, like in terms of that. But I do feel it needs to be part of the mix, particularly in a year where the international markets are, finding favor again in general. International investing has been dead for 10 to 15 years. It's finding some favor again with people. And so I think China needs to be in the mix. At this stage, of course, I think emerging markets outside of China offer even better value after the rally we've had in China. But this entire approach that I think some pension funds, and other people in the US have taken, or even some large institutions around the world, that China is uninvestable, we can't put any money to work there. I just feel that for the second largest market in the world, that's just too sweeping an approach, and it needs to be much more nuanced than that.
Bashir, thanks for joining us today.
Thank you.
And coming up, all things sports, Fanatic CEO Michael Rubin is going to join us in an interview that you don't want to miss. That's coming up next. Spark Box will be right back.
know.
New Jersey Governor Phil Murphy is proposing an increase in the state tax on online sports gambling to 25% from a current maximum of 13%. Online casino gaming would also be taxed at 25% under the plan, up from 15%. Murphy said the proposed online gaming tax rate would bring in an additional $400 million for fiscal 2026. Meanwhile, the Philadelphia Eagles Super Bowl win driving record merchandise sales. Sports giant Fanatics still riding that momentum with its commerce betting, collectibles business. Fanatics has a valuation of $17 billion, according to Forge Global. Joining us now, Fanatics CEO Michael Rubin. Is that about right?
No.
That's what I thought.
It's not the first time I've heard something wrong before. No.
But I saw much higher than that.
Yeah, it trades at about 25 billion today, and it's been pretty consistent over the last couple of months. So there's been a fair amount of trading there. That must be probably one of the businesses. I'm guessing that's probably the collectibles business, not the entire business.
Yeah. Forge Global, we specifically was talking about one of, not the entire entity.
Yeah, that's right.
Okay. As far as the Super Bowl went, there was only one other event that sold more merchandise. What was it?
Chicago Cubs. NFL, so the Eagles had the absolute record for most hot market sales of an NFL for a Super Bowl. But if you look in the history of our company, Cubs was the biggest hot market ever. Those fans had not won for 100-ish years, and they had a lot of pent-up demand. But Eagles fans, Philly fans, they're incredible, and they showed up in a really big way.
They did. You have done a lot of acquisitions. How you feeling now? You feeling like you're still digesting some, or you're ready to go?
No, it's a great question. I think when we reinvented the company in 2020, 21, I think the first 2 years were really about setting the strategy, doing the M&A deals to enable some of the strategy, doing some of the business development deals. So I'd say 21 and 22 were really about the enabling deals to kind of bring our vision to light. And that we took a lot on during 21 and 22. I'd say the last year and a half have really just been about laser focused execution, and that's why the business has been so good. When you take a lot on, you've got to absorb it. So probably the most interesting stat is I think in 21 and 22, I think we spent $1.5 billion or $2 billion in M&A. I think in the last year and a half, we spent less than $100 million in M&A. And we don't really have things that we need to buy now. I think we have all the assets we need to build, all the assets we need in place today to build a company that could, be a $5 to $10 billion EBITDA business long term.
What is the vision of the company now? What versus what it was versus what it is?
Yeah. So when I started coming on here, I was just thinking about this. I think I've been coming on here for probably 20 plus years. Yeah. It was really about building the best and most fan friendly, what we call commerce business, really everything around fan gear. And then in 2020, 21, we really reinvented the company into a digital sports platform. So today we have three businesses. The original business, Fanatics Commerce, that this year will be close to a $7 billion commerce division, really focused 100% on fan gear. We have the collectibles business that when we came up with the idea in late 2020, and then we bought Topps January 1st, 2022, it was a $500 million business. That was $1.6 billion last year, it'll be over $2 billion this year. And when all the rights kick in from the NFL, the NBA, and the English Premier League over the next year, that'll be approaching a $3 billion business next year. And then we have the Fanatics betting and gaming business, which we only launched 16 months ago. We've already got 6.5% of the market in the sports betting business. So, and by the way, Joe,
really?
we're gonna do a check. We're gonna do a check on your phone.
I know.
If the Fanatics Sportsbook app is not there, I'm gonna have to go to
You're bullying me.
We're gonna have to go to Kramer's show or either that. Or we're gonna throw you out of here. I'm only gonna work.
You think you can make money on my $5 bets?
Yeah,
You still want me?
Absolutely.
6.5% market share is pretty big.
Yeah,
Look, I'll tell you, realistically, we're doing better than everyone expected, and we expected ourselves. So we went out there with a bold vision saying, look, we want to be in these three businesses. We want to be in the fan gear business, we want to be in the collectibles business, and we want to be in the betting and gaming business. And obviously, in the fan gear business and the collectibles business, we're the market leader. Mm-hmm. In the betting and gaming business, we're the underdog, and we love being the underdog. And I'll tell you, DraftKings and FanDuel, they're really good companies. So for us to go from essentially no market share to 6.5%,
That's what I mean. That's
in 16 months, we're excited.
What are your customer acquisition costs? Because they're pretty high for those two other companies.
Yeah, much less. We're acquiring customers for today in the 9 or 10 month range, which is substantially less than FanDuel and DraftKings. The reason is because Fanatics as a brand is a well-known company. We have 115 million customers in our database that have bought merchandise from us. We touched, we had 23 million unique customers buy from us just online last year. In the league stores that we own, we probably had another 10 million customers buy from us. So we touched so many customers and so many different touch points. And so that's been a real advantage for us. But I mean, look, I think today we're already in December, we were the third largest player in the online sports market, kind of tied with MGM. And again, if you would have asked people 2 years ago, they'd say, Michael's nuts. He has no chance. This isn't going to work. And today people are saying they got the third best ranked product and they're the third largest from a market share perspective. But distant third to FanDuel and DraftKings, who we have a lot of respect for.
Can I pivot to just a slightly different topic, which is you made a big bet on baseball, generally, Major League Baseball, obviously baseball cards, the whole thing. MLB not making a deal with ESPN because ESPN was not willing to pay more than they used to. What does that say about the state of baseball in America?
Yeah, so baseball for us is doing great, not good.
Okay.
The rule changes they've made have been really well accepted. And when you change things and do something new for the first time, a lot of times people don't like that, they don't accept that. I think the rule changes have been universally positive for the sport. I mean, I can't go through one by one, but I think they've been universally positive. I can tell you, in the trading card business, baseball when we started in January of 22 was the third player. It was a $370 million business, a distant third to the NBA and to the NFL. Today, baseball's number one by a mile. They did $850 million last year in baseball trading cards. And, NBA and NFL are still in that same range that they were. So a lot of momentum in the sport.
So why is that happening on one side?
Yeah.
And ESPN is saying, no mas, we can't pay this money anymore, and there's all sorts of new questions about the valuations of baseball.
It's a great question. Let me just tell you one more data point. Our FanDuel business in baseball also doing really well. So we see momentum across the entire consumer products business. What I tell you is, I've obviously have a front seat to a lot of these media deals, not just in baseball, but across all of the sports. And a lot of times you see one person who says, this isn't worth that, and then two streamers show up and pay 3 times that. I would tell you, if I were a betting person today, I think the value of the baseball rights will be meaningfully greater.
So you think Manfred's going to get more when this is over?
That's what I've been.
Than what he could
So
have gotten.
I've heard from 2 people who want the rights that they think the rights are worth meaningfully more.
So this is.
And you saw, by the way, you saw the same thing.
I was going to say, this is when Fox came in the NBA and CBS, I'm sorry, the NFL.
In the NFL. Yeah, look, I'm thinking back to Thursday Night Football and how much Amazon valued it. Think about the package that, look at the way NFL's done such a beautiful job finding all these different partners. Look at Netflix they just brought in for Christmas football.
Right.
Okay? And what a great job they did with it.
But the NFL's is sort of
look, nobody's better in media than the NFL, but I will tell you, ask me a question, do I think baseball get more for their media rights than what ESPN
Then let
wants?
me ask you this, do you
the answer is
alienate
yes.
the fans by doing that because they can't find you and figure out where you are when you have so many games that are on so many different
Yeah,
platforms?
I think that's a universal problem in sports overall. Like for me, I can tell you as a fan.
It ticks me off.
By the way, it aggravates me all the time. Like we actually just talked about designing a product within our app. Just where do I find the game?
Yeah.
Right.
It sounds so simple, but like you need that a lot. Like you
Yeah,
can't
so
find
one of the
games.
things that I've always thought that you could be in the end, if you weren't a media company unto yourself, is a packager. Meaning, there was obviously this venue experiment that didn't go anywhere.
Yeah.
But if you were given, you have the gambling piece already, and you have so many people on your site, I've always thought that you should be going to Warner, going to NBC, going to everybody and saying, we will package it ourselves as sort of a true third party.
Yeah. So it's a great
And
point.
you could be the
Yeah.
Switzerland.
So take a step back for a second. We were 4 years ago in one business. We've now, kind of reinvented the company into a digital sports platform. Today, 3 businesses we're in had $8.1 billion of revenue last year. And we think those 3 businesses alone, 5 in the next decade could be a $30 billion plus business that generates, $5 to $10 billion of EBIT. It's that kind of, opportunity and growth. So what we want to make sure we don't do is do too much too quickly. That said, when you talk about packaging things, we like those ideas because what we don't want to do, we don't want to be in the media business today. We don't want to be in the ticketing business today.
No, I know. That's
we
why
have
I
great
think you should be the
opportunities.
packager.
We have a great opportunities in the
You're
three
the bundler.
businesses we're in.
You're like the cable operator.
But there's no question that we need to, like, look, the Fanatics app today, which we are laser focused on. You know, if you look at the amount of daily users coming into it today versus a year ago, it's exciting. Same thing with the sports betting app. Same thing with Fanatics Live app.
Right.
Okay, so I think it's our responsibility to wrap a lot of things together.
Does it end up in one app? Super app?
So
Fanatics super app?
So I think right now, I think we're gonna have 3 key apps. One will be the overall Fanatics app, which won't have betting because you have people under 21 in the app. Okay. The second will be the Fanatics Sports Betting app, and the third will be kind of our Fanatics Collect app, which will really be something special for collectors. I think
You can't wall off the betting inside the same app?
I think you want to make sure you don't put. Sometimes you're gonna have too much in an app, and you can kind of have overkill. But I can tell you that the biggest thing we look at. I was actually talking to somebody from Uber a couple weeks ago, and they had a great line for me. They said, you know, Michael, the problem with Uber rides is people don't use it that much. Like they only use it like, you know, once a week. They're like versus like Uber Eats, they use it every day. And my daughter's the exact case study of that. She uses rides once or twice a week, and she uses Eats multiple times a day. Okay, we want to figure out what are all the things we can do to have sports fans using our app multiple times a day. So we have a free to play game, people use it like crazy, and we keep adding more things to the app. But it doesn't mean we always need to build them ourselves to the point that you made.
Got it. Okay.
You miss
Fascinating.
owning the 76ers and the Devils?
Definitely
Worth
not. Look, if I'm being quite, look, sports ownership is a thrill for most people. I was obviously disappointed we never got a championship while I was involved. So the way I look at it is we failed, if you just look at it that simply. But the opportunity of building Fanatics is so much bigger than any one sports team. And I think we have an opportunity to create one of the most important consumer brands in the world, to create you know, something that touches billions of sports fans globally. And today, probably the thing that's most exciting, I feel like we're a startup. We have 22,000 employees. We have more than $9 billion of revenue this year. And I'm 52, and I feel like I'm going to do this till I die. So, like, we should be the brand that every sports fan digitally works with in the world. And so I'm 150% focused on that. Also, you keep it real. It won't be a fun time to be the Sixers owner right now either.
Thanks, Michael.
I feel like we're in kind of a lull right now, sports-wise. I mean, I'm doing college hoops. Do you know how hard college hoops are to bet on?
Yes, for sure. But I'll tell you, like when I look at the betting business and the projections versus what we've done in the last 2 months, we've been like meaningfully ahead. So the betting business is very good
still
overall. Like,
going.
you're going to see this in DraftKings numbers and FanDuel's numbers. They will have very good first quarters if the trajectory that's happened in the first 2 months stays in the next month. Has
I
been
did
very strong.
2 4-way parlays last night. Guess how many I actually got right total?
0?
0.
1.
Yeah. Well, I'm going to say one thing. You did that on DraftKings, correct?
I'm sorry, I did.
Yeah, so if we will.
That would've been a good day
I
for you,
just wanted to clear this right now.
I know you won't be coming back.
All of
I know
my
you're
exclusivity is
sorry.
with the two of you. I don't actually speak to Joe anymore.
You what?
I don't
Oh,
speak to
because
Joe.
I'm not. All right, I'll do it. He's not on. He's not gambling with you.
I show up at FanFest.
This guy came to Fanatics Fest and
I came.
he demoralized himself in front of hundreds of thousands
They
of people.
actually sent me the video.
content.
I showed
He
up
had a
later
ball
and they
hit
sent
him-
me
he had a ball hit him in the chest 4 times from Tom Brady, and somehow his hands couldn't keep it there.
Well, because
And
that
I did
becomes
not-
his
it's
supports
like a
everything.
rock when the man throws
Yeah.
the ball.
Well,
Alright,
I
for the-
did, by the way,
even though
they
they're
gave me the
totally
video and I
deflated?
did not share it.
Yeah, not
Why is
really.
it like a rock if there's no air in the footballs he's throwing you?
All right, Fanatics Fest.
These were Fanatics balls.
All right,
Yeah,
Fanatics Fest coming this year, June 20th to 22nd.
Yeah, earlier. Why earlier
Yeah,
this year?
because you couldn't get active NFL
Did you
players.
invite me to Fanatics Fest?
Yeah, you're out. I don't speak to you anymore. It's over for us. Fanatics, this is it for us.
I didn't even know if I was invited.
Yeah. So what's really exciting about Fanatics Fest, now that we're doing it June 20th to 22nd, we're
Man.
going to have all the current NFL players. So I just look like Jaden Daniels coming this year, CJ Stroud, Caleb Williams. You're going to have there's going to be 100, current NFL players. So June is the only
And
time
this
of
is the
the year.
collectibles business.
Do you go to his white party too? Oh, so he gets invited to that.
Different places.
Joe, we don't speak anymore. We've given you fair warning a few times. We expect loyalty
Because of the
from you.
because of the betting.
That's right.
Mike, thank you. Nice to see you, sir.
Honored to be with you guys.
We're coming right back after this. Welcome back to Squawk Box. Tesla shares right now. Take a look. We're at $306. The EV maker stock losing more than 8% yesterday. Its market cap falling below $1 trillion. Joining us right now to discuss what's going on, John Murphy, Senior Auto Analyst at BofA Securities. Good morning to you.
Great.
I don't know. I mean, we see Elon in the headlines every single day. These days, more for Doge and everything else than Tesla. But now this is here. How much do you think they're related?
So, I think they're certainly piling on. But when we look at sort of the fundamentals of the company, it's got product that is pretty old at this point. When you look at the 3 and the Y, the 3 is 8 years old, the Y is 5 years old. You think of standard, product cycles in the traditional industry, they're 5 to 6 years. So these things are these things are very old. And when you look at sort of the Chinese competition, they're 2 to 3 year cycles. So I think there's a real issue with the product cadence, and we need a lot of new product to come, which is supposedly around the corner. But
Do you think it is around the corner?
Well, I mean,
That's the question.
the claim is this entry-level vehicle of $30,000 is going to happen in the first half of this year. Now, we haven't seen any pictures of it yet, right? So, I mean, that's a little bit odd not to have a prototype out if we've got a product coming in the next few months. But you can't deny that some of the political commentary, which is a little bit polarizing, depending on which side of the aisle.
Do you think that's changing the number of people buying and selling Teslas right now?
I think the consideration set is probably gone down on that. So if you think about the funnel of people that consider your product, I definitely think that probably is.
You think it's gone down? You don't think that it's been matched on the other side by people who love President Trump?
Most of those folks are truck buyers and ICE vehicle buyers. So I mean, I don't think there's a one-for-one replacement. Certainly not in Europe either.
And how much do you think you should think about the valuation of this company as a car company versus something else? Because even at this valuation, you can't really say it's a car company.
So I think as we look at our price objective, 50% of it is composed of robotaxi and FSD. So I mean, I think as you're looking at it, the vehicles are the hardware necessary to get out there, right, to deploy the software. But ultimately, this is really an FSD and robotaxi story.
And so to match that valuation that we're looking at right now, you have to believe, I think, that FSD not just comes to Tesla, but actually ultimately gets sold or licensed to Ford and Toyota and everybody else. No?
I think there's a possibility that's a component of it, but I think that there's a extreme lack of understanding in the industry as to the utility of what they deliver to consumers. And it's to get from A to B quickly, right? And if FSD really works on an autonomous basis, or even a semi-autonomous basis, and means that vehicles can't hit things, the reality is speed limits could go up. And I think there's sort of a real lack of understanding that your core function is to get people from A to B quickly. And if you can do that, faster, you actually create real value. And we've done this in the past. We did it with the Model T in the early 1900s. It's actually happened in the past. So I think there could be potential value creation that goes beyond FSD and Robo.
Can I ask you a question about that, though? Because I've heard this concept, this theory of the case, that somehow speed limits are going to move up materially as a function of full self-driving. That would require, I would think, a generational change of effectively getting vehicles that do not have full self-driving off the road. Because as long as there's a human behind the wheel, it seems to me that they can make errors that maybe the computer can't. And so the computer is effectively playing against the human, which is even harder.
So in the near term, you'd have to focus on highways and have dedicated lanes like we do HOV. So we have precedent for this happening before actually right now. The reality is, you could have sort of the auto industry taking market share from planes and trains, over time going to New York to Boston, New York to Detroit, New York to Miami. All of a sudden you could plug into your pod and go, in your car, as opposed to being sort of molested at TSA and getting through and dealing with all of the cumbersome of getting on a plane. So I think there are real opportunities in the near term.
When you say near term, most people don't think that you're going to be able to go from New York to Boston totally hands-free for maybe another 5 years.
That's not too far off right
maybe
now.
10.
In some of in FSD and some of the other programs that are out there from automakers. That's actually not that far off. Doing it at a high speed might be far off, and that's where having Elon involved with the government, potentially getting these horrible networks that we all drive on that are 100+ years old, that are blacked up yellow lines and green and yellow and red stoplights, which are bizarrely old.
Right, but everything I've ever read about the sort of super fast HOV lane situation would actually require literally building a barrier between the rest of the vehicles, because the idea is that right now if you were going to have cars driving at 75, 85, 90 miles an hour down one lane, even with a double yellow line, if there's a human being that decides that they are making an error in getting in that lane, all of a sudden you have a big problem.
But Andrew, we certainly have that with these Jersey barriers that we kind of look at right out here on the street. That's not that hard to do. I mean, putting up the barrier in the lane. That's not it. What you probably really need is a smart road network, so 5G connectivity, so the vehicle is essentially tethered to the road, right? So you have the super high speed computer and vehicle connected to a road. But also, that's not that complicated either. It's a question of do you want to win in this industry? And I think the U.S. really needs to look at this and take a step back and say, listen, China is competing the living hell out of us around the rest of the world. How do we innovate and win? And it's going to be on the tech side. And this high-speed travel is really sort of the core and what the sort of the utility of the industry needs to deliver to folks. And it is how you get GDP growth. I mean, we could get into a whole discussion here. It's how you get GDP growth out of this 2 to 4% band in this discussion we keep getting stuck in. I mean, when China was doing 7 to 8%, it was because they were getting people in cars and they were getting out of two-wheelers and bikes and moving farther and faster. So I think this is a real important thing, not just for the auto industry, but for society at large, that you get people moving farther and faster. And I think FSD is one of the keys, for society and for Tesla for unlocking that.
I think it is too, just on a much longer term basis than you may think it is.
Correct,
The idea that it's going to happen in the next 4 years, to me,
But I think we have an administration and somebody that's involved in the administration that might be focused on one of the sort of the few people that actually would advance the ball on something like this.
John, thank you. Appreciate it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, the House narrowly adopting a multi-trillion-dollar budget blueprint last night, shortly after it looked like the vote would be canceled. 217 Republicans banded together to pass the measure against all Democrats and the lone GOP holdout, who was Kentucky Representative Thomas Massie. Ukraine has agreed to a mineral rights deal with the United States that could be finalized as soon as Friday at a White House meeting between President Trump and Ukrainian President Vladimir Zelensky. That deal includes rare earths in exchange for continued military and economic support. And Lowe's out with quarterly results this morning. Those earnings coming in at $1.93 a share. That was better than the $1.84 the street was expecting. Comes on revenue of $18.55 billion versus estimates of $18.29 billion. Comp store sales were up by 0.2%, but that was much better than expectations for a 1.8% decline. You can see that stock this morning up by about 3 1/3%.
And TJ Maxx, parent TJX, with quarterly results, $1.23 a share versus expectations of $1.16. Revenue of $16.35 billion was also better than expectations. Comp store sales grew 5%. Expectations were just 3.1%. And for the full year, TJX sees earnings in the range of 87 to 89 cents a share. That's below estimates of 98 cents a share, and guidance for comps of 2 to 3%, missed estimates of 3.4. But for a lot of these companies, it seems like even though there's some tempered guidance, there's just a relief that it wasn't worse, it looks like, because the stock's up nicely. The futures this morning across the board are in the green. As you can see, 139 points on the NASDAQ. Let's get to Mike Santoli at the New York Stock Eggs Change.
Yeah.
Talked a lot about eggs today, Mike.
Where the real value is. Yeah, Joe, I mean, pretty unusual setup for the S&P 500, making an all-time high last week and then spend the next 4 days dropping 3%. That's what we have here. One of the results yesterday is S&P kind of tests the lower end of this range we've been in since, let's say, earnings season started in mid-January, right around 2,900. So you can see it kind of creates this little box in there. Still a couple percent before you'd have to say that really this little mini uptrend over the last couple of months has been sacrificed. What's been going on under the surface, though, is a lot of conviction about the cyclical strength of the economy has been waning a little bit. Economic surprise has been on the downside, and more defensive stocks have taken up some of the slack. A lot of selling in high momentum NASDAQ names as well. So here's the low volatility stocks, the more stable ones, defensive ones in the S&P 500 on a year-to-date basis, up already 6%. And this is high beta. That's the most aggressive volatile stocks, down by 0.8%, and that's just on 7 weeks into this year. So it shows you that essentially this shift toward areas that are not as exposed cyclically or to the kind of high growth parts of the market have managed to hold things together for now. So the question is whether, in fact, you've kind of absorbed this selling storm, flushed out some of the more aggressive positioning. That's the question. Take a look at the 10-year Treasury yield. Kind of interesting action. Obviously, the bond market also suggesting there might be downside risk to growth. 4.3. The range for the year has been 3.6 to 4.8, right, or thereabouts. So 4.2 is right in the middle. We're not that far from it. Over here, rates got up above 4.5% after a strong first quarter last year. It created a bit of a growth scare that created that trough. And now, I'm not saying we're in an outright growth scare, but we have this question as to whether this high bout of rates has been slowing the economy more than was expected. That's where we are right now. But these levels are pretty benign in general in terms of taking some of the pressure off things like housing stocks yesterday.
Yep. Pretty amazing, Mike. I don't see how it means anything other than we are seeing at least expectations for slower growth ahead. Is that fair? It's
That's
not
right. And it doesn't mean that people are correct to be worried about it or that it's really going to be an outright downturn. It does feel as if, though, there's been a little bit of a pause, a little bit of a stutter step in growth, and whether it's just a consumer hangover in January and February or something more. It's funny because the consumer confidence number yesterday was a downside surprise, as was University of Michigan consumer sentiment on Friday. And the market seemed to seize on that, where it doesn't always, right? And sometimes it just kind of says, well, people are in a bad mood. It doesn't necessarily change behavior. So I think that has to be reconciled at some point in the next few weeks.
Okay. All right. Thanks, Mike. Andrew.
Coming up from TikTok to Doge, a wide-ranging interview with Congressman Ro Khanna. We're going to ask him about that and last night's budget blueprint vote. And then later a preview of tonight's big earnings report coming up from NVIDIA. Squawk Box returns after this.
The House passing a multi-trillion-dollar budget blueprint last night, and while this is a big step for President Trump's agenda, there are still plenty of challenges ahead. Joining us right now to talk about the budget, DOGE, and much more is Congressman Ro Khanna, whose district is in the heart of Silicon Valley. Ro, thank you very much for being here. Why don't we talk first of all about what happened last night, this procedural vote in the House for budget approval. It was a close one, but the Republicans were able to push it over the finish line. What comes next?
Well, it was a close vote. They did a late night maneuver. All the Democrats opposed it, and the reason we opposed it is they have $2 trillion of Medicaid cuts by their own admission, and they want to have tax breaks for very, very wealthy folks. Democrats just don't believe in that. Now we'll see what they get through in the Senate and if they actually go through with this.
Yeah, I guess there were Republicans who weren't in favor. The president was able to call and kind of wrangle most of those votes, everyone save one vote. Many of them wanted to see additional cuts, that this didn't go far enough for them. So I guess I wonder what the Democrats' next move is. If this goes to the Senate, what happens next, and what will the Democrats do to kind of put their opposition forward?
Well, the Democrats will keep talking about the facts, that what this is going to mean is $2 trillion of cuts in Medicaid. What does that mean practically? It means many states will no longer be able to offer Medicaid insurance to a number of individuals. It will mean the closure of hospitals. By the way, Donald Trump won voters under 100,000, so a lot of the people who are going to be most impacted by these Medicaid cuts are his voters. And they also have cuts to food stamps, all to fund tax breaks for very, very wealthy individuals. Look, we don't have the votes to stop this. They can, through reconciliation, get this through the Senate and the House. And then it's for the American people to see whether they really want these drastic cuts.
You know, Ro, that's a populist message that we keep hearing when people come on that I don't think is entirely accurate. And I think it's kind of disingenuous because the 2017 tax and job cuts, I mean, marginal rates went to 37 from 39.6. That affects a lot of people. The standard deduction changed. The child tax credit would then drop from 2,000 to 1,000. And it says right here, approximately 91% of taxpayers would face higher taxes, with the majority being middle-income families being particularly affected, most affected. Anyone making $80,000, a family of four, would see a $1,700 increase in taxes. 91% of Americans would get a tax hike, and then you're also talking about corporate rates going back up. So just to continuously say that it's billionaires that are benefiting is totally false. It's totally disingenuous. And you're also conflating corporations with the wealthy or with billionaires because of the corporate tax cut. Why not be honest? And Democrats I think they could earn some goodwill with people if they were actually honest about what this means. I don't know about the Medicaid stuff. You know, I don't know whether Republicans have settled on that or not. But just the tax cuts themselves benefited everyone across the board. If some people pay more taxes and their marginal rate goes down and they're wealthy, it's true that the actual benefit is a bigger number, but everyone benefited and 91% of people will get a tax hike.
Joe, first of all, I didn't say it just is going to benefit billionaires, but it disproportionately last time benefited those in the top 1%, as you acknowledged.
That's who pays the taxes, Ro. But that's who pay. Of course, they're gonna save more if you lower the marginal rate because they're paying so much more.
Sure, and it disproportionately benefited the top 10%. Now we can, in my view, if you want to preserve the tax breaks for the middle class and the working class and work with the Democrats on doing that, there would be an openness to it. But at this point, where working class Americans are struggling, where 90% of the stock market is owned by 10% of Americans, I just don't think we need more breaks, tax breaks for the very wealthy, and especially if it's going to come at the expense of funding for Medicaid and for funding of food stamps. And this is the philosophical debate. I mean, do you cut Medicaid insurance, have rural hospitals shut down, have health centers, behavioral health services shut down to further these tax cuts for disproportionately benefiting the top 10%.
Do you raise corporate taxes from, or let them go back to where they were on small businesses, on the job creators of the entire country who pay the taxes for all the things that you want to do, including Medicare? That all comes from the private sector. Are you sure it makes sense to let that go back into the, where will that, what's it go to, 30% or so? Where would corporate tax go, tax rates go if you just let them expire?
Well, first of all, there's one place where we may agree, which is why do we have a corporate tax rate in Mexico and in Canada, and if you go overseas, that is 10%. Whereas if you're a company investing in the United States, you pay 21%. How about we raise the tax rate on the offshore earnings for all these companies that are offshoring our jobs and raise that to 21 or 28%? That would be one place we would get American investment. Now, I don't think the corporate rate has to go all the way up to 35, but we could figure out a compromised position. It doesn't have to stay where it is today, but I would certainly level it between the United States and going overseas.
Congressman, let me ask you about Doge, because back in December, you had kind of talked about working with Elon Musk and with Doge. You've changed your tune pretty substantially. I think at this point you think that they are breaking the law. What happened to make you change your mind on this?
Well, he didn't come to Congress, and he's approaching the firing of some of these workers without any rational plan. Look, we had 15 people, many of them Trump voters, talk about how they were fired. People were veterans who served this country in Iraq and Afghanistan. They called it the Valentine's Day Massacre. They all got an email on Valentine's Day. Many of them had been good performers. They had been top performers, and they just told that their jobs were eliminated. Some were told they were poor performers when they were actually good performers. So there's been no rational plan, and people's lives are being hurt, and many of the cuts, they're not even coming to Congress to discuss them.
So that's your problem with it, mostly that you think that cuts could and should be there, but you think Congress should be the ones deciding that?
No, my main thing is it's not being done in a way that is rational. It's just cut, not looking at people's performance, not looking at what their functions are, not having any conversation with them. And secondly, it's not going after the big ticket items, which are the subsidies to big fossil fuel companies, which is the breaks that we're giving pharma in terms of the buying of medicines. It's the Pentagon, the big 5 prime contractors. So they're not tackling that. They haven't come to Congress, and they're doing it in a way that is haphazard. That is the way private equity may do it, or the way Elon may have done it with Twitter, but that's not what you can do with the federal government. Have a one-year plan, discuss it with people, have stakeholders do it. Bill Clinton actually did that in his Reinventing Government, where the workforce fell by 351,000 people, but Congress was consulted, and there was a rational plan for it.
Hey, Congressman, wanted to also get your thoughts on the idea of a gold card for immigrants who want to immigrate to the United States and are wealthy enough or prepared to spend $5 million to do it.
Well, certainly a glimpse at President Trump's assessment of value. You know, he looks at things from investment. I guess I just say to him this. I don't think Sergey Brin, who founded Google, or Satya Nadella or Sundar Pichai had $5 million in their bank accounts when they came. In fact, I know they did. And yet they built trillion-dollar companies. Even if your goal is the maximization of American industry productivity wealth, it doesn't seem to me that just evaluating people based on how much wealth they're going to bring in initially is the right metric, as opposed to their ambition, their industry, their creativity, their productivity.
So does that mean you're against this? And do you believe that it requires Congress to pass any kind of law, or do you think this is all, you know, all these executive orders, do you think those are fine?
Well, I do think it requires Congress. On the face of it, I haven't seen any proposal, but I'm against it. I also don't understand what this Green Card Plus means. I mean, we have a system where if you invest $500,000, you can get a green card. You're in line for a green card. So what does Green Card Plus mean? Does it mean they go to the front of the line if they have more money versus someone who's been here and working hard and been here for years? I certainly wouldn't be for that. I don't think you should be able to pay money just to get to the front of the line. So we don't have any of the details. It seems like marketing, but and it requires Congress, but that's not the type of comprehensive immigration that we need.
Congressman Khanna, thank you.
Thank you.
Mike, up next, Amazon's Alexa is getting an AI makeover. Details after the break. And a programming note, don't miss John Ford's extended First on CNBC interview with Amazon CEO Andy Jassy today at 1 p.m. on the Eggs Change. We'll be right back. So many times. Amazon's Alexa, getting an upgrade. Kate Rooney joins us now with details. It happened one other time.
Yeah, turn up the volume.
Yeah, exactly, guys. Well, it's great to see you in person. We do expect Amazon to unveil a smarter, more useful Alexa built with modern AI. And despite Amazon being an early leader in machine learning and AI about a decade ago, Alexa hasn't been able to keep up in this new ChatGPT era of AI. It's still, as we were just talking about, largely used as a kitchen timer for a lot of people. I'm told that's something that has frustrated CEO Andy Jassy. Things like it can't give you live sports scores, for example. We are expecting something a lot more conversational, and we're going to be watching for what's under the hood here. Is it all Amazon technology, or did they rely on Anthropic, the startup, which they've been a major investor in? We're going to find out if it also is going to be able to run on those 500 million existing Alexa devices, or if this is only going to be for new hardware. I have been told by sources that Amazon does plan to charge for this souped up version, and subscriptions could help monetize what has historically been a money-losing business within Amazon. The bar is high here. Alexa was really a passion project under founder Jeff Bezos, and any sort of mistakes, hallucinations that tend to come with AI could undermine credibility and trust for these devices. The launch date has reportedly been delayed multiple times. The Washington Post reporting Alexa might not go live until even a month from now, despite this showcase in Lower Manhattan today. We are going to be sitting down with Panos Panay as well, the head of Amazon Devices. He was a big hire from Microsoft and has been kind of the one leading this charge, guys.
What do they have to do? What do they have to prove?
They have to prove that they can kind of strike this balance where Alexa is much smarter. You think if you've ever used voice mode for ChatGPT or any of these, it's kind of got to be able to do that. Have this back and forth conversation, be a lot smarter, but also not mess up the blocking and tackling of being able to set the kitchen timer. I think a lot of people are happy with Alexa, use it frequently, and they don't want it to kind of get in the way of the easy stuff, which has been...
That's a tough thing. I mean, for Amazon to be the one that might be disrupted by this is a new position for them to be in. They've always been the disruptor.
And a decade ago, I mean, they were really first movers here with the first Alexa, which is Jeff Bezos. I said a passion project, but he was the one driving this, and it was mind-blowing. I remember you guys had one on set a decade ago, and people couldn't believe what it was capable of. Now, I mean, same thing with Siri. It just has not kept up. Right? You talk to ChatGPT, I think people roll their eyes now at Alexa and Siri, and we'll see if they can kind of change that perception, at least today. So we'll see.
It's a lot. It's a
Thanks,
heavy
Kate.
lift. Very good to see him.
Good to see you
You
in
too, guys.
person, yeah.
Thanks.
All right, still to come this morning, Tony James, the chairman of big box retailer Costco and former Blackstone COO, will join us. We're going to talk markets, the Trump economy, and inflation. Plus, NVIDIA is reporting after the bell tonight. We've got a preview of what investors can expect. That's coming up. That stock right now up by about 3% ahead of the earnings report. And a programming note for you. Tonight, after NVIDIA's earnings release and market reaction, you can catch a CNBC special report with John Fort interviewing NVIDIA CEO Jensen Huang. That is coming at 7 p.m. tonight. John Fort is very busy today. He's got a lot going on. Stick around. We'll be right back.
Welcome back to Squawk Box. From the state of the stock market to major companies rolling back DEI policies, there's so much going on. And our next guest says concerns loom for business leaders because many fear losing access, influence, and potentially attracting retribution. I want to talk about all of these things to discuss everything that's going on in our economy, what it means to be a CEO today. Former Blackstone president and COO Tony James. Also, we should mention the chairman of retailer Costco, and we can get a pulse on what's going on with the state of the consumer as well. Good morning to you.
Morning, Andrew.
Okay, so I'm just curious, your sort of sense of confidence in today's economy relative to what we're seeing in the stock market. What's your sort of gut on what's happening here?
I think the economy's weakening. It didn't have a lot of momentum, but it was okay. But it's definitely starting to turn down. I think the consumer. There's several warning signs. Confidence was down, obviously. The base of consumers that are driving spending is narrowed to affluent. Defaults, delinquencies are rising. Meme stocks are down. There's a lot of things to say the consumer is starting to buckle a little bit. At the same time, I think the uncertainty coming out of Washington is causing businesses to slow down. What's my supply chain going to cost? I don't know. Can I export? Are there going to be reciprocal duties? I don't know. Should I build another plant? Let's wait and see.
Okay, so but just help me with this, because there feels like there's a disconnect. We've had so many business leaders come on our air, I would say over the last 2 or 3 months, and say, oh my goodness, we're going to become unshackled by regulations that are just going to disappear. We are excited about taxes, all sorts of things, right? I mean, you've heard that over and over again. So explain that with the perspective that you're offering right now.
Well, there's certainly been an ebullience about my Republican friends who are business leaders. I agree. And one of the greatest eras of American history. It's going to unleash the deals business and so on and so forth. I don't see it happening. I mean, on the ground. I actually think we are slowing. For all the reasons I mentioned, I think business leaders are very reluctant to stick their head up right now and start complaining.
Hey, Tony, just what we've heard over the last week from a lot of the retailers that have been reporting their earnings is that they're cautious about this next year that's coming up, but the results they saw in December and even in January have been stronger than they had anticipated. The consumers have been doing better. What do you see, maybe through Costco, maybe through other places, that makes you think that the consumers actually are already starting to turn down?
I don't think I see it at Costco, honestly, but I'd say they generally target a more affluent consumer. The average Costco consumer has about 2 times the national median average of wages. And those results are holding up. Are they exceeding expectations, like you said, Becky? No. But
Well,
they're holding up.
Home Depot and Lowe's in the last 2 days have both said that they've exceeded their own expectations on some of these things. And January was pretty strong for Walmart.
Yeah. January was, but Walmart also blew a caution whistle on the future.
Yeah.
I'd say Costco's hanging in there, but that's not where we see the slowdown. It's in confidence. Ironically, something like as simple as egg prices seem to have a lot of correlation with the economy and consumer attitudes, and obviously you know where those are going.
Well, we know why they're there. It's a total one-off. But do you think that we were over-regulated, the economy and business, during the Biden administration? You think only Republican business people are optimistic about a more friendly regulatory environment for business? You don't think there's anything to that?
No, I totally agree with you. I think all business executives felt we were over-regulated, honestly. And I think there's both Republicans and Democrats, there's a lot of good things that they like about the directions President Trump is going.
Okay.
However, there's also a lot of uncertainty,
tariffs,
and a lot of variability. Yeah. And it's very hard if you're a business to plan right now. We own a fertilizer company that sells a lot into Canada. We were going to build a new plant. Now we're holding off. We don't. If there's duties on Canada and the reciprocal duties coming back, we don't know what that does to us. Similarly, a lot of our companies, the supply chains are completely up in the air. What's the cost of goods and how?
That's all tariff related. Is where a lot of the
tariff related. Some of that. We have plenty of healthcare companies that are looking at much lower regulatory approvals with DOGE and everything. So if you're a biotech company and you had 1 year's worth of runway in your cash, now maybe you have to slow things down, stretch it out so you have 2 years.
They already are assuming that cuts at the FDA are going to make.
We have to.
What, advisory panels?
They have to assume that, because running out of money is death.
the cuts, have there been cuts already at the FDA that would cause clinical trials to be delayed?
I don't know actually, but that's not really the concern. No one's going to count the cuts. It's the chaos down there. It's the reduced.
You see any positives to trying to rein in government waste abuse?
100%.
You do.
Every one of the last 5 presidents, both parties have said government's too big, I'll cut it back, and they failed. And I think this is a lot like Elon's approach to, say, Tesla. Cut, maybe overcut, cut radically, and then if you've cut too much, you can add it back. And that's the only way you make significant costs.
And so do you think he's right about that? And I ask because the other thing is he said, and I don't know whether voters listen to this or not, he explicitly said before the election that there was going to be pain. There was going to be, now he suggested it was a temporary pain because he thinks that on the other side it's going to be better. But the question is whether, we are going to quote unquote suffer for 6 months or a year and that there's, a rainbow on the other side.
Well, there's a lot of stuff thrown in here together, so let's just separate it out a little bit. There's certainly, the business community is certainly, I think, 100% for less regulation. It's less government waste. Tariffs can have a very good effect if they're used as a bargaining chip to get other deals, and if they're used to lower barriers from other countries. If it triggers a trade war, that's a different thing. So the tariffs is a little hard to know which way it goes. Is it beneficial? Is it not? However, all those things, if you're a business executive right now, you don't know the path of the future. So that causes you to hold back on things temporarily. So I threw the business in there. I think the consumer is suffering, confidence is coming down, but business is not providing a counterbalance by surging forward. They're watching, keeping their heads down right now.
How much of an impact does the rate have on all of this? Because with yields down pretty substantially over the last week or two, maybe the market is helping out just in terms of confidence. I would think it would help both consumer and business confidence if those rates do come down.
Well, rates are down a little bit, but at the same time, the Fed's saying we're going to pause further cuts.
Right.
So I think psychologically that's probably a net negative.
Okay.
And then when you look at mortgage rates or things that affect building, they're not really down.
Yeah.
And then you look at treasuries, they went up, they're off a little bit. I think there's a lot of reasons to think longer term rates are headed higher.
Can you speak to what's happening in the world of financials, maybe even private equity, your former firm? There was the sense there was going to be all sorts of deal making. I think what you're suggesting is right now there's not, because nobody knows what's about to happen. Do you foresee that to be a long-term, over the next 3 or 4 years thing? Or do you say this tariff thing is going to get resolved in 3 or 4 months, the tax thing will hopefully get resolved at the end of the year, and then you're off to the races? Or maybe you're not, I don't know.
I think, well, all the industry participants are saying it's going to be a big year for deals and their pipelines are growing. And I believe them. I'm not sure that choppy stock market or a softening economy is so bad for that, honestly. And there's plenty of, there is capital available, and the rates are affordable from a private equity standpoint. So I think you could well have a deal boom. There's a big backlog of companies that need to be sold in all their portfolios. You know that they're not going public, they need to be sold. And there's a huge boom in what's called continuation vehicles.
By the way, should we worry about continuation vehicles? I mean, that's just a euphemism for, if I dare I say, for businesses is like a hot potato that they can't really be sold to another strategic or somebody else, and so they're basically kept inside this sort of system so that the valuation, I would argue, can never fully be exposed. But you may have a different view of what these continuation vehicles are about.
I think the risk is almost on the other side of that one.
Okay.
The implication of what you were saying was that these sponsors are trying to sell their dogs a little bit. I actually think they're incentivized to hang on to their best companies. And they're also incentivized, the way the economics works, to do that at a pretty good price for the new money coming in. Maybe it's not the optimal exit for the old money that needs out. So if they're...
But sometimes it's the same people.
Sometimes.
Meaning coming in and out, right?
Sometimes your existing LPs can exit, but it's generally new money, and some of them can roll, but you need a new pricer to come in and put new money into the deal to set the quote market price.
How about carried interest? You You gonna be okay without that?
I mean, not paying higher taxes?
I mean, do you think it's okay? Is that, I don't, we've had certain PE guys that will unabashedly defend David and others. I don't know where you come down on that. Have you felt bad the entire time when you were?
No, I haven't felt bad. And it's not just self-serving. Carried interest is actually a piece of a carried gain, a capital gain. And
I'm going to turn it over to my colleague.
And I don't know how it's philosophically different than Bill Gates getting free stock when he starts Microsoft.
Interesting. Okay.
So I don't know if we want to go down that rabbit hole.
No, I want you to with Andrew.
I'll go very.
We could do a whole segment.
I know.
On that another time.
I'll go very quickly with you, which is if you want to be a founder of a company, God bless, and if you want to get those shares at the absolute very beginning, so we can have that discussion. Otherwise, if you're basically using other people's capital to invest and pretending it's your own, you should not be getting a different tax treatment than anybody else.
Is that a question?
I'm just making. I'm suggesting that's the argument. And when I'm saying,
well, okay,
there's some venture capitalists who
so
would
Becky,
say that they got into.
So Becky wants to start a restaurant.
Correct.
And she comes to you and says, "I don't have enough money. Will you give me the money? Will you put some money into this restaurant?"
Correct.
And you put in $1 million, and I'll give you 80%. So her 20%.
Yep.
You're okay with that because
Yep.
because what? Because she's working in the restaurant.
Yep.
Now you go and you say to your buddy, I think Becky's a brilliant chef. This is going to be a great restaurant,
right.
But I don't have $1 million. If you give me half of that,
right.
I'll take 60% of the equity. You take 40%. Now you've charged him a carried interest.
Correct. But I'm going to tell you two things. There's a fallacy to what you just said.
Okay.
Okay. Most private equity deals are not at the founder.
That's
not
more
at
VC,
the
more
founder.
venture capital.
This is later on. So if you want to be Series A, Round A, we can have that conversation. Everything else, let's not even discuss because it is absolutely a lie. I'm sorry to say it that way because because people in the private equity industry oftentimes use this founding thing, and I say,
it sounds like venture capital.
I say, when's the last time that you invested in a founding of anything? Usually not. So I just don't understand that argument.
Yeah, I hear what you're saying, but I think that it's not black and white like that. A lot of times, private equity fundamentally transforms a company.
Right.
It's not just.
Do you think you're a special? Do you think that your labor is somehow special compared to everybody else's labor in the entire country? Because it's the only industry that has this tax break. Well, the only industry.
If private equity doesn't take that share of the game, where does it go?
What do you mean?
If private equity doesn't take 20% of the gains on a realization, where is that?
That's a fee, and you can.
No.
You should
But
pay out
if
taxes.
private equity doesn't charge that, where does it go?
Hopefully back into the business.
No, it goes to the other investors, correct? The investors in the fund.
Sure. Okay.
Okay. And if they're tax exempt, does it raise any taxes?
No. By the way, and that's the other thing.
So
Most of them are
actually,
tax exempt.
so I would argue that it raises more taxes.
You would argue it raises more taxes. Okay.
Right, because the Steve Schwarzmans of the world, they
You
pay.
don't think you could still charge 20% and pay taxes on them? A tax on that money? I don't understand that. You technically could still charge a 20%.
You put your hand up and pay more taxes, sure.
No. I'm saying you could get the 20% still, and then pay that as a fee, as opposed to pretending it's not a fee.
So I think we ought to move on, but do you think
This reminds me
is
of
this
David.
a moral thing, or
This reminds me of David Rubenstein.
Is this a moral thing, or is this a revenue thing?
You're such a great.
No. Moral only. Moral only. It has nothing to do with raising revenue. I completely agree that it's a de minimis amount.
It's just,
but given that
you got to admit it's interesting. Like David's uber liberal. You're uber liberal. You guys can still somehow come to and be super Republicans when it comes to you twist yourself into a pretzel to get to this point. I love it. I love that you. I mean, Rubenstein doesn't say it. Aren't you amazed at how?
No one's ever called me uber liberal before.
Right.
Okay. Well, there you go.
I'm a centrist Democrat, but I don't know that
Okay,
that qualifies
that's
as
an
uber
oxymoron.
liberal.
That's an
Tony, I
oxymoron.
have a separate question on a completely other topic, which is DEI. Obviously, it's swept the country one way and is now sweeping the country another way, in large part because of President Trump. Costco obviously is ending its DEI programs in large part.
No,
Well, I mean, you're keeping some, but not completely.
we haven't changed our DEI.
At all?
No.
Oh, then I'm mistaken. So,
There were headlines to that effect. I saw them.
No, there were headlines saying singling Costco out as the company that's not.
Not Costco. I thought I was thinking you said Blackstone. Even or
Black Rock certainly retreated. Yeah.
Yes.
Costco has gotten a lot of visibility, more than we ever wanted or needed, because it's standing behind its current policies and procedures, and none of them are illegal. We've had every legal lawyer look at it, and none of them are new. None of them are post George Floyd. These things go back literally to the company's founding. We took an executive vice president from operations and made him our first diversity officer over 20 years ago. We think of this as not so much for the social good, although I think it is. We think of this as part of a meritocracy. If we attract a broader talent pool, we have 300,000 employees, we attract a broader talent pool, and we work with them all individually, given their different backgrounds, to be the best professionals they can be, we have a better employee base to choose from. And I think it enhances our ability to be a meritocracy. Costco is the highest torqued retailer in the world. We do the biggest volume per building, the biggest volume per square foot on the smallest margins. We have to execute flawlessly every single day. We can't have anything that's not based on merit.
But how scared are you that the fact that you then have this program and you're willing to come talk about it on TV, that your company's not going to be targeted by this administration in some way? Isn't that why every other company in America has tried to get rid of this? Not just the administration, by the way, but also the idea of boycotts and other things that people like Robbie Starbuck and others are trying to build.
Look, obviously it's unwanted attention, because we're not a political company. We just want to run a good business. This is core to the business, core to the way we always run the business. So it's unwanted attention, and it brings unnecessary risk, absolutely. But at the same time, it's core to our values, and we're not doing anything with quotas. We're not doing anything with preferences or anything like that. We have nothing that could be remotely deemed illegal under the new interpretation, either Supreme Court or administration.
So this almost reminds me that a well-run company has had ESG in their blood long before someone even put letters. To run a company effectively for consumers, shareholders, citizens, people that you live near, you have to mind all your P's and Q's for ESG in the first place. You don't need to be told. If you're really good at running a business, all those things follow, right?
That's true. That's true.
But you want to say you're doing it.
It became popular to say you're doing it.
I know.
And to
Yeah.
point to all the things you're doing.
Right. Right.
For all companies. Virtue signaling was a
Exactly.
thing, right? I got
What'd you and Steve talk about? Sports? I mean, I don't. I want to be a fly on the wall. Or you covered the whole gamut. There's no one left out between you and Schwartzman. It's like, right? It's the entire world.
You mean politically, Steve and I?
Yeah.
We agreed on almost everything when it came to business.
Okay.
But that's what made us great partners. We came at it differently. We've got different personalities. He's been on here plenty.
Yeah.
But at the end of the day, we always agreed on the right course for Blackstone.
And carried interest. Got it.
Tony, I want to thank you for coming in. I want to thank you for engaging in this crazy conversation and debate, which is a perennial conversation. You can have it any morning, anytime we come back and have that discussion, we can do it.
Sign him up now.
Next time, let's come in. We'll actually marshal this, and we'll focus on this, and we'll really nail it.
Okay.
Because I actually think I can convince you that it's got some merit.
Okay, I love that.
All right.
Let's bring
Rubenstein in here too.
We got a deal.
It's you against them.
We're coming back on Squawk after this.
Thanks, guys.
Jim.
Preview of tonight's big earnings report from NVIDIA. We're going to hear from an analyst and find out what you should be watching for when that big mega cap chip maker reports. We'll be right back.
Insurance.
Let's get a quick preview of NVIDIA results. Joining us now, Ray Wong, Constellation Research founder and chairman. And any company, Ray, it's good to see you. Any other company that could put up metrics like this, it's mind-boggling. Both in the sheer size and in the year-over-year growth. Can you just give us what you are expecting? What would be a surprise on better than expected, and what would be disappointing tonight? What do you expect? And go revenues and everything, earnings per share, all that.
You got it. The bottom line is if they can beat $38 billion in sales for the quarter, it's going to be a great quarter. It would be up to 72% year over year. And if they're doubling sales, and that's what people are looking for. But the most important metric is really trying to figure out is demand outstripping supply. The Blackwell 100, H100 growth seems to be still there. We've done checks and it looks like that. And the other piece is really the AI infrastructure demand. Really, it's 6 companies that's really buying it from NVIDIA. That data center demand from the hyperscalers is driving a lot of this growth. You've got Microsoft saying we've got 80 billion committed. Everybody's got about 80 to 100 billion dollar committed. Meta just planned 200 billion in new data center projects, and typically about half or more goes to NVIDIA, and that's what people are looking at. And so that's really what people are trying to figure out is, are they going to beat those numbers? And if they don't, the entire tech sector takes a hit. And that's why everyone's on their knees, on their edge of their seats, trying to figure out what's going to happen.
I mean, 38 billion is a big number, but the year-over-year growth is even more amazing. That's got to start moderating. No, what will the outlook matter? What will they tell us?
Well, that's the question. Is sovereign AI going to pick up and other countries are going to double down because they're behind and they're not able to deliver AI to their citizens? Or will people start pulling back because of tariffs? Or will tariffs actually help them? And I think people are waiting to see, are these headwinds there? There's a little issue around DeepSeek where customers were trying to figure out, hey, is general artificial intelligence going to go away? Are people worried about that? But the bottom line is they're still going to be investing. And so the top players are still going to be investing in NVIDIA's GPUs. And that's going to go for the next 2 to 3 years until we shift from training to inference. And that's really the big shift. In about 2 years, we're going to see a lot more chips being used for inference as opposed to training. And that's going to actually change the mix because you don't need to use NVIDIA GPUs as much for inference.
Okay. Really? I mean, we got a minute left, Greco. What's you got something? All right, Ray. Thank you. I was going to ask you if there's anything we could see about whether DeepSeek was making inroads, or whether there was any, anything in the, any small. But I'm told that I don't know. The world's going to end or something.
DeepSeek was the Napster moment.
Yeah,
DeepSeek was the Napster moment. They took our technology and gave it away for free, but that was only for a small set of language models.
Great.
So that wasn't going to make that much of an impact. But take care.
All right, thanks. You too. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. S&P's trying to reverse that first four-day loss of the year, and futures do suggest some optimism about NVIDIA and Salesforce earnings tonight. House budget resolution narrowly passes. Got a cabinet meeting today. 10-year near 4.25. Our roadmap begins with Tech Watch, though. NVIDIA shares with some traction ahead of the earnings later this evening, and Tesla seeking a rebound after its market cap tumbled below $1 trillion.
Plus, Meta's latest AI play, reportedly talking about a $200 billion AI data center project.
Sorry, I'm just telling you.
Forget what I just said.
No, Ben Rice just came out and said, listen, it's being denied.
And we're still going to talk about it. Denied? Really? Denied?
Well, look, I mean...
Autos in focus as well. GM raises its quarterly dividend. Stellantis, is sinking. Loss. Lucid, by the way, CEO's out.
I know, I should continue with it.
Let's begin.
Yeah, we're on.
Let's begin with the markets. Tech is trying to rebound amid this recent weakness in shares of NVIDIA and Tesla today. Jim Wells calls it the mocopolypse, the momentum reversal, which they think is kind of coming to an end.
I think that's a great call, actually, and there's a terrific piece out about Tesla today, and about, again, this is about the idea that it's all peaked. Tesla related, point blank, to Bitcoin.
Oh, yes.
And I thought that
Barclays note?
Was that terrific? And it talks about the OG and stunk. David, OG, you know what that is?
Yes, I do.
What?
The original gangster.
He knows more than we do, young kids. But anyway, yes, the piece was so brilliant because it has to do with the zeitgeist. Ever since the election, and thank you, Jason Gortz, for putting this out, that everything's down since the election other than the Dow. But there was a trade that went on. I had a Latena from Robinhood. There was a trade, and they were all together, and that is reversing. I think they start coming down, but today's a rear guard day. They're going to make a comeback today, and a large part that's because we had some good earnings for some things.
Yep.
But I just think it's amazing to be stuck here thinking, you mean to tell me that the algos told you that if Tesla went down and Bitcoin went down, you should sell AppLovin? And you should sell, I don't know, we can say any of the ones that you want to talk about, but Palantir's front and center. I just didn't want you to make fun of me.
Well, there's no doubt I will. That's why I couldn't you sort of a highlight of my day.
I cut you the quick on the information
Yeah, you did, man. Well, you and the information, you just don't like those guys.
No,
whatever they report,
I like
you basically
everyone.
like, it's not true.
No, because last night the story comes out that Meta's going to spend $200 billion
on a new facility, by
and
the way,
I
not the one they're already working on in Louisiana.
Yeah, so I think I think immediately that NVIDIA's going to be up 5, but it's only up 3, and that's just about the workday trade. There were some good quarters last night.
By the way, the story in the information says they're in talks to build a new data center. They're discussing it, but you're right. It made the rounds yesterday in part because it is the kind of thing that the investor base right now, which is enormous, not just NVIDIA, but overall, those are all in AI-related things, want to see.
Right.
It's reaffirming this idea that, of course, is a deep concern right now is the money still going to be spent
Right,
at
so
the same
Vertiv's a
level that
big-
everybody thought it would when we were all buying these stocks 3 weeks ago?
No, I know
Or
everyone.
a month ago.
And then last night, we had this yesterday. There was this piece from, but there was a Sempra got in trouble yesterday. It was down 20%. And I read between the lines. I think that it's because California is trying to make a decision: fires, climate, ratepayer, and I think sotto voce. Are we really going to favor the data centers and the companies that are behind them over the ratepayers?
No. Your point being that electricity prices may go up as a result of this, and is that going to be something that is certainly politically going to be?
Well, I mean, are we going to really give? Are we going to let the shareholders have the advantage over the people who pay the electric bills? This is California.
Although many of
not
these
Texas.
data centers, as we know, are being built with specific power supplies only for the data centers.
I was surprised.
They're not even
right.
using the transmission grid.
No, you're
and
absolutely right.
They don't really
They're-
involve the ratepayers.
I think the Utility Holding Commission is speaking about all the just tremendous demand and the need to be able to build up. And what Sempra's doing is building up Encore. They're building up Texas, and I think you could say they're sliding California. I don't think any of this. Jeff Martin is a terrific guy, the CEO, but the stock's down 20%. This is utility. The reason I really mention is that there's no place to really. There's not a lot of good yielders right now, and Sempra had been a good yielder. Suddenly, the stock's down 20%.
Well,
Gotta be careful.
the only ETFs up for the year are healthcare, staples, and real estate.
Isn't it incredible? J&J, which had just been bedraggled down to the 140s, it's just been a horse. Coca-Cola has been amazing. Amazing.
Coca-Cola.
Coca-Cola.
Yeah. How about we'll talk some Bud today. Look at Bud's year-to-date
Organic
gains.
growth was good. I was surprised. Now, of course, they missed the number, but I'm going to talk about a place that Dave and I like to frequent.
Kava.
TJX.
Yeah, TJX.
You see this belt? I want to show you something.
Show me.
This belt is $14.
It's beautiful.
$14.
Beautiful belt.
I had a Falconable belt for $200. It broke. I didn't want to come here without a belt, sans belt. So I went next door. I got one for $14. People said, "Oh, that's nice."
I know. It's great value.
That's why that stock is up big, and that's why the comp stores were up 5. But I was looking for +3.
Yep. That's the number, right? 16.4 billion, 13-week fourth quarter was the 16.4 billion was the revenue number. That was flat, but again, just as Jim just said, comp store sales up 5%.
Home goods really good.
And overall for the year, just we always, we like to talk about TJX in part because it's so much larger than Target, for
Thank you
example,
for realizing
which we
that.
spend so much
The
time
whole
on.
time.
56 billion in annual sales, Carl, and 4% comp store sales increase. That's the annual numbers.
That's amazing.
For TJX.
Now they always lowball the forecast.
I was going to say the comp guide is
Yes.
light.
Yeah.
Yesterday, I was surprised by Contour's language saying the consumer is quote under attack.
I got blown up there. I had them on to introduce the HH purchase, and it seemed really great, and I got blown up because they had pre-announced the numbers, but they didn't talk the forecast. So I apologize to anyone who watched the report because I didn't know that the forecast was bad. And the forecast, as I always tell David, is the
forecast. The forecast is the forecast. This is what company you're talking about now?
Contour Brands,
Contour
KTB,
Brands.
Wrangler.
Oh, Wrangler.
Remember when
Thank
you were like in 7th grade?
Yeah, I
you
never wore
probably
Wranglers.
never wore Wranglers.
No, I never wore Wranglers ever.
What
Not
did you wear?
once.
Brionians?
No.
You've traded down.
Brioni. Oh yeah.
You
Going to
traded
school in
down.
Queens, they're Brioni. I wore, I don't know, whatever was bought at Alexander's.
Oh my, the one across the one at 59th?
Yeah, yes, but there was also one in Queens. Yeah.
Who knew?
Yeah.
So how about NVIDIA tonight?
Okay, look, NVIDIA's really hard. There's a good scorecard out today. One of the firms, but I think NVIDIA has to do beat and raise, traditional beat and raise, and I think the problem is that their major product, Blackwell, is still hard to get. Although Supermicro, by the way, congratulations on not being delisted, has been putting a lot in. Remember, the problem is, and Dell too, HP not as many. The problem is the actual, you have to build them, take them apart, and then build them again. That's a very complicated process. And also we have the DeepSeek, although I think that Jensen will say, the CEO, will say that DeepSeek's actually good for them. I have been telling people this is not the quarter that is really important because they can't ship in volume. But I don't, the confidence level that I have in this quarter is not as high, only because we thought that Blackwell, the major version, would be out right now. And I remember, for instance, you have to go back to when Intel might be late with a 386 or a 46, and there would be a gap, and then you had to buy the gap. So what I'm saying is that if it really gets hit, and they indicate that the rest of the year is going to be fine, I think you take advantage of it. But it's got so much. I mean, this morning, Frank, they had a guy on the number of. It was actually. It was Pisani. Robert talked about all the different instruments that are betting on it. And then I talked with Vlad Tenev at Robinhood, the number of zero-day, not the movie, the number of zero-day options that are bet on this thing have made it so it's actually in control of the actual underlying.
I think the straddle's almost 10%, isn't it?
Yeah, 8%. And what's amazing is that it actually makes sense. I mean, when I was with Vlad, with Robinhood, you don't want the time degradation, so you can actually put that bet on this morning. And if it doesn't work,
doesn't work. It also can be used as a hedge if you're against your existing position.
There are many professionals who are using zero-day through Robinhood because they've got the most.
It's very active.
They've got the deepest market.
Nvidia shares are up though. I do want to come back to Meta. You did not. You know we had something at the very top talking about this information story. Where they cite some sources saying that they could spend as much as $200 billion on additional data centers.
Right.
This is beyond that giant data center they're building in Louisiana. Remember that I've showed you a map of previously because they shared a map and they superimpose it over the island of Manhattan, and it takes up a lot of the island just to put the size in perspective. This would be an addition. But to Jim's point, a Meta spokesperson. And there's, I love that.
Oh, God, that's the
They
one.
cut out from Madison Square Garden, I don't know why, but they took over Central Park, which upset me. I misspoke last week, by the way, in my interview with Safra Katz. I've forgotten. It wasn't the Abilene, Texas Stargate facility. This is Meta's facility in Louisiana that is currently under being built. But this would be an entirely new project that the information is referring to, and obviously would be seen as a reaffirmation yet again of their belief that that the models that are out there and everything that's going to be coming is going to need just an enormous amount of more capacity. Meta said the following: a spokesperson denied the report. This is per Reuters. So again, not our reporting.
Right.
Saying its data center plans and capital expenditures have already been disclosed, and anything on that's pure speculation. So I don't even know if I would not say that's a denial, Jim. Typically, in my experience, that's somebody saying that's pure spec. They're not ready to talk about it, but it doesn't necessarily mean that it's wrong.
No, well, I would regard their statement as denying the claim of the information. But I'm not going to disagree with you. It's just that I was saying that the reaction to the information story was very muted because people didn't believe it. And now we come out and they have the claim. I have no doubt in my mind, and Carl, this is what I speak to about that. I'm trying to say this is not the fulcrum quarter, is that I think that everyone has to add more of these. Because you have to keep adding remember, it's a software platform. People don't understand it's a software platform that Meta's offering, that Meta needs, that NVIDIA has. And you can buy more and put them in. But I hope that Jensen starts talking about video. I think the major problem is that he's not communicating the video story. So I'll watch John Ford tonight to see if he does.
No, there was a big data center conference in Fort Lauderdale earlier in the week.
Yeah.
No diminution, at least from their perspective, in terms of the orders at this point.
Well, don't you think it was really Microsoft?
Again, this is off the Microsoft stuff
was the one that
earlier
showed
in the week.
Microsoft is really the outlier. I felt that one of the stories I thought was that if, let's say, they do have a real dispute with ChatGPT, they don't want to be building for ChatGPT. But you did correctly say to me that is still a bona fide union between the two.
Yeah, they still have a partnership with Microsoft, but obviously they are now being, equaled if not superseded by SoftBank potentially.
Absolutely. But anyway, let's just leave it like this. I don't want people to say, you know what, we should just trade NVIDIA. I don't think that's the right thing to do because they still are the king of the most important trend out there. But people doubt the trend, and partly because Microsoft was the change, not the other people. Microsoft.
We'll watch margins too. There is a story today about Dell.
7071. Must do 7071.
Yeah, this Dell piece about the XAI server deal with margins in the mid-single digits.
No. Well,
there are very tight margins on a lot of those big Dell deals. Yeah,
well, I think that Michael was the number one. He was the one that was at the GTC conference in the first row. That's the conference last year, and Michael, I think, has great confidence that things are booming. HPE, we're not sure, and then SMCI. David, I leave it to you.
I'm not getting it.
Oh, come on.
My mic.
Come on.
No.
We're going to get to SMCI. Regardless who covers it, it is up 20% plus pre-market. We'll get to some other movers. GM on this buyback and div hike. We'll get to Jack in the Box 3M, Jim Talk to Hood, Intuit, Workday Kava in a minute.
You got this.
GM's up sharply in the pre-market. Automaker hiking its dividend by 25% to 15 cents a share, authorizing a new $6 billion share buyback. Stock currently down more than 20% from the 52-week high. Jim, we got news on Lucid, Stellantis, but the S&P autos are down, what, 35 from December?
Know. And GM has been executing rather well. I thought this was a very gutsy move. Phil had a great story this morning about how important this buyback is. The dividend boost is, obviously dividend is nowhere near as big as Ford, but Ford can't get out of its own way. This is a challenge group. People just decided, look, the tariffs are going to kill them. Period. End of story. Because you can't move the engines back and forth and back and forth. But I don't know. We haven't heard more about the Mexican tariff. The Canadian tariff. Very, very important. The only ones that I feel is definitely etched in stone is the steel from China. That's Peter Navarro's issue. David, I don't think that you can own the auto stocks until you know more about the tariffs.
What'd you get out of Navarro yesterday during that interview? I mean, what was the larger takeaway in terms of?
See, it's really interesting. Really interesting to say that because the larger takeaway was missed. It was meant to be a sop to the Mag 7. It was meant to be, listen, we're going to protect you from the honeypot that so many people, we wake up all the time and we see, $1 billion fine by so-and-so.
Oh, right, it was all about the digital taxes, digital services taxes in Europe.
Right, so Peter thought that it would be welcomed by the tech companies because they're the ones they've been complaining about it endlessly.
Protect them, right?
But it did not resonate like that, and I think that one part is because there's like, oh, how about the copper tariff? I mean, there's so many tariffs. You know, I mean, they are.
Copper's getting some noise today. Yeah. FCX is up 5% pre-market. You had Daniel Ek over at Spotify tell the EU to hit Apple on the digital taxes front.
Jeez, I don't know. I just tell you that there's so much that I was lost too. I mean, I talked to Peter a lot, and I thought that this was a great idea, and it didn't have any relevance or resonance because I think we're also confused about the tariffs. How about the taxes? Should we take up the taxes?
Taxes.
You know what that is?
No, I don't.
Marx Brothers.
Oh.
Take the taxes.
Fredonia? What are we
It's
talking
Fredonia.
about?
Yeah. I feel like it's become Fredonia. It's like Fredonia here. I'm not kidding.
With like Harpo in the sidecar?
Yes, it's like Fredonia. I watched a bizarre video about Gaza.
I've seen that as well. I've seen that as well.
With Musk eating hummus and Trump and Netanyahu drinking by the pool.
No, by the way, I don't know if you noticed, they're also bearded men in hulu skirts.
But is that an AI generated?
Is that yes,
honest?
that was an AI generated.
Is it from the White House?
It's an AI generated video that was put out by the president on Truth Social, I believe.
You sure it's not hallucination?
Well, no, and it was odd. I think it's fair to say it was somewhat odd.
I like your term.
Thank you.
No problem.
Look at Kramer's Mad Dash and countdown to the opening bell. Futures still looking to stay constructive here at the open after a few days of declines. More Squawk of the Streets back in a minute.
Good morning. Oh, I left Tesla up. Bad boy. Bad boy. I've been a bad boy again. Jimmy shouldn't drop that in there either. It's 2 mistakes. No more. I'm allowed 1 more. Good morning, retail traders. Oh, mistake number 3. I got them all out of the way. God. Yeah, James. Good morning, retail traders. Hope you had a blessed day. Let's look at the stocks. Let's look at the stocks for us today. We got Tesla moving up a little bit, and the SPY's there. I'm going to trade the SPX today. See if you care. Retail traders, have a good day.
NBC.
Let's get to a mad dash with Jim. We got 7 minutes before we get started with trading here. Lowe's reports 4th quarter sales and earnings. What do you think?
Marvin Ellison, go back and forth with him. This was an excellent quarter, particularly considering rates, although the rates have come down a little bit, and the lack of housing turnover, which has typically been the key metric. Because when there's housing turnover, you go to Lowe's and you tend to rehabilitate, you make it so you renovate. I was struck by the fact that the numbers of pro are improving, because Lowe's is often thought of as do-it-yourself. We had good pro numbers from Home Depot, good pro numbers from Lowe's. Something could be on here, David. It is not as bad as feared. These two companies are excellent.
These two being this
Lowe's and Home Depot. They're
Depot,
just great.
because that was
That
was my question. We heard from Home Depot yesterday.
And their numbers were good in this environment. Now, you gotta look, I mean, if you looked at Home Depot or this, I mean, look, there were a lot of short money betting against these. I think that when you have a stock that goes down like this, you should rethink. But I like that. That's Dan Ives imitations.
Yep, there's a lot of people bad-mouthing Lowe's yesterday.
I love Dan Ives.
Super Bowl of this, and
I love Dan Ives.
We're going to see if Tesla holds support today at 101.58.
All right, but let's get back to Lowe's here. All right,
No, I
but
mean-
you liked it. You've always liked
I've
it.
always liked, ever since Marv came in.
Right.
And the Home Depot team, Ted Decker. Look, these teams. Remember, these guys take a lot of share too from the there's still mom and pop hardware stores that they take.
Of course.
And remember, you're betting against now their Christmas season, which is going to be the garden season. Appliances still bad everywhere.
Conference call just started, I think, at 9 a.m.
Yeah,
So we'll
I
check
think
in on that.
You should have put on a different pair of
He always
socks,
has great
yes.
conference calls, so I would not worry about it.
You wouldn't worry. All right,
Let's do that.
All right, a lot more movers to get to this morning. And of course, you can always catch us anytime and anywhere by listening to and following the Squawk on the Street Open Bell podcast. We're right back.
Oh. Ladies out there, wouldn't you like to have a man that changes his socks twice a day? Tell me yes, because I'm doing it for you. Any of you guys, do you change your socks twice a day? Do you even take a shower in the morning? Do you change your sheets once a week? Do you wash dishes every night? Do you wipe your ass when you take a shit? Well, Jim's singing early in the morning. Gonna be a good day. Oh. An old friend stopped in and said hi to me. Ladies and gentlemen, we have 2 minutes left, less than 2 minutes. And today's commercial break will be York. It is the peppermint. These are really, really good. This is, what is this? Yeah, this is the peppermint patty. If you ever have them, they're great tasting. They're in what you call a circle. They're a complete circle. And you could take at least 2 bites out of these. You could eat one at a time. But I prefer to make it look like a moon. See?
It's nice to not have to play as much defense. I mean, frankly, in the last administration, we're playing a lot of defense. There was an all-out assault.
Playing a lot of
not just
defense.
crypto, but individual retail trading in general with.
He looks like Robin Hood.
Predictive data analytics, which is basically an assault on AI.
You know what? Screw your face. Don't you ever talk bad about Trump. Because we don't have to listen to it. You're fired. Trump doing an audit. Musk, you must do an audit on Hood. He's getting a little cocky. His stock's up. And he should be pleased that you're in crypto and that you made it bounce. So we got less. Oh, here we go. I was just going to say we have less than a minute, but we don't. So let's look at the SPX. It opened up just a little bit. Resistance to break will be 5985.25. And support, we got a bear flag, or it could be a rising wedge, but not very. Yeah, we got 1, 2, 3 down here already. So if we come back to number 4, I think that'll be a great bounce. Today's going to kind of tell you if the market wants to take off or not. And we got a head and shoulders. We got a two-headed snake here. So that's how I'm going to do that. Ladies and gentlemen, and that was the SPX. So let's look at the SPY. SPY's pulled back some. I'll just erase this for right now and keep what I got going here. Remove drawing. So we got support at 592. The 9 EMA, it's confirmed that that's an inverse head and shoulders. So I think we will bounce. If we dip another $3, say hello to mama. Come to Papa. Come see your Papa. I'm going to go ahead and put me a... Now this is on the 1 hour time frame, the 9. So I'm going to put that right there, and I'm going to make that a red line, right at 192. A little bit before. Here, actually, I'm going to put it right above my support level of 592.70. The alert. 592.70, Randy. Rob, what do you got? Are we bullish or bearish on your option thing, jigger? Are you listening? $594.91 needs to hold, or I think 591. How about 592? Yoko. Good job, Carlax. 591.16. Whoa. Don't argue with him. Not 592.70. I will be moving this. Oh, I forgot to put my price line in here. 592.04. We've had, well, the market's been open 5 minutes already. I might just jump in them right now. We're going to know any second here. This is a descending flag, but it could pop. So February the 27th, the $600 strike. It looks like a wait and see right now. If we start seeing the volume pick up on the tape, there goes some buys. There goes some buys. Let's look at the watch list here. Starting to get some higher lows. Okay, we're about ready to break resistance. Not yet. Now we are. Well, that would have been $10 right there. The 600 strikes at 162 now, so that'd been about 13. I was looking at it at 149. So we're above the flag, but it really, we won't know until this candle's done. Now we got a spinning top. Nancy, may I make that coffee like you did yesterday? Slip a volume in it for me. There you go, baby. SPX is moving. I'm telling you, this could be the day. We got NVIDIA earnings coming out tonight. We just broke the VWAP on the SPY. NVIDIA had a little pop right here. Now that, uh-oh. Damn, things are at 179 now. Fudge. 184. $6,000 strike. See these higher lows right here? That was pretty good indication we were going to have a breakout. 6,000 strikes. Somebody about 5,000. We got 50. Well, the 60-30s and the 60-25s have some pretty good volume on them. And the 6,000s. We're coming up to a double top, so this will be the determination right here. If we get a put, we got a megaphone, half-assed megaphone. So we got a double top on the SPX. We'll see how brave this market is. We've had a pretty good pullback. So far, things look bullish. If we can stay above the VWAP, the QQQ's pulling back. There's your knives. Okay, we're at support. We're at support on the SPY. Right here. I'm going to make a business decision at 156. This is the $600 strike. 156. There it is. 152. Yeah, this is it. I'm pretty sure of it. Yabba dabba doo. So let's type this in. The crowd's going wild at the sports arena. 150. I'm in. We're going to see how this works. I said exactly what one, the 600 strike. at 152. February the 27th. Retail traders. Boom. The crowd's going wild here at the sports arena. Yep. Got to break the V. Whoop. Got to break the V. Whoop. You think put? Oh shit. Why would you say that? The SPX is at 560. The 6000 is 550. Break the V, what please? Now I can get out of here with 200, with $100. $200, I mean. Come on. Don't go back down. I didn't do it.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Dial 1-800-888-5454 and ask for Washboard Jim. Donate 10% of your proceedings. $179. You can bail out now if you like. Make business decisions. Resistance is 596.52. My resistance is a little bit lower than that at 5.9. Ooh! Ooh! Okay. What happens when you hit the 200 SMA? You make a business decision. Nailed it. You got to watch this trade. I'm gonna walk you through. Woo! 192. I'm out. Woo! See, I get out before everybody else does, and all these people are going to say, "Jim, why did you get 292?" I'll take that. $400. Retail traders. $1.99. $2. News in 10 minutes. I think you know who I am. Oh, I didn't put the SPY. Shit. Ugh. Belch. Man, my throat's... Damn. Well, I'm okay with that. I left a couple more $100 on the table. But I mean, $400 for my first trade ain't bad. SPX Damn, what did them things get to? Oh no, $400. I could have bought one contract for $560 instead of spending $1,500 on a trade on the SPY. And I'd have got more money out of the deal. That's why I like trading the SPX. I don't have to put as much money in it. I just buy one or two and get $1,000. If I'd have bought 3, I'd have made $1,500. So let's walk through the SPY real fast. This is kind of important to know. I drew out the flag. And when we were down here, before we broke out, I said we were getting higher lows. So I got bullish on the trade. But I didn't want to take it until after I broke out of the flag. And I broke out of the flag with what you call a spinning top. So I didn't jump in the trade. I watched it go up. I said, shit. You know, I left a couple $100 on the table. So I waited for it to come back to that previous support line, which had higher lows. And it came right back to it, and I automatically jumped right in it. Because I've seen that happen over and over and over again, where they break out and they always pull back. So I'd say, I tell people, don't ever chase. Let it pull back, and then you'll know if that's a true run or not, if it's a true breakout. The fact that it respected that support level of them higher lows, and then came up and done the double top, and I got out at the 200, which was probably a little bit too soon, but still yet, I was probably one of the first ones that got out of that trade. And I was guaranteed my money. Now we've pulled back to my old resistance. But you got your symmetrical flag, your breakout, your pullback, and your boom. And we respected that VWAP for 3 minutes. The body, the body, the body. And then you had 3 white soldiers. That could have been another exit right there. Now the fact that it's coming back and going to respect that third soldier could be ready to get back in the trade again. But I'm going to wait. I don't want to rush myself today. The SPX, the same thing. You had higher lows. You had higher lows, so it broke out of the double top. It came back, so if you draw your trend line on the higher lows, using the bodies, it came back and respected that higher low off the 21. So that would have been a good shot. Then you had to hammer. I call them sledgehammers. With the wick on the bottom, it's always important to look at them wicks. The heavier the wick on the bottom means the more bullish it is. If they're on the top, that means you're going to have a pullback. This one right here, pulled back. Bigger wicks on the bottom. It broke out. So then it come back and hit support that I had on here. And that's 3 white soldiers, because that's telling you that this could continue to the upside with these 3 white soldiers, but it came back and retested that third soldier. Keep a good eye on NVIDIA today. We got a double top we got to break out of. If we break the double top, it could go higher. No, we just broke the double top here off that wick on the SPY. Damn. Right now I've left about $300 on the table. So I'd been 700. Almost a 50% gain. 100%. 50%. More than that. 75%. Oh, well, Mama says it bees like that sometimes. $233. The video's at the 200 on the daily. So if it wants to stay bullish, it'll bounce tonight during earnings. SPX is at $11 now, the 6,000 strike. If it's still bullish, you can get the 60-20s, but I'm going to wait. That'd have been a good trade right there. I thought about doing both of them. I should have. I think so too, Magnificent. It seems like it is when the Democrats are passing the bill because they got all that stimulus in them. All that pork spending. Randy doesn't trust the market. Randy, I'm gonna have to take you out to the woodshed. How dare you? Just for that, I'm going into the kitchen and I'm going to come back and make another trade. Might not even get the chance to go back to the kitchen. La 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 la. Okay, we got a triple top. Ladies and gentlemen, we have a triple tops. This is the SPX. Oh, new high. Munich, Paris, everybody talk about, and pot music talk about. What we have here is a rising wedge. I think this is the 51, so yeah, I don't know if I need that on there or not. If I got the 63, I'll take off the 51 and put the 200 on there. So I'll change that to 200. No? What happened here? I want to put the 200. How'd I get the 63? Oh, that's the... I got the 200 on here. Never mind. The 60/20s, I was alerted to them right around 320, and they're up at 460 right now. 470, 480. And my 6,000s are at 1320. Damn it. Schmidt. So that's almost a 200% gain. Another couple more bucks if I got in it. $5.99 Yoko is my next resistance. $5.99. Randy, you're going to sit around all day, or what's going on there, man? Are you in? I'm not in. I sold them way too soon. Oh, that could have been 700 more bucks. Now, Johnny, Big John, Big Bad John. No, I'm not in anything right now. I had an opportunity to buy this dip and I didn't do it. Now we've broke out of the flag. If we break the 599 on the SPY, I'll get back in the trade. Right now we're too close. Why do I got 599? I think I need to look at that. Yep, that's why. After hours resistance. And we are on the top of the linear channel. These are, oh, these are the monthly highs. That's the monthly high at 602.48. We could see 602.48, Yoko. Yep, I would say we're close to resistance. I got 599. If we break 599, we're going to go to 602. $48. I'd take profit. If Yoko says it, we're going to know here. We're within 2-3 pennies. Up. They're buying it. I've seen 500 lot go in there. Some idiot pumping it up. There it is. The crowd's going here. They're going wild at the sports arena today. We're at the linear channel. We got to break it. We got to break 13 or 19, 599.20 before I jump back in it. I had to make a confession today. This is my resistance, Yoko. How about you? I'm waiting for my grade. I want it from Yoko. An R. I got 599.20. Damn. I get 2 punches. You better make them good. You don't know who I am. I don't think you do. I'm going to have to show you what I am. You're talking to the WBO champion right here. I better put a scare on you. A plus on entry. Thank you. I was waiting for it. My dismount. Yeah, I agree. We're at $5.99.20 now. Time to buy put. Nancy, I said I need my coffee and I need it now, chick. And wear a bra next time. Yeah, my discount. I left a good $800 on the table. I left 200% on the table. So I can have some confidence. Oh, yeah. Last person said that to me couldn't last one round with me. I'll be back in one moment. Be careful. Tweezer top. Oak. We need a bigger drop.
think it's an attractive alternative to staples with more growth and better growth.
Sorry, honey. We came back and tested the old resistance. We've got a 1 bis, 2 bis, 3 bis breakout. 3 black crow. It's 60-20s. God darn, man. My calls went to 1650. Okay, here we are. Now, if it does pull back to this bottom one, that could be your solid support. So I'm going to make a business decision. The 60-20s at 360 right now. Come on, get on there. Randy, you remember Charles Manson? Were you ever part of that family? February. We're at 340. Come on, baby. The 26th. Strike. 60-20s. At. Get right about here. We got the 63 coming up. The crowd's going wild at the sports window. 3.30. I grabbed 2 contracts at 330. The crowd's going wild here at the sports window. We are now at 4:30. I'm up $200. Do you understand me? We have a 1, 2, 3. This is how I do it. Wumbus? Come on. Two bits. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. This is how you do it. Come on now. I don't need a distraction. I just need a reaction. Oh, Jim, you forgot to take the soup out of the freezer today, so you'll have to take it out now and have it for supper. I should have sold them right there at 420. Oh, God darn, Vegas. Shit. What's up, baby? I'm back to 320. Damn, I should have sold them. We're retesting, so if you can count to 4, we just might make a little bit more. I should have never said it. You see what I'm saying? So 1, 2, 3, 4. Shut the door. There's 4. I'm back to my 200 gain. Pop. Are we going to go higher, Yoko? Paging Yoko. Should I get out? Question was asked. I think I will. We're at 490. Should I make a business decision? Magnificent. The flow is there. I'm up. I don't know if I should sell it. I'm just in my second round. I'm getting out. I'm out at 440. 450, I mean. It'll probably be the biggest mistake I ever made in my lifetime. Hickory dickory dock, the stock run up the clock. I think I'm in the scalping mode right now, Randy. Look at that, perfect. If you count to number 5, you might take a nosedive. May a circle be unbroken. Randy, we might take a nosedive if you're able to count to 5. I'm gonna go get my coffee going. That's your baby, RITM. crowd is going wild here at the sports arena today. Damn it. No. Jimmy could have got 480, maybe 490. I feel like I want to go in there and lift some weights. My arms are saying do it. I've been lifting weights a little bit, and I can tell a difference. Burning, burning, baby. I think this is the longest I've ever gone without smoking weed in my whole entire life. I had to be kind of, when I lived in Hawaii, I got hired on here in Springfield, and when I got out there, I got a hold of some and smoked it, and then found out I had to get drug tested. So I went into a nearby store that sold that stuff, and I drunk it. I went in the next day. So I don't know if they found it on me or not, in me. They never said anything. I cut back a lot when I lived in Hawaii, but they had Maui Wowie, the good stuff. Seems like we're still bullish. I was kind of seeing if we're going to pull back and hit that 63 and jump back in them. Still might, but I mean, why I say that? Because we're above, we're not down in here. If we were down in here, I'd be a little bit more bearish. But we're not up down there. Volume slowed down big time. Usually when you have a slowdown in volume like that, you could have a nice pop. People get tired of sitting around. And you watch that tape. That tape can tell you, just watching the speed of it can tell you. They're at $4. So it's depreciating. I'm gonna go back. I think I'll have a burrito. I'm gonna go make my coffee right now and have it first. I'll be right back. And then I'm gonna go through the watch list. How's NVIDIA doing? I'm gonna use my site on NVIDIA. New high. We hit 132 area. Symmetrical flag, or incendied triangle, actually.
Champagne bottles and unpopped one.
Yeah, no one wants used champagne, I guess.
Thanks, Rick. Appreciate the look at the charts. Good stuff on the technicals. Good prep for the earnings. Thanks, Jenny, too. Coming up, we're going to talk about the rally in the market. We've got a good bounce happening. Market Meetup is next. We'll be right back.
Don't give these people false hope. They were just talking about eBay. Watch the 63, that's the red line. That'll be a pivot point in the chart, just a little bit lower. Right now you're at the 50. We bounced off the 50 3 different times, the 50 SMA. I think we're going to pull back some. Come on, man. Stop calling me when I'm at work.
Shaping up, S&P 500, about 0.75%. Tech looking good. NASDAQ up about 1%. Caroline Woods, George Tillis checking in on the market with me. Caroline, NVIDIA giving us the right tone for earnings, up 4% right now. Not a bad way to start the day.
Yeah, that rebound in tech, the best performing sector on the S&P 500 today, hence the pop that we're seeing. And there is some optimism from NVIDIA ahead of earnings later today. Let's see if it can hold, because I think that, you know, the narrative has shifted and there's concern that the potential for AI to really boost earnings is kind of fizzling out. So we'll see if NVIDIA can stem some of those concerns, and let's see what they have to say about DeepSeek as well. I think we need some really positive commentary out of Jensen Huang tonight. But if you take a look, the Mag 7 mostly higher, although Apple not participating, and Tesla not either. Google has been kind of bouncing back and forth across the unchanged line. We're also seeing some huge strength. I heard you talk about it earlier. Supermicro, Dell, Broadcom, really chips in general, aside from onsemi, Texas Instruments, and Analog Devices, all higher today. In terms of another kind of weak link sector that had been underperforming and is outperforming today, consumer discretionary having a pretty good day, following some mixed earnings. If you take a look, Lowe's a winner today, Home Depot going along with it once again.
Doesn't she look beautiful today?
Everything is higher. Instacart and Kava both lower today following earnings. Another name that's been on my radar today, not one that I talk about all that often, but certainly not participating, is Blooming Brands. It's really getting beat up following earnings. Even the CEO said that the earnings...
That's the sixth time it's pulled back.
Basically representative.
So I think it's going to break out here.
Q4 sales fell 9%. Comp sales
we got a double top.
1%. They saw declines basically at
Resistance.
Carrabba's and Bonefish Grill. It seems like Fleming's might have been the bright spot there, with comp sales actually increasing
3%, which, hey, Fleming's is not a cheap price point. I remember, I haven't been since college, but I remember my parents being a little bit, Fleming's Steakhouse. I know there's one in Boston right next to Maggiano's, actually, or very close to Maggiano's, but it's a high price point. High price point steakhouse there. In terms of, it's certainly not dragging the overall restaurant segment lower, though. I saw strength.
Time to
Dutch
buy a put.
Brothers, Chipotle, Brinker is higher. And then speaking of the consumer, great day for travel stocks, green across the board there. Also retailers bouncing back. I saw strength from On Holdings, which had been beaten down this month, still down about 15% this month. Abercrombie having a good day, Gap having a good day. Not seeing any participation from names like Target, Dollar Tree, Dollar General. But overall, following some weak reads on the consumer with confidence yesterday and then sentiment last week, it seems like we're seeing a rebound there. One other quick name on my radar too. Intuit following earnings, surging as much as 12% higher.
You're into it?
We talked
I am.
about this one yesterday, the tax software stock.
I'm into you, baby.
And investors seem pleased. That being said, despite this move, more than 12%, right now about 13%, basically unchanged year to date and actually still negative over the past 1 year. So I think that goes to show where the stock had been, but making up some lost ground today.
Yeah, that one kind of seemed like, to use the Kevin Hanks phrase, a beach ball held underwater. It's got a pretty rock solid business.
I'm into it, baby.
Fears about government alternatives were getting a little bit overblown.
I'm into you.
But, all right, a bounce back, a snap back. Walmart hanging in there alongside some of the retailers that Caroline mentioned. George, the dollar bonds a little changed. New home sales were ugly, George, but it didn't seem like the market cared. We got no rally in bonds. Market's fine. That was the only economic data print we had, and we just breezed right through it.
George.
Yeah, I mean, I think for those who are in the housing market or looking for housing, I think the new normal is higher interest rates. I think the market is slowly going to have to adjust to that. And looking at yields, they have fallen about 50
I really like
basis
this
points
people.
off the year-to-date highs from about 4.8 to 4.3%.
I like all these people. They got a mixed crowd of. They got beauties. I haven't seen maybe even that ugly chick's beautiful.
Again, some of the housing numbers, which are still quite bad, aren't necessarily translating into some of the builder stocks. Home Depot has been trading back to the upside after earnings. So there's maybe a little bit of relief rally in the interest rate sensitive areas of the construction market and materials market. And also relief rally, to say the least, in the
Damn, I should have jumped in that.
After a pretty significant 4-day rout in the
Came back
the
to number
indices.
7.
But from the consumer standpoint, you're actually seeing what you should see.
This one has a higher
on a day
high.
like this, you're seeing the consumer staples actually the worst performance.
Respecting the old inverse head and shoulders.
As a sector, and of course looking at IT, information technology, and consumer discretionary is higher by 1%. So I think just looking at the markets. And
Getting ready to squeeze.
4-day,
I don't know which way though.
Potentially of a
See, what I mean by squeeze, this is tightening up. And we had a double top, and it's just kind of barely pricking along right here. And the body didn't hit the double top high, just the candle wick. So I'm still iffy if I want to take it or not. Plus, it's my lunch period. Today I made a confession. So I have a contract with the IRS building down here. And the lady that runs the part where the people go in and pay their payments and they talk to the customers. I've been sneaking in her office and vacuuming her floor with my key. I've been doing it behind her back. So today I went in there and I said, I got to tell you something. I don't know if this is right or not, but I got a key to your door and I go in here and I vacuum when you're not around so I can get it done. And she said, at first we had the understanding like as long as there's an employee down here, I'm okay to go in. But then I went back in there the second time and I said, I want you to understand that I got a key to your door and I've been going into your office and doing the vacuuming. I don't think it's right for me to do that. Is that correct? And she thought about it for a second. She said, probably best if you didn't. But she left me with the impression at first that I could, and I'd had to just go back in there and have another conversation with her to make it perfectly clear. And I told her from now on, I will not go into your office unless you are here. She said that would be great. What we have is a wedge or symmetrical flag. That's a flag. So the more we get to the end, it'll be about 4 or 5 more minutes. We'll know if this thing wants to go ahead and have a nice little pullback. And I'm not counting this wick as number 7, so we're going to find out. We got a triple top coming up. If it breaks out, I'm going to buy them. This continuation, I mean, it looks very bullish. The 60-20s, or I could drop down to the 60-25s. But I ain't going to jump in this trade because I don't want to get into it and chase it. I have to have some kind of confirmation that it'll break. Because I could jump in it now and the damn thing will break down. But all in all, this looks pretty bullish. So I just don't want to spin like that here all. So the wick came down here and almost hit the 50. We've been bouncing off the 50. I'd like to see it come back down one more time. NVIDIA new high. There it goes. Munich, Paris, everybody talk about, and pop music talk about. Oh, she looks like the secretary today.
Open its 5,000th store during the year, their CEO did say in a
Sexy
statement on the back of her name,
secretary.
they see many
See-through.
opportunities now to successfully grow their business and deliver this value to even more consumers around the world. Other retailers have been struggling, frankly, with the economic conditions right now and the appetite to see these promotions and discounts. But what we do know is that TJX
God, I'd love to have this girl come over to my house, dress up as a hooker. I bet she's got an outfit for it. That's sexy right there. Oh, damn. Both of them are hot.
Was 17 years old the day Con Edison omitted their quarterly dividend, and here it is 51 years later. I can't believe it.
And maybe just a few things have changed and some stayed the same, right? That being said, you were looking at some of the charts and trying to gauge what signs, right? You saw a bullish sign, for example, in the S&P 500 weekly closing basis chart. I saw that you were looking at the resistance line. Tell me a little bit about a chart like that quickly, what that tells you.
Well, in a nutshell, Nicole, is the chart coming up here?
Okay, yeah. Well,
maybe. But I think I remember there's a trend line going back to the December weekly closing peak all the way back in 2015. And it connects the week ending January 6th close this year. Interestingly, if you look, I put two arrows there. And along that line and around that line, you see multiple highs near those arrows. So in a nutshell, it looks to me like that line is going to offer resistance for the S&P 500.
It's going to go all the way back to 215.
Slightly to either side of 6,200. And that's a line, I might add, that has stood the test of time.
New highs.
Next up, you have the monthly bar chart. And what is that telling you? Because folks want to know if they should be invested. Should they be fully invested? Should they be going for it or not necessarily?
He's a liar, man.
Well, the monthly bar
2015's right here.
You want me to turn that way to look at the chart or read it from the computer?
However you like, Jeff. It's your show.
Well, I'm turning around here, and thank you again for that chart. The S&P stayed in roughly a 1,300 point range from 3,500 to 4,800, and when it broke out above that area, if we add the 1,300 points onto that, we get, give or take, 6,100. On a monthly closing basis, you'll notice that line, the higher red horizontal line, is right in that vicinity. I would call that a measured move.
Rob took profit. He said puts are coming in. Rob has took profit. I can't listen to this four-eyed freak. He's a liar.
To undergo a high-level consolidation and then break out above both those lines, accompanied by better breadth and an expansion in new highs.
How likely is that to happen?
Right now, I think
Maybe he said the 15th.
If it were me, I would say, and I was investing, I
Maybe
think we could go into a trading range a while longer. Thank you for putting me on the spot. I don't mind.
That's okay. And and I'd love to see maybe also small caps. I mean, you look at the NASDAQ, you
The
look at
Russell 2000, right.
What do you differentiate
No.
between those?
Well, I will tell you on the NASDAQ,
There's a hell of a
I have
sell-off.
in my mind, an important monthly closing trend line. Now, some of you are laughing because people are doing intra-out.
Rob, the only thing that I really think right here now is that we've had a huge sell-off and we're still down, what, 160 points from the top, 147, 140. but we'd have to break this resistance for it to really move, and that'd be right at 60, 20, 61. Right there. Boom. 60, 20, 95. So I'm going to go into the kitchen, make my lunch. Might just have a bowl of soup. Different, not my, a canned soup. Did I put a line on that 1 hour?
LLC, thank you. Nice
Thanks
to
for having
see
me.
you. Thanks for being with us. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. John
Tree.
Paulson
If you
takes
can
us
count
through
to 3, you can trade with her.
Target, Apple, right here, Trading 360.
Target's at 124, Johnny. Where'd Johnny go? Do we have any ladies listening right now? Do we have any ladies listening to me right now? Tesla did you dirty? I'll be right back. I'm gonna go make my lunch. I feel like I want to get puts too, but we broke resistance. NVIDIA new high.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back, friends, to Trading 360. Stocks are bouncing back after a sell-off for 4 days, and we're waiting on NVIDIA, but right now it's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Good to see you both. Good morning. Don, just a quick market thought. Look, you know, you probably weren't surprised to see 4 days of selling. Some of your thoughts.
Yeah, we're back in what I term the volatility box, and that is the S&P futures trading and bouncing right between 5,900 and roughly 6,100. So this 200-point box has been around really since fairly early November, directly after the elections. We started, trading inside of this range, and this is a meat grinder in this range. So again, volatility box right now. There's no difference between 6,100 and 5,900 until we break outside of those ranges. We're volatile.
All right. Let's talk about Baidu. We've seen there was a lot of love for the Chinese stocks, and let's see where we stand now. Baidu, what's on your mind?
Yeah, you're exactly right. There was a lot of love, specifically in like FXI, which is the ETF large cap, specifically again for of course China. But Baidu has really not participated in any of the upside, and I think it's actually going to just pull back kind of towards the lower edge of its range, and that range has been pretty consistent. It's been like up to 95, down to 80. So look, I'm just going to hop aboard inside of that range right now with what I term an in-out spread. This is like one strike in the money, one strike out of the money, a very, very small in-out spread. This is the March 21st expiration. I'm just going to buy the 91 puts, sell the 89 puts against. It's just a $2 wide spread, and this one's done for a 90-cent debit. And I do that just to take advantage of what I believe is going to be some short-term kind of, move back down, if you will, to the low 80 level inside of Baidu.
Okay. Let's see, at $90 today, let's see what Rick Ducat has to say about the technicals, please, Rick.
Yeah, I would agree with Don. This one seems like it didn't have as good of a move, and it has seems to have fallen off more than its peers in both respects here. And I did have my eye on a pretty similar range that Don was describing here. First, I looked at 100, though. This was a boundary that I saw here. That was about where we had a small gap. This was one of these sticky price levels here that we've often found support or resistance here. 96, 95, around that same level. I mean, I just drew it right here based on this most recent gap, but really you could have extended it all the way back to kind of another of these notable levels that price had a hard time staying above unless it made these large gaps, and then it kind of would have these big swings back and forth here. So in the shorter term, though, a smaller range to consider would be this repeated low area and our small gap near about 87, our green line here, and this range here near about 96 to the upside here. For now, price is moving above its shorter term moving averages, our yellow 21-day and orange 63-day exponential moving averages here. We've seen quite heavy volume recently as well. Notice how many spikes, which are days where volume is 50% above the 50-day simple moving average of volume here. So very heavy trading in this name recently here. RSI trending downward, momentum near the 50 midline, not really a strong lean one way or the other, which is kind of exhibited by our moving averages continuing to move closer and closer together and move more sideways. When we look at our volume nodes and our volume profile study, we are very close to the point of control, the area of heaviest trading. So that could be a significant level to watch, near about 90 or so. And then if we were to look for other volume, it doesn't really get too heavy again until we are up here near 104, Nicole.
Okay. Thank you for that. It's the question is what happens to some of these names, and you feel like Baidu was left a little behind. Don, final thoughts there?
Yeah, no, I absolutely agree on that particular front. By the way, I was looking at the volume as well inside of Baidu, and it is active out there. But look, it didn't participate in the upside. You saw upside in like Alibaba. That thing absolutely ripped. Again, most of the Chinese large caps ripped to the upside. Baidu was left behind, and right now feels like it's just going to kind of listlessly sink back down into that low 80 range.
Okay. Next up, we're taking a look at Target. Some of your thoughts on where this could be headed, and there have been a lot of questions about Target. You know, it just wasn't the family favorite anymore. Yesterday I heard of a boycott. I didn't investigate that, but Jessica Inskip was noting that folks were going to Costco instead of Target. I don't know. What are you seeing here?
I'm a Costco person myself. You know what? This is make or break right now for Target. And look, this is going to be my bullish trade of the day over here. And the reason is, it is that much of a make or break. You take a look at Walmart right now, you take a look at the peers of Costco, and again, they're exploding to the upside. I mean, specifically like Walmart, Costco, pretty much hitting new highs on a day-to-day basis. Target's kind of left in the dust. I think there's actually some upside potential in here in the near term. Now, the earnings are coming March 4th. So I'm intentionally actually stepping in front of the earnings, trying to basically catch the marketplace as it actually, possibly upswings off that earnings announcement. How is the business really doing right now? Again, moreover, it's the lower end of its range right now. I'm going to step out and I'm going to take some risk, but I'm going to do it in a defined risk fashion. So I'm going to go out to the April 4th options expiration, and I'm just going to buy a very slightly out of the money call spread. I'm going to buy the 130 calls. I'm going to sell the 134 calls against it. So it's a $4 wide call spread. It's done for about a $1.80 debit. So risk reward in here is decent. We need some upside potential above the level of 134, and can very well do that just off of the earnings announcement. But nevertheless, I'm still giving myself all the way to the April 4th expiration for Target to finally, breathe some life back into this underlying.
Okay, let's see. I mean, look, this chart's not a pretty one. I mean, they had a big gap down last November, December time, trying to make a go of it. But over 1 year, look, it's down almost 20%, right? So, Rick, some of your thoughts on the technicals, please.
Yes, never really a recovery after this very severe drop off we had during our earnings event that we had in November. You can see pretty obviously where this happened here. Note once again, extremely heavy volume during that decline that brought us to our 52-week lows near about 120. So from that point, we did have a bit of a recovery here, but it was a disappointment for the bulls here. Look at this pink line near 145, low point, high point, high point, low point, low point, and then we did rally up. Notice this is where our earnings gap began. We topped out at that repeated low slash high point near 145. So we never even actually filled the gap after our very severe push to the downside here. Notice as well that 145 at the time lined up very closely with our purple 252-day exponential moving average. So a significant confluence of resistance at that area at which price failed. Now we are below our moving averages. They're trending downward here. We are struggling to hang on to this level near 126.50, the low point after we had that very small gap up, and then some subsequent lows that we established a couple weeks ago there. So now when we examine volume and standard deviation channels, we can see that if we were to move lower, we're kind of out of the heavy volume areas here. The -1 channel lines up very closely with our 52-week lows. So 120 seems like a key level to keep an eye on here. The next heavy volume area is right here. 130 lines up with our yellow 21-day and our recent highs and our linear regression line. So 130, 131, that's kind of the first resistance area to watch. And then we got to take out these old highs here near 145.
All right. Well, look, and you showed that sell-off that we saw in November, never quite getting back there. And, there seem to be mixed reports from the analysts. UBS said there are several sources of tailwinds for Target for 2025. At the same time, I saw JP Morgan as a neutral rating, and they have a 146 target. That's higher than where we are. And how about this? We talked yesterday about Nike and Skims, Kim Kardashian Skims, to make more athleisure, athletic wear, leisure wear. Well, guess what? Target's doing much of the same and partnering and launching an exclusive activewear line, stylish activewear line with Champion. So that's something to also note that maybe could give them a little boost. Final thought, Don.
Yeah, no question about it. And one of the reasons I'm trying to step ahead of this earnings announcement is I think they have to come out swinging. They have got to have something major in this earnings announcement that's actually going to spark the rally, and that's exactly what I'm looking for. Hence why I'm actually stepping in front of the earnings announcement, which is actually something rarely that I do. I don't like, being involved in earnings when there's that much of like this binary risk. But in this particular case, I think Target is going to be well positioned to the upside.
Yeah, well, we'll see, because they have some big gaps on earnings days. If you look at a chart over, 1 or 2 years, you really see the big moves on the earning days. So good luck with that. And then last but not least, we'll take a look at Apple. Some of your thoughts on Apple.
Oh, we hit the 63.
The 260 high.
God, man, my timing is perfect.
I'm stepping back into the Mag 7. Like, I've avoided this as much as possible when I actually come on here on a week-to-week basis and discuss a couple trades. I've just avoided some of the Mag 7 because it doesn't matter what you.
We came back and hit the 63, and we're on the 50 again. See if this holds right here. Not in it yet, but I'm going to get ready. $420, Randy. Something ain't making sense here. It's depreciating in value as it goes up. I don't know why, but $4. McDonald had a farm, me-I-me-I-O. If it doesn't hold the 63, it will drop a lot more. It could drop to $59.95. Me-I-me-I-O. Yeah, something ain't right. Something not right here. The time of the chart is a lot different than my options. Here's 350. So I think I'll grab some. 360. 350, there it is, 350 right there. Give it to me. This is kind of risky, I think. They're at 340. 350. Let's give it a shot. I still think it can come down some. I got some at 350. Yeah. Are you back in? Ooh. Damn it. Circle be unbroken by Lord by and by. Do do do. I once was lost. Now I'm found. Okay, I think I'll wait for $3. If it doesn't hold 3, I'll get out. There's 3. Here it is. I'm out. Probably a big mistake. Goes back to 3. It's only a $50 loss, so I can take that. So the next one's support level. It's kind of hard to say. Let's move this over here. Get that out of the way. It's kind of an equilibrium right in there, right around 59.92, or it stops at the 200 EMA and be a strong buy. And I'll move the calls up. Well, Schwab is sensitive as heck. Get ready. Four straight red candles. So I made my soup. I just got to wait for it to cool down. Got a little warm there. I might put a little butter in here. Yeah.
Oh, I know what I could have.
Bouncing up a little bit. Back to the 63. Damn it. Screwed that up.
From prototyping to production, it makes more and more sense for them to use Xometry.
And just quickly, I mean, how do you view the economy? Because that's a big part of everything. Are you feeling good about 2025? You have huge customers. We've mentioned a few: BMW, NASA, Dell, GE, Secure, Reliable. You have a few here. How do you feel about the economy? Because you need the economy to be strong for all of this to happen, right?
Yeah, well, look, we've been growing very nicely despite a manufacturing contraction over the last couple of years. So when we even gave that guidance for 2025, Nicole, we've been mindful about the macro and are not expecting any sort of upturn this year on the positive side. So we've actually tried to be conservative about where we think things are. If there's an upturn, that would certainly be beneficial for us, but we aren't counting on that. And I think just going back to, not only is there a technology platform, but the application of AI in manufacturing makes a lot of sense, and it's another reason why customers are flocking to Xometry.
And so
Really?
expecting the upturn and as a result being somewhat conservative and using more AI. All right, great to see you. Randy Alschuler, thank you, CEO.
Thank you so much,
at
Nicole.
Xometry. Good to see you again, thanks. Coming up next, Disruptor, as George Salis is standing by. I'll take a look at Workday after the latest earnings report. Shares are catching a bid. In reaction, he will break down the number. He will also give us an example trade. That's coming up. Trading 360.
I missed that one. Dummy. don't know how I missed that on earnings. I missed this trade here too. It sucks. Every time I stop out, man, I hate it. There'd have been $100 right there. I hardly ever use stops. I usually buy the dip. So if I'd have bought the dip, I'd have probably bought 4 contracts at 250, 260, and I'd be up $4.50, and I'd be out of the trade. I'd be up $550. $600. $550. That's the way I usually trade it, but I didn't this time. I put a stop in. I said, I'm dumb. I'm going to work for Schwab. We'll try it again. Caroline Woods and I would be a hot item. So I'm getting back down here again to the 63. I'm going to try this one more time. Might be doing. Come on, don't bounce yet.
Network. And yesterday, the options traders were spending and taking a noticeably bearish stance on AppLovin.
Yeah.
And today, we are seeing a big sell-off, and there's news here to go with it.
This has to do with 2 short seller reports hitting the stock. This is from Fuzzy Panda and Culper Research, and this follows the newsletter where Bear Cave, the Bear Cave newsletter, gave some, caution around AppLovin. There's some questions about its practices. Here's the allegations. These are, we'll say, there are several key allegations that are in the Culper Research and Fuzzy Panda
get ready.
review. Misuse of Meta's data. Fuzzy Panda claims AppLovin is, quote, stealing data from Meta's ecosystem to fuel its e-commerce initiatives.
Ooh.
If that's true, that could violate Meta's policies.
Yes.
And it could essentially lead to some legal action. The other allegations among the
Let's
claims
hope
by the
not.
short sellers are violation of Google and Apple rules.
240.
The reports that they are putting out suggest that they could be exploiting App Store policies, essentially engaging in practices that could violate user privacy and platform rules. Deceptive advertising, that's a big accusation here, and unauthorized app installation. That came up even in the Bear Cave report. The Bear Cave says that rapid rise that we saw in shares of AppLovin over the past year, their accusation was this is
Rob, did you take it?
low-quality revenue growth from ads, and they're just deceptive. These ads, predatory, and at times
I'm back
unclickable.
in.
So in other words, key to the deception theory. Culper says that AppLovin's been involved in this misleading ad practices. unauthorized app installs through its AI-driven ad network. So that's, and then just the critics are arguing that it's massive stock rally that we've seen because on a year-over-year basis, it's up huge, and that it really might not be sustainable if there is something to this, these accusations about, you know, unsound business practices
Took the lotto.
versus actual genuine growth here. So what does this mean for investors? Obviously today the reaction is a sharp drop to the downside, right? The company response matters. So far we haven't heard from AppLovin. If they dismiss this, could be, you know, not sure how we would call this, if it's a red flag, a yellow flag, or what. Regulatory action, that's a question mark. If the SEC or FTC or App Store owner, say Apple, comes after the company launches an investigation, it could lead credence to these allegations. At the same time, short sellers are biased, right? They make money off of shorting the stock, so they have a financial incentive to this. But the allegations are what they are, and it's certainly hitting the stock today, Nicole.
Yeah, and I see some insiders were selling shares worth over $19 million, recent SEC filing on the 25th. Now, that may have just been a pattern.
It
you know,
could have.
when insiders have to sell on this
Yep.
date and that date,
Yep.
but they did note that.
Yeah.
And, you know, smoke and mirrors, the dark ad market, these are some really tough allegations.
They
I
are.
cannot wait to hear AppLovin's
Response,
rebuttal,
yeah.
response, whatever you want to call it. The stock is still up nearly 500% over 1 year, 476%. Thank you very much.
You
But
got it.
certainly a bit of an unraveling today, down 13%. Diane, thank you. Diane King Hall. Now a turn to the disruptors. George Sillis is here, senior markets correspondent, taking a look at Workday after reporting a double beat on its earnings last night. We'll have a look here. George, your thoughts on it has this up arrow today?
Yeah. Yeah, overall, it was a really good report for Workday, and overall, the stock has kind of struggled over the past year, but today it seems to be making a nice comeback. But essentially, we know this company is one of the leaders in HR solutions software as well as business planning software solutions. They've actually been expanding their offerings outside of HR into finance and planning solutions. So we do know also that they actually cut back their workforce quite a bit in the past quarter. That actually might have been one of the aspects behind the improved EPS, but they actually increased their guidance for the fiscal year as well. So they did post a complete profits. When you look at the profit picture of $1.92, the estimates were $1.75, and so their EPS grew year over year about 22%, and their sales grew about 15%, being the estimates around $2.21 billion versus the expected $2.81 billion. But they also provided upbeat guidance for EPS on a forward basis, as well as operating margin guidance at around 28%. And they reaffirmed their fiscal year outlook for 2025's full year expectations on top line sales. So this company, if you look at it, even prior to the earnings report, it was actually trading at a discount to its 5-year averages, at least on a multiple basis. But they were expected prior to this earnings release to continue to earn about 23% EBITDA growth on about 15% sales growth. So they basically reaffirmed their sales growth, but actually inched their EBITDA growth to the upside just slightly. And that's why we're seeing a nice move to the upside today in the high single digits in terms of percent change. But at the same time, some of the analysts who cover the stock are still constructively bullish. For instance, UBS increased their price target to $285, and KeyBank, I believe, increased their target to $335. Both maintain a respective buyer outperform rating.
All right, so how would you go now about an example trade today?
Yeah, so obviously a nice move to the upside today, but there can be a continuation. If you look at the price action or price resistance areas, it's around $280 just going back to the early part of December. So this may inch to that level over the next month or so to the $280 area. So I'm going to play this still bullish. In other words, we're seeing a gap to the upside and potentially continuation by buying the 270, 280 call vertical for April. So you have about 50 days to expiration. And essentially, I'm going to buy the 270 call and sell the 280 call against it. So altogether, it costs you about $5 a share or $500 in debit per contract. So in essence, it's a trend continuation play. Max profit of $5 occurs at 280. And of course, if you do place this trade, break even has to at least be hit by expiration at 275. So it's a bullish continuation trade, potentially at that 280 level, which was reestablished back on December.
All right, George Tillis, great to see you. Thank you so much. Good luck there at Workday and also an example trade, our disruptor every single day with George. Thank you. Coming up next, our 360 round, we'll talk all about NVIDIA. Today is the day. You've been waiting for this day, and all these tech stocks have options trades that are piled up for big swings. Let's find out what maybe we can expect from the chip giant next in our panel, Trading 360.
If I worked with Nicole, I'd have to slip and fall when my head landed right between her titties. This soup ain't that bad when I put a big old fat hamburger in it.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Sorry, I can't
Where are you
do it.
going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free.
For free?
Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the
Jenny, I got a crush on you. Break the 50 SMA, please. Now I can get out here and make a business decision.
Welcome back to Trading 360. It's time for our 360 round. Let's talk about NVIDIA. The earnings are due out after the bell. Everybody's been waiting on this for about a month since earnings season began. You've had February 26th on your calendar. All these tech stocks are lined up with options trades in the options market for 10% swings. Let's have our panel see what they have to say about this. Joining me right now here in studio is Spencer Hakimian is here, Chief Investment Officer at
370
Management, and Greg Halter, Director of Research at Carnegie Investment Council. Thank you both for being with us. So Greg, why don't you tell us your thoughts on NVIDIA, which had a high of 153, has since pulled back, right? And that was in early January. And since then has pulled back year to date. In fact, it's down 1%. Where do you think NVIDIA goes after tonight?
I think the options markets are pricing in a plus or minus 13% move. So we'll see. I will state also that over the last, I think, 9 months, the shares have basically been flat. So if anything, relative to valuation, you know, the earnings are catching up to the stock price, if you will, and I expect more good numbers coming out after the close tonight.
Yeah, the options market, I did notice that some of the whales were piling in to the bullish trade, bullish stance, and this was at 10:30 this morning. An article that talked about options activity, unusual options.
I made a business decision.
It has come off the highs. Some of your thoughts here, Spencer.
Yeah, so, you know,
Randy,
with options,
Rob, I made a business
clearly
decision.
Move, priced in either direction, as there always is with NVIDIA. I think perhaps even more interesting than just the earnings alone will be the guidance, what NVIDIA says regarding anything about DeepSeek, Grok, Llama from Meta. There are so many competitors that are coming along. And I'm looking for any clarity on if they see anything, if they're seeing demand shift in either direction. We got some rumors that Microsoft was trying to get out of some AI leases. So we would just like to see some clarity going forward about this story, because, a lot of the market for 2025 is priced on tech earnings growth. And if we don't get that, it could be trouble.
Yeah,
Could
you
be
make
trouble.
a great point talking about the competition, what happened with DeepSeek. That's a new conversation that we're going to have. I mean, we saw the DeepSeek sell-off day.
I
Where,
love you.
Can everything move faster and cheaper? And maybe we don't need these big guys the way we originally thought. What was your reaction to that kind of day, Greg?
Okay.
Well, I was on vacation, and actually it was kind of a shock to see the moves that were happening since that came out, I think, over the weekend and on a Sunday. So the Monday's trading was startling, to say the least.
Startling.
What all this means. Since that
It was
point,
suspected.
you've had the mega companies, if you will, not really step back on their capital spending plans at all. In fact, I just saw today that Meta is potentially talking about a $200 billion AI data center, and they're
You got a problem with that, boy?
chips from NVIDIA and so forth and so on. Who knows if that will come off or not, but this is on the back of their facility they're putting up in Louisiana. So there continues to be all kinds of big news. GE Vernova made an announcement today as well on the power side.
Meta
So
new highs.
it looks like they're going full steam ahead, and they'd rather have more than less at this point.
So if NVIDIA pulls back tonight or tomorrow morning or whatever, do you think that's a buy, Spencer, when you look at this? I mean, for the big picture, or do you wait and see?
Again, it depends what it's pulling back for. If the company was guiding for 40% growth and it came in at 38, a pullback, maybe a buy there. But if they are saying that they are getting a lot of competition, I think you want to be very careful here.
Cabinet meeting is broadcast live where?
Undoubtedly going to change this world, but the individual.
Trump's very transparent. Did you notice that? Gang loots entire neighborhood as New York City collapse. Oh, look here. What the heck is that? Will you cook me some soup? Please, hale hale. Honey, you're working too fast. Oh, what the hell? Is that the way they dress over there? She's a helly. I'll buy some soup from you. I'll see the meeting here.
Employees. A million employees have responded so far to this email. Does that mean that the remaining 1 million or so federal employees now risk being terminated? And is it your understanding and expectation when you post a directive on X that the cabinet secretaries will follow that order? Because several agencies have instructed employees that this is voluntary or not to respond.
Yeah, well, so I guess there was like last week, the president encouraged me via through social and also via phone calls.
We got a big knife here.
And I was like, okay.
Oh, that's the spy. No, that's the SPX.
We'll do that. The president is the commander in chief. I deal with the president.
Ho ho.
So.
Get ready.
Can we send out an email to everyone just saying what did you get done last
I
week?
got out in time,
Said
didn't I,
yes,
Magnificent?
Did that.
May I have a grade?
We got a partial response. We're going to send another email.
Rob?
Our goal is not to be capricious or unfair. We want to give people every opportunity to send an email. And the email could simply be what I'm working on.
Rob will get a C if he doesn't give me an A.
Like literally just that would be sufficient. I think this is just common sense.
And what is your target?
Common sense.
How many workers, employees you're looking to cut total?
We wish to keep everyone who is doing a job that is essential and doing that job well. But if the job is not essential or they're not doing the job well, they obviously should not be on the public payroll.
I'd like to.
I love this guy.
A million people that haven't responded though, Elon, they are on the bubble. I wouldn't say that we're thrilled about it. They haven't responded. Now maybe they don't exist. Maybe we're paying people that don't exist. Don't forget, we just got here. This group just got here. But those people are on the bubble, as they say.
These people do not want to answer the email. If I got an email from Donald Trump to tell me what I did last week 5 different times, you know what I would say? Let's see. Say I helped a room make money. I'm trying to make stock market boom. I cleaned the IRS building 5 days a week. I clean toilets so I can sit here and trade stocks. And I have a crush on a lesbian at the IRS building.
The people of such and such a country on other things and other things other than that. So, those people are, right now we're trying to find out who those people are that haven't responded. Now, there'll be some agencies, like Marco has people with...
We're at the 200 EMA.
They're doing very classified, very confidential work, and we understand that. We've talked.
Rob, we're at the 200 EMA right here on the 1 minute. If you give me an A+, I'll give you an A+. Jim, I ain't got time to fuck with you. You'll get your A+ when I'm damn good and ready. Do you understand me? You're going to have to make me read a Bible verse. Victory, that is my battle cry. Victory, that is my battle cry. Chris, am I a character or what? Jim, go for it. Go for it. Do. I don't have time for spam. I wish you would leave me alone. Do 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 do.
Sloppy. We have a lot of people that aren't doing their job. We have a lot of people that don't exist. You look at Social Security as an example. I mean, you have so many people in Social Security where, if you believe it, they're 200 years old. And what we're doing is finding out, are checks going out for that? And is somebody cashing those checks who's maybe 35 years old, okay? So there's a lot of dishonesty, there's a lot of fraud. But I think at this moment, I'll take Elon off the spot. I think that he's impressed. He said it very well, better than I can say it, that he's impressed with the people in this room, very impressed. And I am too, and it's too early to say, but I think everybody's on board. They all know. We want to balance a budget. We want to have a balanced budget within a reasonably short period of time, meaning maybe by next year or the year after, but maybe even sooner than that.
Trump's losing a lot of hair.
The number one issue was the border. We just got new information that they're doxing our federal agents. They're putting their personal information out there, these activists, and they're disrupting the operation. So you got Trinidad Alger running all over.
We have activists, that's true.
So what are we going to do about the activists?
Yeah, a lot of those activists are acting illegally, and we'll give that to our Attorney General, and she'll take a look at that very strongly. But we also having a tremendous support from Border Patrol, from ICE. The ICE agents have been unbelievable. Border Patrol, their leadership at Border Patrol has been incredible, and they're working very well. And as you know, and I saw you reporting it this morning, actually, we set records on the least number
Spy
of
hit the VWAP, Randy.
illegal aliens coming in, migrants coming into our country that we've had in more than 50 years. And we did this all within a period of weeks because we took over a mess. The world was pouring in. And remember, they were coming in from jails and prisons and mental institutions and insane asylums, and they were gang members and drug dealers. Anybody wanted to come in, they came. And from not just South America, from all over the world. So it's amazing what they've done. And Christie and Tom Holman, the job they've done has been absolutely amazing. We set records for and we want people to come into our country, by the way, but they want to come in, they have to come in legally. I want that to be really understood. We want people in our country, but they have to come in legally.
Can I follow on that, Mr. President, about the Trump gold card idea that you unveiled yesterday? I await more information, but the question is, does this reflect a view on your part that the American immigration system has never been properly monetized as you feel it should be?
Well, not so much monetized. It hasn't been properly run. I get calls from, as an example, companies where they want to
285, baby.
The number one student in a school. A person comes from India, China, Japan, lots of different places, and they go to Harvard, the Wharton School of Finance, they go to Yale, they go to all great schools, and they graduate number one in their class, and they're made job offers, but the offer is immediately rescinded because you have no idea whether or not that person can stay in the country. I want to be able to have that person stay in the country. These companies can go and buy a gold card, and they can use it as a matter of recruitment. At the same time, the company is using that money to pay down debt. We're going to pay down a lot of debt with that. But I think the gold card is going to be used by, not only for that, I mean, they'll be used by companies. I mean, I could see Apple. I've spoken with Tim Cook, and by the way, he's going to make a $500 billion investment in the country only because of the results of the election. And I think because of tariffs. He's going to want to be in the country because of tariffs. Because if you're in the country, there is no tariff. If you're out of the country, you got to pay tariffs. And that's going to be a great investment, I think, that he's making. I know it's going to be a great investment. But we have to be able to get people in the country, and we want people that are productive people. And I will tell you, the people that can pay $5 million, they're going to create jobs. They're going to spend a lot of money.
Hey, what happened?
On jobs. They're going to
YouTube?
have to pay taxes on that too. So they're going to be hiring people. They're going to be bringing people in and companies in. And I don't know, maybe it will sell like crazy. I happen to think it's going to sell like crazy. It's a bargain. But we'll know very soon. I think Howard and Scott, a few of you really are responsible for it. But Howard, if you want to discuss that for a couple of minutes, I think I'd like to have you. I think it's going to be a very successful program. This is commerce.
So the EB5 program, which has been around for many years, had investment of $1 million into projects in America. And those projects were often suspect, they didn't really work out, there wasn't any oversight of it. And so for $1 million investment, you got a visa and then you came into the country and ended up with a green card. So it was poorly overseen, poorly executed. Then you had our border open where millions of people came through. So the idea is we will have a proper business. We will modify the EB5 agreement. Christy and I are working on it together. For $5 million, they'll get a license from the Department of Commerce. Then they'll make a proper investment on the EB5, right? And we think Scott and I will design the EB5 investment model because Scott and I are the best people together to do that. So this is joint. This is exactly the Trump administration. We all work together. We work it out to be the best. And if we sell, just remember, 200,000. There's a line for EB5 of 250,000 right now. 200,000 of these gold green cards is $1 trillion to pay down our debt. And that's why the president is doing it, because we are going to balance this budget and we are going to pay off the debt under President Trump.
And to qualify, do you have to promise and make commitments to create a certain number of jobs here in the U.S.?
No, because not all these people are going to be job builders. There'll be successful people, or there'll be people that were hired from colleges, like sort of like paying an athlete a bonus. I mean, Apple or one of the companies will go out and they'll spend they'll buy 5 of them and they're going to get 5 people. Look, I've had the complaint from a lot of companies where they go out to hire people and they can't hire them out of colleges. And you know what they do? They go back to India or they go back to the country where they came and they open up a company and they become billionaires. And they're employing thousands and there are a lot of examples. There are some really big examples where they were forced out of the country. They graduated top in their class at a great school and they weren't able to stay. This is all the time you hear it. And the biggest complaint I get from companies, other than over-regulation, which we took care of, but we're going to have to take care of it here because a lot of that was put back on by Biden. But the biggest complaint is the fact that they can't have any longevity with people. This way they have pretty much unlimited longevity. Also with the 5 million, you know, that's a path to citizenship. So that's going to be, it's sort of a green card plus, and it's a path to citizenship. We're going to call it the gold card. And I think it's going to be very treasured. I think it's going to do very well. And we're going to start selling hopefully in about 2 weeks. Now, just so you understand, if we sell 1 million, right, 1 million, that's $5 trillion. 5 trillion. Howard was using a different number, but that's $5 trillion. If we sell 10 million, which is possible, 10 million highly productive people coming in, or people that we're going to make productive, they'll be young but they're talented, like a talented athlete. That's $50 trillion. That means our debt is totally paid off and we have $15 trillion above that. And now I don't know that we're going to sell that many. Maybe we won't sell many at all, but I think we're going to sell a lot because I think there's
not if you have a Democrat in office and they come in free.
Because people don't want to go to other countries. They want to come here. Everybody wants to come here, especially since November 5th.
All these people will be vetted, okay?
Mr. President, Ukraine, can you talk a little bit about what type of security guarantees you're willing to make?
Well, I'm not going to make security guarantees beyond very much. We're going to have Europe do that because it's in, you know, we're talking about Europe is the next door neighbor. But we're going to make sure everything goes well. And as you know, we'll be making we'll be really partnering with Ukraine in terms of rare earth. We very much need rare earth. They have great rare earth. We'll be working with Secretary Burgum and with Chris. You'll be working on that together. And we're going to be able to have tremendous, I mean, this gives us, because we don't have that much of it here. We have some, but we don't have that much, and we need a lot more to really propel us to the next level to lead in every way. We're leading right now with AI. We're leading with everything right now, but we need resources. We have to double our electric capacity. We have to do many things. We have to really triple, if you think of it, the electric capacity from what we have right now, if you can believe it. So I just said this. So the deal we're making gets us, it brings us great wealth. We get back the money that we've spent, and we hope that we're going to be able to settle this up. We want to settle it. We want to stop. I tell you what, I'm doing it for two reasons, but the number one reason by far is to watch all these people being killed. I see pictures every week from, I assume satellite pictures mostly, but there's some pictures on site of thousands of soldiers that are being killed. They're being decimated because equipment today, military equipment, is so powerful and so devastating. And number one, I want to see people stop. And they're not from here, they're from primarily two other countries. And then, by the way, let's talk about the Middle East. We got to solve that problem too. And that's come a long way. We're doing very well in that also. A lot of things are happening on that. But I'm watching soldiers being killed, Ukrainian and Russian soldiers being killed. My number one thing is to get that stopped. My number two thing is I don't want to have to pay any more money, because Biden has spent $350 billion without any chance of getting it back. Now we're going to be getting all of that money back plus a lot more. And we provided a great thing. I mean, we provided something very important. And we'll be working with Ukraine, and because we'll be taking that, we're going to be taking what we're entitled to take. Now, they spent $350 billion, and Europe spent $100 billion. Now, does anybody really think that's fair? But then we find out a little while ago, not so long ago, a few months ago, I found out that the money they spent, they get back. But the money we spent, we don't get back. I said, well, we're going to get it back. And we'll be able to make a deal. And again, President Zelensky's coming to sign the deal.
Let's love this guy.
It's a great deal for Ukraine, too, because they get us over there. And we're
Liberals can't stand him. I don't get it.
And, you know, in that way, there's sort of automatic security, because nobody's going to be messing around.
I was a big liberal one time. Not real big. I mean, I'm bigger libertarian than I am anything. But all my friends were liberals. All of them. 99.9% of them. And their values have changed so much in the years. It's beyond belief. They don't have any values. None. In another 10 years, they'll be totally different bunch of people. Maybe even sooner.
Days after the election, since the election. So since the election, the confidence in our nation, including right track, wrong track, the first time it's ever happened where we're on the right track, because this country has been on the wrong track for a long time. So the confidence in business, confidence in the country has reached an all-time high. We have never reached levels like we are right now. Okay.
Mr. President, you've been very clear in saying that as long as you're president, Iran will never get a nuclear weapon.
It should.
Is it also your policy that as long as you're president, China will never take Taiwan by force?
I never comment on that. I don't comment on anything because I don't want to ever put myself in that position. And if I said it, I certainly wouldn't be saying it to you. I'd be saying it to other people, maybe people around this table, and very specific people around this table. So I don't want to put myself in that position. But I can tell you what, I have a great relationship with President Xi. I've had a great relationship with him. We want them to come in and invest. I see so many things saying that we don't want China in this country. That's not right. We want them to invest in the United States. That's good. There's a lot of money coming in, and we'll invest in China. We'll do things with China. The relationship we'll have with China will be a very good one. I see all of these phony reports that we don't want their money, we don't want anything to do with them. That's wrong. We're going to have a good relationship with China, but they won't be able to take advantage of us. What they did to Biden was, he didn't know what was happening. He didn't know what he was doing. The administration didn't know what they were doing. It was very sad to watch. But we're going to have a good relationship with China and Russia.
I agree with him 100%.
And, the Middle East. We're doing things that, look, when I left, we had no wars. We had defeated ISIS totally. We had no inflation. We didn't have the Afghanistan withdrawal, the worst withdrawal anybody's ever seen. I think that's one of the reasons that President Putin looked at that. He said, wow, these guys are a paper tiger. Look at it. We're no paper tiger. Don't forget, we got rid of ISIS in 3 weeks.
We're back at $3
People
again.
said it would take 5 years. We did it because when I came in, I let them do what they had to do. And the man that headed that operation is now going to be your chairman, right?
Yes,
Chairman
sir.
of the Joint Chiefs.
Yes, sir.
And Raising Cane. I liked him right from the beginning. As soon as I heard his name, I said, that's my guy. Okay. Any other questions?
Decreases in crossings at the border for you to continue the pause on tariffs against Mexico and Canada? And
No,
if
no,
not,
I'm not stopping the tariffs. No. Millions of people have died because of the fentanyl that comes over the border.
even with the 90% drop in border crossings, though,
that's-
last month compared to about a year ago?
Yeah, they've been good, but that's also due to us, mostly due to us. I mean, it's very hard. It's right now very hard to come through the border, but the damage has been done. We've lost millions of people due to fentanyl. It comes mostly from China, but it comes through Mexico and it comes through Canada. And I have to tell you that.
Watch the SPX.
April 2nd. I was going to do it on April 1st, but I'm a
There we
little
go, baby.
superstitious. I made it April 2nd. The tariffs go on. Not all of them, but a lot of them. And I think you're going to see something that's going to be amazing. We've been taken advantage of as a country for a long period of time. We've been tariffed, but we didn't tariff. Now I did when I was here. I tariffed. We took in $700 billion from China. $700 billion. Not one president in the history of our country took in 10 cents from China. At the same time, China respected us. Now, when COVID came in, that was a different deal. I used to call it the China virus. I guess I can call it the China virus again, but it's an accurate term, but I won't do that out of respect to China.
Immigration enforcement.
Say it again.
On Gaza, I just wondered if there's any progress towards a second phase of the ceasefire.
Well, I'm very disappointed when I see four bodies came in today. These are young people. Young people don't die, okay? Young people don't die. These are young people. 4 bodies came in today. They think they're doing us a favor by sending us bodies. So, look, that's a decision that has to be made by Israel, by Bibi. But Israel has to make that decision. We got a lot of hostages back. But it's very sad what happened to those people. I mean, you had a young lady with her hand practically blown off. You know why it blew up? Because she put up her hand to try and stop a bullet that was coming her way. And it hit her hand and blew off her fingers, big part of her hand. This is a vicious group of people. And Israel's going to have to decide what they're doing. Phase 1 is going to be ending. Think of it, today they sent in 4 bodies. And I will say one thing, I've spoken to a lot of the parents and a lot of the people involved. They want those bodies almost as much and maybe even just as much as they wanted their son or their daughter. Amazing. Please, sir, please. My son is dead, but they have his body. Please, can you get it for us? It's the biggest thing. It's incredible, the level they want the bodies of these people. They're dead. They're dead. And when I saw the ones that came in 2 weeks ago, they looked like they just got out of a concentration camp. Then the following week, a group came in and they weren't as bad and as bad a shape. But Israel's going to have to make a decision. You're right, phase 1 and now phase 2 has started. And today we got some, very, very soon. We knew they were dead, by the way. We knew that they were going to be bodies as opposed to people that were living. But a very sad situation. At some point, somebody's going to say, we're going to do something about this.
Mr. President, let's talk about Afghanistan and the Botch withdrawal. Have all the generals or command staff that were involved with the withdrawal been fired or relieved of duty?
Well, that's a great idea. I'm not going to tell this man what to do, but I will say that. If I had his place, I'd fire every single one of them. That's a very good question.
Well, it's a question we've thought a lot about. We're doing a complete review of every single aspect of what happened with the botched withdrawal of Afghanistan and plan to have full accountability. It's one of the first things we announced at the Defense Department for that reason, sir. Certainly, General Raising Cane, who's on his way in, was not a part of that. Instead, was
Raising
a part of leading
Cane.
the effort against ISIS by untying the hands of warfighters and finishing the job properly and then bringing our troops home. So we're taking a very different view, obviously, than the previous administration, and there will be full accountability.
I don't see big promotions in that group. And I think they're going to be largely gone. I know the man on my left. I think they're going to be largely gone. That was a horrible display. And, you know, I've dealt with the parents and the family of the 13 that were killed. But, you know, nobody ever talks about the 40 that were so badly hurt with the arms and the legs and the face and the whole thing, the missing arms and legs.
Randy?
It was so terrible the way that was handled. And it should have been
Ready?
done through Bagram. We have a big base with big fences and nobody can get in, and you have, you know, hundreds of acres instead of a little local airport where the whole place went crazy. That was so badly handled, and I would think that most of those people are going to...
I'm watching the contracts here, the 60/20s, right at $2. I'm trying to get in them here. I want to get in them real soon before it's too late. If I have to chase it. There's 220. I'd like to get, there it is. Okay, get ready. These are the 60/20s. There it is. 205. $2. Amazing grace, how sweet SPX at 190, 185. God, help me. My throat's been so tickled here lately. $1.90. 280. I scaled out some at 260. Amazing grace, how sweet sound. Let's remove that drawing and break out to the upside. I got a two-headed snake and I got a triple top. We can do it. You can do whatever you want to do in this country as long as you put your effort to it. Jimmy likes 60644. Heck. We're at the 200 EMA and SMA. I think I'm going to go make me a cup of hot tea. I scaled out that last one, but I still have a couple left. He's still talking?
The European Union was formed in order to screw the United States. That's the purpose of it. They've done a good job of it, but now I'm president.
What will happen if these countries or the EU retaliate?
They can't. I mean, they can try, but they can't.
China did. They
They're
imposed
pledging to,
tariffs
sir.
that went into effect. China's retaliatory tariffs on the 10th of February. Has there been any impact that you've been able to observe?
That's right. Now, they can do it, and they can try, but the numbers can never equal what ours, because we can go off. We are the pot of gold. We're the one that everybody wants, and they can retaliate, but it cannot be a successful retaliation because we just go cold turkey. We don't buy anymore, and if that happens, we win.
Are you talking to Eric Prince about privatizing deportation?
No, I haven't.
So, President, you're in litigation with CBS News. Is this a case that you'd like to see go to trial, or are you open to
With
some CBS, the 60 Minutes?
CBS?
Yes.
Well, CBS did something that was amazing. Kamala was unable to answer a question properly, and they took the question that they asked and they inserted an answer. They gave her an answer. This was 2 days before the election, right before the Sunday night before the election. And they wrote out they put her words from another question that was asked about a half an hour later, and they put that into the question. Nobody's ever even heard of it before. Nobody's ever heard of anything like this before, but they then did it, they say, on numerous occasions, and the FCC is looking at it very strongly, and everybody's looking at it, but nobody's ever seen anything. Think of it. They took her answers and they changed them, And I don't mean they changed a word or two, or they cut off a half a sentence, or they cut off a couple of words. I mean, I've had that happen too, but that, you just say, then they say, well, we want brevity. We wanted to do it for time. They took out her answer, and they inserted an entirely different answer that made her sound competent. And they did this, and nobody's ever, I thought I've heard of everything when it comes to that stuff. No, I've never heard of it. Nobody's ever seen. So we sued, and we are in discussions of settlement.
What would a number be, like, what's a number that you would think would be appropriate?
I think it's a lot. It probably did affect the election. I mean, we won by a lot. As I said, too big to rig. But it probably did affect the election. Probably could have won by more. But I could have lost the election because of that. We have to
1:30.
get to honest elections. We have to go back to paper ballots. We have to go back to voter ID. One-day election, ideally, or a short term, not these 48-day and 61-day elections.
1:30, baby.
Boxes are put in a room, and let's move the boxes because we're putting in a new air conditioning system. And you see the boxes move, and then you say, well, where are all the boxes? What happened to the boxes that never came back? Now, our elections are extremely dishonest. We're the only country in the world that has mail-in voting and all of these different things that we put in. No other country in the world has it. France went to, they had some of the things that we had, and they went to same-day voting, all paper. And paper is very sophisticated now. It's a very sophisticated form of voting right now. It's a very safe form of voting. The other things for the governors, I wish the governors would do it because the paper ballots will cost 9% of the machines, and they're 100%. Nothing's foolproof, but they're as close as you get. So we'll see what happens.
1:40.
But on the 60-minute thing, nobody's ever seen anything like it.
And would you link the FCC action to the litigation? Does it make sense?
I don't think it's linked, but probably the lawyers look at it, because I know it's going along. FCC is headed by a very competent person, and she has some very competent.
I'm feeling real cocky today.
So I think they're looking at it very seriously.
So, of all the deals that you've done in your life, all the people you've sat across from and negotiated with, is President Putin distinct in any way?
He's a very smart guy. He's a very cunning person, but I've dealt with some really bad people. But I will tell you, as far as this is concerned, you have to understand, he had no intention, in my opinion, of settling this war. I think he wanted the whole thing. When I got elected, we spoke, and I think we're going to have a deal. I can't guarantee that. A deal is a deal. Lots of crazy things happen in deals, right? But I think we're going to have a deal. If I didn't get elected, I believe he would have just continued to go through Ukraine and over a period of time. A lot of people would have been killed. Would have lasted for a period of time. And the reason that Ukraine, and I have great respect for the Ukraine as fighters, they're great fighters, but without our equipment, that war would have been over, like people said, in a very short period of time. And if you remember, I gave the javelins, and the javelins are the things that knocked out those tanks right at the beginning of the war. They said that Obama, at the time, gave sheets, and Trump gave javelins. Well, I was the one that did that, but I want to see it come to an end.
Will he have to make concessions, President Putin?
Yeah.
No.
He's going to have to. And I believe that because we got elected, that war will come to an end. And I also believe if we didn't get elected, if this administration didn't win the election by a lot, that war would go on for a long time, and he would want to take the whole thing. The big question I had is, does he want to take the whole thing? But the reason, and the Ukrainians are good fighters, I have to say, but without the equipment. Without our equipment, we have the best equipment in the world. We have the best military equipment in the world. Without our equipment, that would have been over very quickly.
What concessions would you like to see? What concessions would you like to see?
Oh, I don't want to tell you right now, but I can tell you that NATO you can forget about. I think that's probably the reason the whole thing started. And I think, JD, we can say that. What, do you have a statement on that? You've been very much involved. I gave him the beauty.
Right. Maybe the hardest question, sir.
Damn.
I mean, look, as the president said, we're not going to do the negotiation in public with the American media. He's going to do it in private with the president of Russia, with the president of Ukraine.
Come on
and
now.
with other leaders. And I think that's how this has to go. I think I just
The
want
Trump
to push back
effect.
against some of the criticism I've seen in the administration on this, because every single time the president engages in diplomacy, you guys preemptively accuse him of conceding to Russia. He hasn't conceded anything to anyone. He's doing the job of a diplomat, and he is, of course, the diplomat in chief as the president of the United States.
On the gold cards, a little bit more about the vetting process, you know.
We'll go through a process. The process is being worked out right now, and we're going to be very careful.
Will there be restrictions on, for instance, can Chinese nationals get
No,
one?
we're
Can
not
Iranian
restrict-
nationals
We're
get
probably not going to be restricting too much in terms of countries, but maybe in terms of individuals. We want to make sure we have people that love our country and are capable of loving the country.
Exactly.
There's a measles outbreak in Texas at the moment in which a child is reported to have died. Do you have concerns about that, and have you asked Secretary Kennedy to look into that?
Well, why don't we, Bobby, do you want to speak on that?
We are following the measles epidemic every day. I think there's 124 people who have contracted measles at this point, mainly in Kings County, Texas. Mainly, we're told in the Mennonite community. There are 2 people who have died, but we're watching it, and there are about 20 people hospitalized, mainly for quarantine. We're watching it. We put out a post on it yesterday, and we're going to continue to follow it. Incidentally, there have been 4 measles outbreaks this year. In this country last year, there were 16. So it's not unusual. We have measles outbreaks every year.
You sound a little under the weather yourself right now. Are you all right?
I have a permanently bad throat.
Mr. President, would you send U.S. peacekeepers to support the European peacekeepers? Would you do any sort of U.S.
No, we're going to support Europe, yeah.
And how would you do
We're
that? How
very
would
friendly with Europe. We have a great relationship with Europe. I mean, you could ask, you could talk about France, you could talk about any of them. I mean, we have a great relationship with Europe.
But how will the United States do that? Would there be boots on
I
the
mean, you're asking me a question, what are we doing in the field? Let's worry. I hope we have that problem where we can worry about peacekeeping. We got to get there first. But I hope we have the problem of worrying about peacekeeping. That'll be the easiest problem, I think, JD, that we've ever had.
That was part of the deal, presumably, that the Ukrainians would
We'll do
want.
it at the time, but peacekeeping is very easy. It's making the deal that's very tough.
Break it.
And again, nobody was speaking to Russia at all. And, probably 1.5 million soldiers have been killed, close to 1.5 million soldiers, not to mention a tremendous... I will tell you, the thing with that horrible war that should have never started, would have never started if I were president. And it didn't start for 4 years, and it was not even thought about starting. But the thing with that war is that you're highly underestimating the number of people that have been killed. Far more people have been killed in that war than you talk about. You like to talk about numbers like 1 million people. Well, they had much more than 1 million soldiers killed. But you have a lot of cities that have been knocked to the ground. They're demolition sites, literally demolition sites. Every single building is knocked to the ground. And a lot of people were killed in those buildings. And you'll hear a report, 2 people were minorly injured or just injured a little bit. No, people were killed by the thousands. And there are a lot more people killed in that war than the media wants to talk about, because Biden did a horrible, horrible job. He should have prevented that war. He could have prevented that war. Putin would have never gone in. I'll tell you one thing. He would have never gone in. That war would never have taken place if I were president.
I think what people are trying to understand, Mr. President, is how would the United States, what would you...
He can say it 1,000
to
times,
support
and the media ain't
this
going to listen to him.
peacekeeping effort? Would there be...
Again, you're asking me this.
He could say that 1,000, 2,000, 5,000 times, and the media just won't believe it. They just won't believe it. Not any of them liberal medias will do it. I believe it. That if he was president, we would have not had all this death, or genocide, or anything. 2 genocides in 2 different countries.
And until 4 weeks ago, nobody had conversations with anybody. It wasn't even a consideration. Nobody thought you could make peace. I think you can.
But if
Mr. President,
Putin gets to
just to
keep
bring this-
the land that was claimed by force, if the Russians get to keep the territory that they claimed by force, doesn't that send a dangerous message, let's say, to China about Taiwan?
Okay, you try and take it away, right? We're gonna do the best we can. We're gonna do the best we can to make the best deal we can for both sides. But for Ukraine, we're gonna try very hard to make a good deal so that they can get as much back as possible. We want to get as much back as possible.
I don't need this to go any lower.
We'll cut it out after maybe this question. Go ahead.
To bring this full
Well,
circle,
get out.
back to a question.
You always like to finish on a good one.
So they want you to negotiate with them instead of with President Putin.
Back to a question
about the peacekeepers. You have a lot of confidence in us because you assume there's going to be peace. You know, it's possible it doesn't work out. There is possibility. But I hope it does for the sake of humanity, because if you look at the pictures that I've looked at, you don't want to look at them. Go ahead.
I have a question back on these cuts to the federal workforce. You mentioned you're interested in doing another round of this email. When would you like to see that? What would be the deadline? And this time, would it be mandatory?
I think Elon wants to, and I think it's a good idea because, you know, those people, as I said before, they're on the bubble. You got a lot of people that have not responded, so we're trying to figure out, do they exist? Who are they? And it's possible that a lot of those people will be actually fired. And if that happened, that's okay, because that's what we're trying to do. This country has gotten bloated and fat and disgusting and incompetently run. I think we had the worst president in the history of our country. He just left office. I think he's a disgrace, what he's done to our country by allowing millions of people to come into our country like that. And all of the other things, the inflation, which he caused because of energy and stupid spending, to spend hundreds of millions, trillions and trillions of dollars on the Green New scam, a total scam. I have the best energy people, the best environmental people in the world around this table, and they can't even believe he got away with it. And then in leaving office to send $20 billion here and $20 million there and 10 million and 5 million, and they couldn't spend the money fast enough, and let's get it out before Trump gets in, let's just get it out to anybody. And this is a disgrace to our nation, and you don't write the fair thing, but look, you know, the good news, the people see it, and that's why we won the election by so much. Thank you very much, everybody.
Thank you, guys. I'll right back here.
Thank you very much. Pulitzer Prize.
Sir, how many peacekeepers are you going to send there?
What will you do? How will you dress? Lawrence, look at Lawrence. This guy's making a fortune. He never had it so good. Lawrence, say we did a great job, please. Okay? Say it was unbelievable.
It's always great to see President Trump just even joking around with some of the press there.
We need a reversal. He's done talking. Now bump. Like, I'm going to take a little break. George,
their Agent Force
I'm still in
AI
this trade.
platform, which is essentially
CRM
the core
earnings coming
artificial
out.
intelligence platform, which again they spent a lot of money to integrate it with their Customer 360 platform, which is, we know, their core CRM technology.
George, it looks like from what I read, the Agent Force has had some early success, but it appears to me, from what I read again, that Mark Benioff is focusing on reducing costs. And they'll spend on things, but he's reducing costs and he's working on free cash flow. So this is a company that's kind of exiting the growth phase and kind of moving into the profitability phase of their lives, George. Is that the fact? It looks like they're really working on the cost side of the business.
Very much so. I think that's where there may be, again, some parallels because, what you mentioned just a moment ago in terms of the cost savings initiative from the business, the efficiency aspect of their business, that seems to match the earnings growth estimates
that's
from
good
consensus
stuff.
on Wall Street.
I'll be right back.
I agree with you too, because one of the things about Salesforce is they're not bashful on spending, and they have been one of these serial spenders, whether it's Tableau, MuleSoft. These are data integration or data visualization companies. Slack was another acquisition they've recently made in the past few years. So they spend a lot of money, but at the same time, you do see these ebbs and flows in the price action as a reflection of that spending. So I suggest perhaps what we're seeing is a maybe a better manifestation or integration of that new spending, new technology developments, and again, if you add in some cost savings initiatives, that may be a catalyst for the stock to kind of get back out of its 1-year slump. So I think, again, in the context of what's happening from the technology stack standpoint, software application seems to be where the relative strength is compared to the semiconductor space. It's not to say that NVIDIA or Micron can't go up based on NVIDIA's earnings after the bell, but it seems to be that the software enterprise names are picking up here, and that includes Workday and perhaps even here Salesforce.
George, real quick before I let you go, trailing PE above the 50 level, is this thing as far as valuation looking forward? I think the forward-looking one's just below 30. I mean, when you look at this valuation in this space, is CRM in the middle or is it high?
Well, if you look at it relative to its own historical, it's actually trading at a lower discount, if you will. I mean, its 5-year historical forward multiples around 43 times. Now, if you look at based on 2026 estimates and you round it up, it's around 27 to 28 forward multiple. That's cheap relative to its 5-year average, but you also have to consider that the sales growth, which was in the mid-teens over the last 5 years, is now in the high single digits. But I think the kicker here is that if you look at the earnings growth estimates or the percent change in earnings growth, they're expecting 20%, and that's actually higher than their 5-year average. So it seems like there's a lot riding on expectations for efficiencies, cost cutting, and again, maybe a couple of quarters where they let their technology manifest and flourish versus, again, making a lot of CapEx or acquisitions.
All right, great breakdown for us. That's George Tilla, Senior Markets Correspondent here, giving us good backdrop for CRM and earnings. So, Kev, I looked at this stock. The option maker, market maker move is $26 either way, but it's a $308 stock. So it's an expensive stock on a dollar basis here on this one. It's lagging. So I looked at it, Kev, based on the fact that, hey, it's got a $26 market maker move, but look what Workday did. They gave some good numbers. Is that an omen for CRM? I don't know, maybe. Who knows? But the stock's been lagging its performance. It's off 16% from those all-time highs that we saw just a couple months ago. So I looked at a strategy that takes advantage of vol dispersion like your calendars, but I did a call diagonal to the upside here where I went out to the March 7th weekly options that expire 9 days, bought the 310 strike call, and then against that in the February 28th weekly cycle, sold the 330 call. So just a $20 wide bullish call diagonal. Paid a $9.50 debit for that one. That's what we've got up there. You can probably get that for $1 cheaper because, as I said, the market sold off here a little bit from session highs. The stock's moved down a little bit, so you can probably get it $1 cheaper. But if you pay a $9.50 debit, you got $950 at risk on that position, with the apex of profitability being at or near the 330 strike. But Kevin, this is all about a $20 wide call diagonal. You're paying less, right now, less than $9 for it.
Yeah, the key there is you shortened up your dates, right? This is a 1 week diagonal that if you get the move you're looking for, it pays you better. But you don't have is duration. You only have 1 week on this trade. But Tom, you can learn something from you being our viewers, from Home Depot and Lowe's, right? Home Depot beat, Lowe's was a day better, similar outcome. If Workday's rallying, maybe, we're not sure, we have no idea, but maybe there's some parallels there to Salesforce. The risk on this trade, whatever it is, whatever the debit paid is the risk on this trade, Tom.
Yeah, stock's trading about 308. Break even, anything probably above the 313, 314 level is going to be profitability on this one. So you don't need a massive move to the upside. That one standard deviation moves about to 8.5% or so. But that would line up right near that 330 strike. And because you're paying less than the width of the call diagonal, anything above that break even is going to be profitability. You have some assignment risk on that. But the vol dispersion is why it's cheaper than the width of the call diagonal. 74% implied volatility you're buying in the March 7th weekly options on the 310 strike, selling about 142% in the near-term Feb 28th 330 strike call. So keep that in mind, but you definitely need to move to the upside on that one. All right, that's going to wrap it up for us today here on Fast Market and NVIDIA Day, but stick around right here on the Schwab Network. We're going to talk NVIDIA some more, I'm sure, on Next Gen Investing.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Jen Investing. I'm Jenny Horn, joined of course by Alex Coffey. And Alex, another day of actually like the perfect inverse of where we started our show yesterday at the central hour here in Chicagoland at around noon. So we are actually higher in three of the four major averages, with then weakness in the Dow. Yesterday the Dow was our one bright spot of the rest of the pressure we were seeing.
You know, an hour ago, thereabouts, it kind of was starting to feel like, oh, is this just another one of those V-bottoms, all the selling is over? And granted, we're still up 12. Okay, this brings me back to a conversation we might have just had yesterday where I was like, hey, we're basically down the same amount as we were to end the day, but there's drastically different feelings to it. Well, we're now up 14, and I can tell you, it felt a lot more bullish down 25 when we started the show yesterday than it does right now up 14, because we just were up 50. Now we're up 12. There's a very big difference between being down 75 and then suddenly down 25 and being up 50 and now up 15. So the market would like, the market bulls, I should say, would like to see buyers step in here. But that's just kind of how I see it right now. We're basically in just a little bit of a battle. Volatility is here.
Volatility is here, and I think that's a great way to frame it, and also the importance of looking at the market. I mean, like it depends on where you checked in on the market today, because you could definitely have a different sentiment, different tone on today's activity, depending on when you tuned into the market. So I think always the importance of like relativity, like when you feel bullish on momentum, and then you look at where we are right now. We'll have to obviously see where we close today, but
weirdly too, some different kind of moves under the surface. Apple's kind of weak today. It's been strong throughout this entire move. Alphabet weak today. Tesla continues its slide. It's now below 300 comfortably. And AppLovin, the stock that I thought, you know, never was going to go down again, is down 11 point, no, let's just call it 12%. Let's do some rounding. 12% today. This stock's in free fall.
you know, this is like one of the most compelling stories now of this year. AppLovin. Who would have thought we would say AppLovin so many times? But yeah, in free fall today. Of course, it's NVIDIA earnings day, so that's really where we'll start off our coverage on this show. We will be looking at all of the names that are tied to NVIDIA, as well as expectations for the behemoth that is NVIDIA after the close today. Also, we have some retailers reporting, so we'll dive into what we can expect from those names. Also looking at Salesforce, which is a name that's up now modestly on the session here, about 0.6%. We will look more into the overall focus on AI and some of the ancillary names there, but we'll close things out actually with the ticker AI, of course being C3AI. Also ahead of their earnings. So an earnings-focused show, as well as some earnings reactions we'll go through. But again, it's NVIDIA earnings day. So fourth quarter earnings out after the close. A lot to be excited about today.
There is a lot that the market is sort of on edge about. NVIDIA earnings, I think, being the key to that. Let's get into that. Up, out, down, but not endorsements, not recommendations. Starting with just that, Jenny, which is NVIDIA. It'll kind of, you know, it'll be the key theme throughout the program for sure, but we'll start as a lead basically here with NVIDIA. I think you have to. I mean, this is a name that has dominated the AI discussion, the growth discussion, the stock market's performance discussion for 2.5 years now.
And I mean, with a volatile now kickoff to 2025, I do think that this is the name where I have gone based on my hunches, which have, I mean, truly like no educational grounds, just like based on performance. I've been saying for quarters and quarters now, we're going to see nothing. It's going to be a muted reaction. I actually think this one could be kind of interesting because we had that massive, I know, buckle up. And I could obviously be entirely wrong, and this is anyone's guess, but after the DeepSeek, I mean, demise of NVIDIA shares, we saw the company lose about $600 billion in one single session, just shy of that figure actually, but that is the largest one-day drop we've seen of any single company ever by a lot. So that was substantial. That was also a massive repricing event. We've also then seen some more catalysts come in and provide more downside, like the fact that there's tariffs and there's an unknown relationship right now between the US and China and what that looks like for NVIDIA's exports. So there's a lot, I think, riding on the commentary of Justin Wong, who's been able to frame a lot of these earnings calls so perfectly that based on past earnings movements, which I know that past price is not indicative of future performance, I think this will be an interesting one. In the past 2 years, NVIDIA has more than risen 440%. It's been, at times, the most valuable company in the U.S. with a market cap of over $3 trillion. However, the stock's meteoric growth has notably slowed in the coming months. It's trading at the same price as it did last October. and slowing the company's appreciation are questions from investors on what they do next and if they can continue to grow at this clip, which I know has been a question from us for quite some time. I mean, you got 72% expected revenue growth. How can you maintain this pace? You can't.
Yeah, year over year, it's not going to, more than likely. But sequentially, they're still, basically being estimated to grow at like a 10% clip quarter after quarter after quarter, which at some point, that doesn't seem sustainable either. But if you look at market expectations, that's essentially what's priced in basically for the next year. And so if they can deliver strong guidance when it comes to sort of the Blackwell, which I think is really supposed to kick off in a couple quarters. It's not quite ramped up there just yet, but if that news is good, yeah, absolutely. I mean, I think that this is a stock that's been mid-range, has gone kind of sideways. Maybe it's coiled up for this move, but how much of that is kind of already understood and priced in by the street? When you look at performance in terms of the moves around earnings, there's actually a couple pockets of pretty unchanged moves. The last one was 0.5% higher. A few quarters before that, you had 0.1% higher. You had one that was down 2.5%, but then within that you have a 24% move, you have a 16% move. So it does feel like this is either like fought to a draw or you have like a massive, massive move.
Yeah, and whether we get one or the other, I think is anyone's guess, but we'll be watching these very closely, and I will be personally tuning into this earnings call because I always think it's best to get this from the direct source, being NVIDIA themselves. But next name today here is Snowflake, which also has some earnings still ahead here, as Snowflake earnings now also on deck. Revenue is expected to rise. There are still some broader risks, though, when looking at this company as well. So, cloud-based data storage company Snowflake scheduled to report after the close today. Street's expecting around 18 cents per share on earnings of revenue of $957 million. Product revenue, which is one of the most important metrics within revenue, is expected to total around $914 million, which is substantial growth from around $738 million reported just a year ago. So, Snowflake shares have risen modestly to start this year. Not, though, really on a 12-month basis, as we've underperformed the overall market pretty substantially. Now, a hefty valuation as well as the CEO departing and an ongoing competition looming risk, I think, from so many of its closest competitors now has put it at, I mean, all things considered, it still trades at 170 times its expected earnings over the next 12 months. But this could discourage some buying. We saw a massive repricing to the upside after its last earnings report, so it's actually been able to hold on pretty decently, but again, a name that's looked pretty disappointing when you zoom out, look at the last 12 months or so.
Yeah, it's been volatile in its own way. Earnings in particular have been volatile for this one. The average move up or down for an earnings event is 12.2%, and the implied move is sub 12%. So that's kind of an interesting dynamic that's at play. Last quarter was up 32%. The quarter before that, down 15%. It has a down 18% in there. There has been big moves with this name. 3 of the last 4 have been negative. The exception being the 32%, just absolute home run hit by the company last quarter.
I know, and I tried to go back and find what was so liked. I think like the expectations for now and upbeat, really earnings and revenue for the rest of this fiscal year. But yeah, they're massive, massive moves. That just goes to show Snowflake a fun one on earnings at least. There's definitely that to consider. Next name today is Urban Outfitters, which is one that is near and dear to my own heart because Urban, of course, within the Urban Outfitters brand, which I think I've aged out of now, I've decided I'm too old for, but Free People, Anthropologie also do fall under that brand. I use their rental service as well, so I am all too well versed in the urban sphere of retail.
Anthropologie is definitely, I mean, I guess I can't speak to Free People. I think it's a pretty high quality too, but Anthropologie is an elevated quality when you're comparing it to Urban. Urban's the budget value brand. Anthropologie's got some good stuff.
I would almost put it in tiers with like the age in which it targets too. Like I think it's like Anthropologie is the most high end, and like Free People's like middle tier, probably like around my age to a bit younger than Urban. I've decided now, walking into the store a few times recently, I'm too old. I have to
college, high school. Yeah.
Yes, I have to stop going to the Urban Outfitters.
Anthropologie too, not just apparel. It's got other, stuff for households and stuff. I know they got those icon glasses that are really popular. So
they have very, very expensive candles that now are throughout my apartment. Yeah, so with Anthropologie, not cheap, but it's like the to me, the ultimate vice place. If you ever need something for your home that you like don't necessarily need, I say need like very frivolously, but nonetheless, I think that
Retail therapy.
Retail therapy, exactly. It's all things I just moved, so I'm like it's on my mind. All the things I bought that I absolutely did not need. But nonetheless, for earnings, I do think that it puts them in a bit of a different than bucket, considering they're not just a true apparel company. They do have that exposure, as Alex mentioned, to homes and home goods, and again, a more typically high-income consumer that's more inflation-proof. Although what we've heard across the board is everyone's looking for a good deal right now. We saw last quarter they were able to beat expectations by about 2% for revenue, which was about 6.5% year-over-year growth, revenue of around $1.4 billion. This quarter, we're expecting revenue to also rise about 9% to $1.6 billion, improving from the 8% increase of growth pace we saw last year. Adjusted earnings at around 95 cents a share. So based on its peers, which I think difficult to put retail in a bucket, we've seen very mixed performances from retail. So that I think then sets us up in a very interesting way into Urban's print here.
You know what else is interesting? We were just kind of talking about Free People, Anthropologie, Urban. And when I was just listening to you, you were basically describing an Anthropologie might be a little bit more likely to be somewhere you spend money, certainly Free People, but not Urban Outfitters. Well, you're not alone. Expected same-store sale declines at Urban Outfitters of 4.5% there, about 4.4%. Nearly 10% same-store sales increase at Anthropologie and about 9% at Free People. So those two brands are keeping this company afloat at the moment because it's not Urban Outfitters. Urban Outfitters is a disappointing part of their brand at the moment.
I love that because that's the power of the millennial, because the millennial is going to those other brands and the Gen Zer I think is going to Urban, at least. Again, based on my sample size of being in these stores way too frequently as of late, and the Urban in the city is definitely more catered to a younger demographic, whereas like Anthropologie, yeah, just based on price tag.
Anthropologie, the biggest too, about $750 million in revenue at Anthropologie. If you add the other two, you get about $750 if you just hit expectations.
That's a great fact too, because I would say that Anthropologie, a lot of times actually people don't even know it falls under the Urban brand, so it makes sense because it basically could be a standalone brand on its own. Now, last thing today is actually one of the more interesting charts we'll look at, and this would shock you because it's eBay. And I've been, I was admitting I've been to Anthropologie and Urban far too much as of late, but eBay has been on the top of my browsing list because I think this is so fascinating. There's this like upcoming, or I guess here, trend that is people looking for luxury or namesake type brands, retail. I mean, all of these like sneakers, it just goes on and on, and they're looking to eBay for this reseller market. So I didn't realize the massive presence this has now in the like luxury trade goods space, but it does. Also, the sneakerheads are very much a fan of this website. The website itself doesn't look like it's changed since about 1999, to be quite honest, but this name has been able to hold on to it, like a lot of its loyal really consumers, but also gain internationally. So we're expecting some pretty nice growth this quarter, but I mentioned the chart is the most compelling. I mean, we were at 52-week highs earlier today, still about $10 or so off all-time highs, but rarely can you see that in retail right now.
What really shocked me was I was looking, how has this company fared through earnings? Because I don't think of eBay as like this giant growth opportunity. Now, maybe it's changed its image, maybe it's bouncing back, but certainly in the last 10 years, I would have thought it's had some disappointing quarters. Not really. It's only missed earnings one time in 10 years, which is incredible to me. Now, it's been down on earnings. It almost looks like I'm just eyeballing it. Let's call it almost 50-50, one way or the other, which is common for a lot of names around earnings. But actually, reported EPS versus estimate, only one miss, and that comes back in the first quarter of 2018. So a consistent performer, average move around 5.5%.
Okay, so I guess Urban Outfitters who? Anthropologie who? eBay is our consistent earnings player, and maybe even looking better than, no, very different. I can't even make the joke in comparison to NVIDIA, but a name in the e-commerce world that definitely impressed me, and then I went on and I saw all these various like storefronts within eBay. Definitely check out the website if you haven't in years like I have.
NVIDIA's missed 3 times in that time frame, but it beats a little bit bigger when it's been beat.
Just a bit of a bigger company too, but we'll actually be looking more at the chart of NVIDIA as well as the chart of Snowflake. We'll look more into our technical names that are in the tech world, as well as some example trades. Stick around, we'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. And joining us, of course, is our Chartmaster himself, Rick Ducat, to help us look at the technicals. We'll start off with the behemoth that is all things NVIDIA. I'm sure just your first time talking this name today, but I will say, earnings out today, we talk about the ways in which momentum slows, oftentimes wanes on these days of earnings. For NVIDIA, I feel like historically we've actually seen pretty muted sessions into the print and then some of the volatility that follows. But today, actually making a pretty substantial move to the upside. So a lot of that volatility we're already seeing today into the print.
Yeah, and when we look at year-to-date, on a year-to-date basis here, really not a whole lot of net movement here. So that period of waning momentum, I think you could argue extends back even further because we have been range bound more or less for months here. Look all the way back here, we established a low point here near about 113. That was our recent low as well. It happened to coincide with our purple 252-day exponential moving average. Now notice as well to the upside, we have this area here, 149. That's kind of the ceiling that we've formed during these past couple quarters here. So now I think you could also make the case that we have a long-term upward sloping trend line going across the lows in white here and a shorter term downward sloping trend line starting with this high here and connecting these subsequent peaks to give us this more triangular shape here, which suggests a period of kind of declining volatility of lower range in which price is moving here, which often can be a precursor to high volatility when one of these well-established boundaries does get broken here. So now we can see as well that we have a confluence of our two moving averages here, our yellow 21-day and orange 63-day exponential moving averages right near 133. Price has so far struggled to retake them today. We haven't made much progress beyond that area here. So one point to consider as we head into the close of this trading day.
Okay, so as we head into the close here, of course, making a decent jump today, what are we watching as far as some levels of support and resistance?
Sure, volume nodes on our volume profile study can be ways to assess the heavy trading areas and the important price levels. By that measure, we have one node here near about 137 or so, and another one here near about 123. Those are the two closest areas here. So those could be levels to watch, especially because our lower node area almost lines up with our trend line. So a big push beyond that level could be a warning sign here. And then ultimately around 113 would be another key area to watch to the downside. To the upside, we've got our recent highs here near about 142 or so. And then the high point where we topped out repeatedly. In terms of closing prices, at least, we did make intraday highs beyond this level. But in terms of closing prices, we were right around 149, 150 or so. And a quick look at our longer term chart as well. Our 5-year weekly chart, you can see the extremely strong rally here that has given way a little bit. We haven't made a ton of upward progress here, but not a ton of clear volume nodes either on this longer term chart until you get much
well, the market sold off quite a bit here. I just took a little nap. Feel like I want to take another one. I don't know how long I was gone. Didn't even look at the clock. So what's NVIDIA doing now? They pulled back with everything else? Yeah. Tesla's at 295. I got 277 for it.
We have tested our Orange 63-day EMA today, but we've failed to recapture it so far. So that would be another important level to watch. And much like our last chart, we once again have a notable low point, our post-earnings gap up low that we established here, and then it roughly coincides with our purple 252-day EMA. So 153, 154 could be an important area to watch to the downside. Notice as well, momentum has suffered here. We have fallen below the 50 midline and our longer-term green trend line. Not uncommon for momentum to slow down as we head into earnings here. Nonetheless, not really what you'd want to see if you're bullish heading into this event.
Okay, yeah, so all that keep in mind. I mean, we are up about 2% today, so moving not really on any news, just ahead of the sprint. What are we watching again for? Some levels of support and resistance and just price that you think could be compelling again into earnings?
So we see our volume nodes once again, the standout price activity levels are here around 160 and here around 187 or so. 187 is notable because that was another important high point that we established after our gap up on earnings, and this gives us a resistance zone to watch between about 187, our red line where our volume node coincides with those old highs, and our post gap down high of 194. So between our red and pink lines could be an important area to watch. To the downside, if we were to break through our volume node near 160, we have that confluence that I mentioned earlier of the 252-day EMA and our recent lows near 153. If we were to move beyond that, the gap all the way down here, 133.15, pretty close to a big volume node as well. And the 5-year chart for some perspective on the longer term view, we can see a large fall from grace here. We are quite close to the longer term volume profile point of control as well. So this could be a key supportive area. It comes in near about 163.
Okay, so lots of things to consider for both these names, and of course,
Okay, I think
2%
I'm getting ready to
here.
watch this again.
I mean, is another earnings volatile player. So we'll have to see, obviously, how both of these do. Of course, framing a lot of that narrative on their earnings calls. Appreciate it, though. Rick Ducat, our chart master and our lead markets technician. Now we look at trading this name, Alex. And
59.90s.
well, I have this hunch about NVIDIA being due for some pop, but I could be totally wrong. Snowflake, on the other hand, had its pop. We had a 30% plus move on the back of its third quarter earnings. So that
We
makes
got a
me
double
actually
bottom with 3
nervous
black
into
crows.
This report.
Well, this trade will align with that view, looking for a fill of that gap essentially from the last earnings event, which would bring you back to around 135 on the chart. Looking at a 135 put calendar, selling this Friday, buying next
The
Friday.
59.90s.
50 cent, debit on the trade. That would mean you have $50 in risk. It looks like
At
a mountain
180.
for the risk profile. It peaks out at the strike, which in this case, Jenny, is 135. Looking for a down move. Looking to close that gap from the last big earnings pop. Again, 50-cent debit, $50 in max loss. Bearish strategy, but very customizable and can be shifted around.
59.90s at
What your
180.
personal opinion or outlook is for any name, not just Snowflake.
Yeah, and as a lot of you very distinctly pointed out, obviously a lot of this has to do with personal conviction, but also risk tolerance and assessing, like, you know, how much do I want to risk and what is my risk cap to the upside or downside for both of these names. But earnings definitely getting more interesting as we pick up into the back half of this week. We will leave it there, though, for Chartmaster. Now coming up next, time to talk another name with earnings still ahead for FOMO today. We are talking Salesforce, which is up modestly on the session here. We'll dive into sort of expectations as well as all things Salesforce, the once coined M&A king with Caroline Woods coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available
God.
anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm.
Well, that sucked.
Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading. Catch us right here at the New York
Didn't
Stock
hold.
Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we are talking Salesforce with earnings out after the close today. Joining us now to discuss more is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, what are we expecting from Salesforce? This is a name that has definitely tried to right-size its costs. I mean, it's definitely been focused on like closing a lot of its inefficient operations, definitely laying off employees. All that being said, though, we need to hear about some growth now from Salesforce.
Hey there, Jenny. Yes, it's also really trying to rely on AI to expand its customer base and to generate more growth. So we'll certainly be looking for any updates there. Salesforce, there's a little bit of optimism today. Shares up about 0.5%. But if you take a look, shares are down 10% this month heading into the report, down about 8% year to date. And then even the 1-year chart isn't all that impressive. It's only up about 2% over the past 1 year. So underperforming the broader market, about 17% away from all-time highs. So for a name that's really trying to capitalize on AI, not necessarily
You got a lot of work to here. 125, 120.
I will say though, analysts have pointed out that a name like Salesforce could actually be a winner following that DeepSeek announcement, saying that it enables seamless AI adoption, and companies like that could see an acceleration in demand, whereas companies that are relying on legacy infrastructure could be hurt by the
I gotta get myself out of trouble here.
Could be a beneficiary. In terms of the actual numbers, you can see here adjusted EPS $2.60 on revenue of $10.02 billion. That's about 8% revenue growth. Meanwhile, subscription and support revenue is expected to be up about 8% to $9.44 billion, and then professional services is actually expecting to see a deceleration of 4% to $515.09 million. So it's not quite the double-digit growth that we saw a few years ago, but investors have gotten pretty used to this high single-digit revenue growth from Salesforce the past few years. In terms of remaining performance obligations, that's a key metric that we watch for Salesforce. It's the revenue that's been contracted but not yet realized. Total, that's supposed to be up 11% to $63.06 billion. Current remaining performance obligations, CRPO, is expected to be up 9% to $30.09 billion, and then non-current is expected to be up about 11% to $32.47 billion. So all important numbers.
He puts things in simple terms. Puts.
The estimates from Zacks call for current quarter adjusted EPS of $2.59 on $9.91 billion in revenue. So that would be a sequential.
Yeah, I'm in the double bottom right now.
With that $10 billion revenue
or below it.
For the previous
Inverse head and shoulders.
I mentioned utilizing AI to grow its customer base.
At 120 and 180.
Attention to demand for its AI agent force, which was launched in November, looking for growth there to really offset some of that slowing growth in the customer relationship manager tools that it offers. On the Q3 earnings call, Mark Benioff did talk
I'm in a
about
little bit of trouble right now.
Around Agentforce with some 200 deals with companies like Ace and IBM and FedEx, but he said that doesn't mean anything because the pipeline is in the thousands of potential transactions that are coming up in future quarters. So let's see if what that number is looking like in the fourth quarter. There's been a lot of hope that autonomous agents, AI agents in general, will be, the next big thing, but we haven't seen that play out.
What are you in, Johnny Spy?
And we know that there's competition in the space too. Google has an agent, then Microsoft, of course, has Copilot, which Mark Benioff has been pretty critical of in the past, including on the third quarter earnings call. So something tells me that he'll probably take a few shots at Microsoft once again on this earnings call. And
yeah, you're in a little bit of trouble there.
From the information that Salesforce was actually in talks.
A little bit out of the money, but
as well as a few other names.
What's your entry? What's your average?
In terms of Oracle and Google about a cloud deal to manage its AI workload, but Mark Benioff had come out and said that was a false report. So I can't remember if we covered.
Let me look at it here in a second.
To note that as well, so we'll see what they say if there's any potential deals in the pipeline.
I'm about even now.
Shares are up about 0.5% right now, but still down 10% in February.
Caroline, it seems this company is doing what successful
I got an average
do,
150
pivot quickly when
in the
things
SPY.
are changing, particularly within the space of business that they operate. This Agentforce, though, does seem to be a really, really important move for the company. You see volatility starting to swell up. The company isn't as consistent as a performer as it was from a stock price standpoint. Kind of like Adobe, where AI might be something that helps these companies, but it might be something that sort of unseats them from their thrones within their industry. Analysts, though, largely still buying in, so maybe not as dire as it is for Adobe. And even just last quarter, there was like a 10% jump on earnings, so still a lot of good here. What are your kind of final thoughts or the general street consensus coming into this?
So SPY, we hit yesterday's close.
Yeah, on the whole,
you should be good right here. It should hold.
In terms of Agentforce actually driving meaningful revenue growth, there's still kind of a question mark around that. I've seen some say that they don't expect it to drive revenue growth.
If we can hold yesterday's close, you'll be fine. If not, we'll take another big dive.
Over at Wedbush's of the world, who, he says basically the AI revolution is entering the software phase in some major collaboration deals from Salesforce. But if you take a look at the overall breakdown, 77% of analysts rate Salesforce as a buy still. So it's been underperforming the broader market, but still a lot of bullishness on the street around that name. 19% rated as a hold and then 4% sell. The median price target is $410 a share, which represents more than 30% growth from here. So, I mean, back above the highs and even further past them, according to the majority of Wall Street analysts. So we'll see if today is the day that Salesforce can start to stop underperforming the market and start to catch up here.
No kidding. And I'm hoping, maybe I'm just optimistic today. I'm thinking everything that has earnings is going to rally, but we'll have to see when it comes to Salesforce. We're down about 8% on the year and about 16.6% from 52-week highs, but we will leave it there. Appreciate it. As always, Caroline Woods, Senior Markets Correspondent.
I have 592.79 for some reason.
Trading this name, and I think that this was at one point. I believe we looked into this a bit more, but I was just reading an analyst note that highlighted this as well. One of the most conservative guides we saw from the companies. They had a history of like 21 straight quarters of being able to beat, yes, but also with a more conservative tone from management.
Particularly on the revenue side, they only have one miss in revenue, basically going back to 2014, so let's call it the last decade of earnings events, and it was a miss by like 10 basis points versus the estimate. So let's call it an in line, but like slightly below estimates on over 9 billion. So truly in line. But when you're setting the kind of the benchmark is a company that says it's 75 and sunny, and then it's always 77 and sunny, a miss is disappointing, really disappointing, and it led to a near 20% decline in the stock. I think there are a lot of question marks.
I need a good bounce.
Right now. That said, though, this is still an industry leader, a best-in-class company when it comes to CRM software. And so I looked at a broken wing butterfly spread, neutral bullish, 292.5, 290, 280, all expiring on Friday. $1.50 credit, $2.50 wide debit spread, $10 wide credit spread suits how you do it for a credit. Max gain would be 400 if it perfectly pinned 290 at the end of the week. 290 also brings you down on the chart to a level where there had been some price action. And then if it does fall below there, break even is 286 with max loss basically taking its toll below 280, and in that case you have $600 at stake. So a chance to make somewhere between,
That's where I've got that head and shoulders at 592.79.
If it gets in between that sweet spot, if it stays out of the money, a chance to make 150 on $600 in risk. But a high probability trade with a break even at 286 on a stock that trades currently in real time.
I'm going to fill my water up and I'll be right back.
In cushion to get to that break even.
Okay, yeah, and the name that's making a modest move today, not huge, but we'll have to obviously see how we're able to fare. And I liked that analogy of like, oftentimes you're basically a forecaster that expects, certain types of temperatures. You're disappointed when you see the underperformance. Same to be said for a lot of these earnings names. But we'll leave it there for that conversation. Now, coming up next, it's time to talk super micro, as well as we'll be revisiting our NVIDIA conversation with a special guest coming up. But Supermicro still stock, what we can expect from the entire semiconductor world, especially with volatility and fireworks due out today after the close. We'll tell you more coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge
Market's
tools,
not too happy right
curated
now.
education and insights, and trading specialists ready to
There's
help
my final
you
support.
place the strategy. With a wider range
59, 50, 28.
brilliantly with Schwab.
No politics, no noise, from bell to bell.
I'm glad I didn't go in a lot, because that would have killed me.
Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing.
I might go in big
I'd like to
now.
welcome in Diane King-Hall, the host of Morning
A
Movers.
little bit too far out of the money, but
And Supermicro has been super much throughout our coverage. I couldn't think of a better pun there, Diane, but it's everywhere.
it's 1 o'clock too. It's not the best time.
I was like checking at before the deadline of the NASDAQ delisting yesterday. It's still stock, so good news. Bad puns aside, we are still talking about this way, maybe a supercharged way is a better way to segue there. But walk us through the thoughts and the latest with Supermicro.
No, I like the way you're characterizing this. I mean, we are seeing shares rally. Some of this may be a relief rally when it comes to Supermicro because there were a lot of questions swirling around this company, especially in the context of, it was running right up on the deadline to file its audited statements with the SEC. So according to their updated and audited financials, their Supermicro sales more than doubled in its fiscal 2024 to nearly $15 billion. So essentially they reached that deadline to by NASDAQ. NASDAQ, in other words, says they have achieved the goal that was in front of it. It doesn't mean they're completely out of the woods with regard to some risks facing it. They called out some risks in their financial reports, among them litigation risk, reputation risk. They, called out, without saying by name, the Hindenburg report. A lot of this had to do, the pressure that Supermicro had faced had to do with that report calling into question its accounting practices. And then following that, EY leaving it. They took issue, when you look at the filing, the 10K filing, I'm looking at it in front of me right now, with EY leaving them. They called out, they addressed the questions about rehiring some employees because that was one of the concerns that was around it. They said with respect to the rehiring of former employees, the tone at the top of the company was appropriate. This is a quote, fully consistent with a commitment to proper financial reporting and legal compliance with respect to they also say with respect to the matters investigated by the special committee. The audit committee demonstrated appropriate independence and generally provided proper oversight over matters relating to financial reporting. In terms of some of the analyst reaction, we are seeing Loop Capital becoming more constructive on Supermicro. They've raised their price target to $70 a share. Previously had it at 50. They have a buy rating on the stock, guys.
Diane, SMCI
We're at a
is
yin-yang.
all day long, continues to be up right now in real time, 12%, despite the fact that you now actually have a NASDAQ 100 red and an S&P 500 red on the session. So huge swings here on the broader market.
is.
Supermicro unfazed largely though, but appreciate the update as always. Diane King-Hall.
SMCI.
Morning Movers here on the Schwab Network. We're now going to shift gears, but not too far, as we welcome in Melissa Otto, the head of TMT Research.
That is
for S&P
phased.
Global Visible Alpha, to help us set up NVIDIA here into what's a very, very anxiously awaited report. Just give us your baseline kind of assessment of where things line up here. Melissa, thanks for joining us.
Thank you. It's great to be here. It's going to be an exciting quarter. I think coming into the quarter, no big surprises are anticipated based on Visible Alpha consensus. We have not seen the numbers moving too much since last quarter. Traditionally, NVIDIA's numbers do start to move a bit, and that's what leads to those significant revisions that we've seen over the past 6 quarters. So this one could be a bit more muted.
She likes to say quarter.
As we look to Q1 next year and this coming fiscal year, the critical thing is going to be how they guide to B-Series. Currently, we're expecting, based on Visible Alpha consensus, a couple of $2 billion in Q4 for that business, and then for that business to accelerate significantly in FY 2026 to about $81 billion based on consensus.
Okay, so as far as then maybe some surprises you anticipate to see, and thank you so much for being here. I'm curious what you think stands out as far as like what the street might not be pricing in, what we could not be expecting. Because I've been joking, I expect fireworks, but I think that I'm in a very small camp of people anticipating some volatility hugely on the back of this event.
Within that B series line,
I'll be right back.
there is significant debate in the market. We see a number of analysts clustered below $40 billion in revenue, and then we see a number of analysts clustered above $100 billion in revenue. So the way that the company guides and the type of commentary and color they give in the earnings call will be critical to determining how that ramps into this fiscal year. That could potentially be a catalyst and may create some volatility.
And so when we're looking at that, is that going to be something that shows up in the guidance portion of it, the conference call portion of this? It's probably, as you're talking about something that's happening in the future, I'm guessing it's not going to show up in this quarter's numbers. One thing that NVIDIA has done quite nicely in the recent, I guess, let's call it year, but really 2 years now, is that when it does report its numbers, it's just hitting the consensus out of the park. Do you see that happening this time around, or are we finally coming back to earth here a little bit with this company's just massive, massive beats?
Well, based on the company's guidance, they did call out that they anticipate the B series to generate around several $billion in this quarter. They've articulated that it's in production, and that, you know, I think where this gets really interesting is how does it go from a couple of $1 billion this quarter to $81 billion based on Visible Alpha consensus at the end of this year. So, or I should say fiscal year 2026. How that really truly ramps. And like I said, there's a significant amount of debate about really what that number looks like as we come into this next fiscal year.
So that's exactly somewhat of the
I'd say it was affected.
Why I expect maybe somewhat of an unknown when it comes to this post-earnings move. But what do you say to those that
Super
have
micro.
questions about DeepSeek and like the massive repricing?
I'm gonna look at my
concern
earnings
of
list.
The build of AI. I mean, is NVIDIA going to mention this on our earnings call? Are we going to see further updates? I have to imagine when you shed almost $600 billion.
We've got Mira coming out this week.
You're going to address this.
DeepSeek is an interesting model. I mean, they
AMC didn't do no good off earnings.
You know, they can do reasoning for a fraction of the cost.
Just a little bitty bounce.
One of the big obstacles with getting AI applications into production is the cost, and the cost is prohibitive. And so I think, you know, figuring out ways that have been proven to reduce the cost is compelling. It's, you know, I think it gets everybody focused on, okay, wait, how can we maybe be rethinking about this? What else could we be doing that may enable us to leverage this generative AI capability, but also not have to be so constrained by the cost.
Okay, yeah, and the cost is I'm sure going to be in focus, but like you said, I think there's a lot of other components to be assessing here, and we'll all be tuning in very closely, I'm sure. So appreciate that, and we'll be watching these numbers as they release. Melissa Otto, thank you so much for joining us. That's the head of TMT research for S&P Global Visible Alpha, previewing, of course, NVIDIA ahead of their earnings. So now coming up next, time to talk another name in the overall AI world with one of the greatest companies out there, C3AI, rightly so, ticker AI. We'll discuss more ahead of their own earnings due out coming up next.
My next support is 59.4307.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It is time for Under 30K. We're discussing C3AI, of course, the stock ticker of AI, highly sought after AI stock ticker. George Tillis is here, senior markets correspondent for the Schwab Network, to help us set up the earnings event for one of the first names, I think, George, that when you saw it moving the way that it was, and this would have been early 2020.
Tesla got 286.85.
It kind of told you that.
And that's right now. It's right down the linear channel on the 5 minute.
Trade that was starting to ramp up. It wasn't just a bubbly, oh, the stock
George.
AI, but it was more than that. The way that the stock was trading kind of suggested that, and it's remained relevant throughout. What are your thoughts on this company ahead of its release this afternoon?
Well, yeah, you're right, Alex. I mean, it was part and parcel of this big move we've seen in artificial intelligence, and when you look at C3AI, which is basically an enterprise artificial intelligence software and services company. The first company I really think of that parallels them would include companies like Palantir, but overall, we know that
This
there's
market's
been a
not in good
disparity,
shape.
In the AI arms race, and particularly companies that have performed well from a sales and even earnings standpoint. NVIDIA, of course, is the lead architect in hardware. Palantir, which has done extremely well to secure more commercial contracts on top of its government contracts for its artificial intelligence software platform. I think C3AI is certainly a player. I mean, they are, generating in sales around $350 million. They have big customers which utilize their enterprise artificial intelligence software, and that includes Baker Hughes.
There it is.
Oil and gas company. Booz Allen Hamilton is a major supplier of IT security for the Department of Defense. But if you actually look at C3AI in the last year, the stock is actually down about 8%.
I don't want to take another chance.
Actually has occurred in the past about 4 or 5 months. And if you look at companies like Booz Allen Hamilton, that stock is down significantly, and I think that is
That's almost a $60 sell-off.
Federal spending is cutting back, or the DOGE committee is cutting back on federal allocations to areas that are technology-centric, like defense spending, and that's where Booz Allen Hamilton.
The market just don't like Trump.
C3A's major customers. And I think it's also translating to potentially some of the weakness we're seeing in AI. But if you do expect the company to recover, they have to get over the hump of losses, which is still expected to be the case here for the upcoming earnings. They're expecting to lose about 25 cents a share. That's actually down about 90% compared to 13 cents loss last year. Now, sales are expected to be around 98 million for the quarter, around a 25% increase compared to 78 million last year. But one of the things about this particular name is they really have not gone through that threshold, and that threshold is break even, which seems to be that it's getting further out in time for this name. And particularly if you look at the estimates for 2026, this is the fiscal year, the earnings estimates actually were down from 26 cents of a loss to now 52 cents of a loss. So as time goes on, they're not getting closer to profitability. In fact, it's getting a bit pushed out further in time. And I think that's going to be the preliminary challenge in the stock going forward, just because there are other companies in the AI space that are profitable, and C3AI has not reached that threshold yet.
Yeah, and I think that is a great point, because I think we look at a lot of these names and the profitability and the cost of growing in AI. I mean, if you're not profitable yet on an earnings per share basis, I don't really know how you're going to promise all of this growth. I know that C3AI has been somewhat of our growth story, but now negative on a year-to-date, a year-over-year basis, on negative on the month. I mean, things looking just pretty dismal for this name. So appreciate that and appreciate the breakdown, George Tellis. As always, we'll be watching this name after the close, of course, today. A lot of things happening after the close today on this Wednesday. So Alex, just check in before we go. We are now lower in the 4 major averages. So the unraveling of that strength earlier today.
Yeah, this is a big turnaround. This is what I was saying. You look at a move. We were up 15 when we started the show. We're now down 10. Okay, that's only 25 points. But it just was so much effort. We were up 50 not that long ago. Only 189 S&P names are higher. So this day that was very, very bright green, suddenly becoming a little bit more deep red.
Yeah, and a little bit more interesting here, even as your names, you just saw the heat map. Apple now bouncing slightly off session lows, but Apple down about 2.9%. So
$7.
Yeah, pretty big move in Apple today. Pretty big move in Nvidia to the upside, though. We'll be watching that number as it reports. Now, that does it for Alex and myself for this show. Coming up next, we have the watch list with Nicole Pedalides.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking
One
and
ugly
investing
move.
in one convenient location. Moving funds between your accounts.
This kind of opens up your eyes about the volatility.
Is available in seconds. That means you can stop waiting and start investing in stocks.
I mean, look at this. We thought we were bullisher than heck today.
Get more with Schwab Bank Investor Checking. The checking account
Opened up with a
built
gap
for
and beat the previous resistance. And I scalped it a few times and then tried to scalp it again.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
We'll get my coffee made and try this again.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most
Citi says
popular
earlier
stocks
duties
and
of
ETFs,
copper
plus a wide
imports.
variety of futures markets. All with 24-hour
Citi
support from
says
trading
its
specialists
base case
who
is
understand
25%
the ins and outs of
copper.
24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Trump says tariffs will go on.
Morning movers, be the first to find out.
Not all, but a lot of them.
Action. Check. Options Corner. Futures Focus. Technical analysis. Morning movers covers it all.
SMCI regains compliance.
Trading day at 8 a.m. Eastern, only on Schwab Network.
They said it's drove the market Wednesday. I'm not for sure about that.
Good afternoon. Welcome to the Watch List. I'm Nicole Pedalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. So glad you are with us, where markets have turned back into the red like they have been since last Thursday. Here's what's coming up on today's show, of course, and by the way, Nvidia Day, right? We will talk about the new home sales data, missing the expectations, examine what it means for the housing market going forward. We'll also take a close look at Starbucks amid new CEO Brian Nichols' turnaround efforts at the company. And the latest in the corporate layoffs there for the coffee chain. Our panel is ready for NVIDIA. Highly anticipated earnings report. Everybody's been waiting for this one for about a month, and the day is here. Take a look at the markets. So we've been selling off since last Thursday pretty much, and gave it a go today only to see everything turn into the red. This as President Trump gave his first cabinet meeting and said the tariffs will go on. Not all of them, but a lot of them. Right now, you are seeing all the major averages lower after having green on the screen earlier today, and the S&P's back below the 6,000 mark at 59.35. The NASDAQ 100 is down 0.25%. The Dow is down more than 0.5%, and the Russell just right there on the unchanged line, but slightly negative. Oil and gold are mixed. Gold is gaining about $10, and oil is to the downside at 68.49 the barrel. Bitcoin not catching a bid this risk-off day, 84,070. That's down over 4%. The 10-year bond yield continues to slip and is at the lowest levels of the year, now at 4.26%. There you have it, $29.28 on gold, a troy ounce. So Kevin Hanks is here, host of Fast Market here on Schwab Network. So much to discuss. I mean, the market turnaround certainly grabbed everyone's attention here on Wall Street. The AppLovin story is now getting more in depth. I saw a little on that. Tell us about that.
Yeah, AppLovin is a software company for digital advertising, and there was two short reports came out on it today. First one, Fuzzy Panda, don't like the name. They say that you should short AppLovin, alleges that the company is stealing data from Meta platforms. And then Culper Research also said short AppLovin, said they are copying Meta platforms' work. So two companies at the same time talking about being short AppLovin and the fact that they are either stealing or borrowing or taking data from Meta platforms and using it for their work product. So interesting here, the stock is down significantly today, but again, a lot, these reports come out on companies and they have to be either refuted or the stock will continue on the downside. So interesting little note here from two different firms, Culper Research and of course my personal favorite, Nicole, Fuzzy Panda.
Yeah, and I saw a short time ago that the short reports targeting AppLovin were, quote, misguided. That's according to Wedbush. So now Wedbush says that they've been blasted by a series of short reports this morning. But over at Wedbush, that might include Dan Ives himself, that AppLovin, in fact, is, they're arguing whether or not they're committing fraud in this way, and it's highly unlikely that it has yet to face the legal challenges. So it's interesting to see Wedbush sticking up for them. I'm waiting for the real rebuttal from AppLovin. A stock that's up, almost 500% still over 1 year. But as you noted, those short reports, they talked about smoke and mirrors. Those are tough. You wouldn't want to own that stock after you read those. Salesforce, another name on your radar.
Salesforce coming out with earnings after the bell today. It's not just NVIDIA coming out with earnings after the bell today. They're looking for $2.60 in terms of adjusted earnings per share on revenue of about $10.02 billion. Now, Salesforce is kind of an interesting company. It's evolving as a company. I think they're getting great early success from their Agent Force AI tool. And not only that, though, but they seem to be going through a real transformation in terms of cost control and generating free cash flow. It's like CEO Mark Benioff is now focusing on profitability via costs and generation of free cash flow. So we'll see. The stock has been, up and down the last few months, Nicole, but earnings after the bell today looking for $2.60 a share. And like I said, watch for cost cutting for lower numbers in terms of revenue and sales and higher earnings per share. That'll tell you it's cost cutting.
All right. Hey, I got more for you on AppLovin. As I read through that report, that came in just before.
Well, they say cost cutting a lot.
We work together here.
from Wedbush. An outperform rating. AppLovin is at 3.
Wedbush.
3. So they are going hard.
Dan Ives.
Supporting AppLovin and saying, you know, they didn't necessarily believe all, you know, that has been said in the short reports. And also, why isn't there already an investigation underway? Why isn't there legal authorities? And they're just not believing. A lot of it may be misguided, they said at Wedbush. So they put a 620 price target on AppLovin. So there you have
Yeah, the stock's down 14% today. That doesn't mean that the short reports are correct.
Right. Okay. Okay. We'll be talking about this again.
Uh-oh, there's a fight on.
Thank you. Great to see you, Kevin. Now let's take a look at the bigger picture. Louise Gowdy-Wilmering's with us.
It's now 2:06. We still got like another 54 minutes before power hour.
Markets really began to sell off. President Trump has been speaking, has had his first.
I don't think I'd want to take this trade until it broke out of resistance.
There are going to be tariffs, maybe not all of them,
But we got a double bottom here.
Basically, and you know the headlines started to.
I mean, this is a big snake.
Started to steer back to the safe havens.
Makes me want to buy it so bad.
You're seeing 10-year bond yield now below 4.3 even. In fact, right now as I speak, it's at 4.25.
The 59
This
50s.
real nervousness a little bit. What are your thoughts?
I definitely think that investors are trying to get used to moving away from a momentum trade, and we're seeing the market move
Who's
back
this?
to more of a valuation trade. And you're seeing
We got a lot of new chicks on here today.
unwinding of some of those really high prices or multiples that some of the technology and communication services stocks have been trading at. People are moving to things that are maybe a little bit undervalued or
They are?
up from the prior year.
I wouldn't be doing that.
Yeah, I'm looking. I mean, pretty much every sector.
The first year, they're already in the books in terms of what the hyperscalers and the other large customers are going to do. It's the other things Christina talked about that investors are concerned about. What kind of sanctions are going to have on China? What did Jensen Huang promise President Trump when he visited the White House? How is Blackwell going?
Oh, God.
And I think you have to kind of have a bigger picture. Certain has the potential to move the market one way or the other. Most likely, it's going to be very difficult for them to excite the market with what they give us. But I think more importantly, the message is there are other companies that are still earning money. We've moved from, I guess, a regulation trade to a deregulation trade, and now to a tariff trade, and from a momentum trade to a valuation trade. Which, for example, I think in the staple sector, the reason that you're seeing some weakness is because Costco's selling off today, and one of the largest constituents in that sector. But you have to remember that Costco was up 40-some% in 2024. And similarly, Walmart was up 74%. These are not normal numbers. And once again, part of that momentum, AI excitement, how are we going to grow our business trade? So certainly it makes sense to diversify out and look for the areas that haven't necessarily participated in that huge momentum swing.
Well, this is what I'm thinking. Well, I just woke up from a nap about, half hour ago? It's been about an hour now, almost. I'm just now starting to wake up. And I was seeing if we're going to hold this double bottom. But right now, I think we'd have to break this trend line before I'd want to jump in a trade. Break it, and then retest it and come back. Better grab a small one. I could have grabbed some at 420 right there. The 59 50s are only 3 notches out of the money. And they were just at 420. I was about ready to grab one. That's a double bottom. See if it retests at 420 again. The 59 50s. Twisted Tea. Looks like it wants to break. Bam. There's a bit of $100 right there. We've got the snake. Okay, I'm going to give it a shot. $5, 59.50s. Hit 440. Fuck. We got the 1, 2, 3 right down here. Get ready. I'm gonna see if this fucker breaks. Break it. I'm in. $55.50's at 550 and 540, and we're at 570. Falling wedge. Did I say that out loud? Oh shit. Tight stop, falling wedge. I was going to put the chart in there. Yeah, the 59.50s. Now we broke out, okay, this is what we did. We broke out of the snake with a fallen wedge. If we break this here resistance, we're off to the races. Hello, Daniel. Now I'm up pretty good on these. They're at 1020, hit 1070. Or at 1020.
obviously that certainly spurs demand. That's actually what we saw.
We're respecting
during
the
pandemic
63 right now. You know, I think if that 9 crosses the 63, and we come up here one more time, that's an ascending triangle. So right now it's kind of like an ascending triangle. No, that didn't have to happen. Right now the fat cats are kind of don't know what to do. They keep saying rotate, rotate. What the heck are you talking about? I ain't rotating shit. I don't swing. See, these guys are in stocks and they're stuck. I've been advising everybody not to swing nothing. Just trade one at a time for right now until this gets ironed out, this first quarter in a way. And we're more than halfway there. Got one more month. And I think we've been lied to in the last 4 years anyway on the numbers. You've seen how bad the jobs report numbers were. And I think that's true of a lot of stuff. I've come to find out that this market's rigged. And I really never believed that for a long time until about, 4 or 5 years ago. I think we're going to break out to the upside. What do you think about it, Randy? 59.65.87. I mean, that's just a little recovery compared to what we've had here. That's not even 50%. So if you go back here, let's look at this. Let's put a Fibby on here. Come on. Go to that top, all the way to the bottom. Oh yeah, we could easily hit 59.62 easily, and that's that next channel right in there. And maybe back to the 50%, back at least back to the open price. And that's right there at the 200 EMA. So I set the Fibbies on it. Go, baby, go. Go, baby, go. 2468. Who do I appreciate? Booyah. Booyah. Captown races, 5 miles long. Fibbis. I wrote a new word. It's called the Fibbies. Run all night. Gonna run all day. Camptown races, 5 miles long. Somebody bet on the bay. Gonna run all night. Will you please take me to 5962.45, please? I'd really appreciate it. This is called a horizontal flag. 1, 2, 3, boom. They can pull back and hit that triple top. Gonna run all day. You know what really God damn, that looked like my ex-girlfriend. U.S. federal layoffs. Bye-bye. He's your president. You better pay attention to what he's got to say. You should have never weaponized the system like you did in the past 4 years. It's a big mistake. This is something that I like to play when I want to relax. We're going to play it here. because I want this thing to break out. Take me to $2,000. If you do, I'll be so happy. I will buy you a drink. No say, ooh, na na. No say, no say. Mi na na. No say, no say. I can't believe I've held these so long. So don't stop now. Blake it. Give me $1,500. Give me $15. We're at 11 now. 11:30. Break it. Na. Don't be saying no more. Me the Lord say. Say. We're at 11:20 now. 12:20. $13.50. $13.90. Ma. No say. They reached 14, yay, I got an A+. I'm still in them. Let's break. If it doesn't hold the 9, I'll get out. Come on, bitch. Don't be greedy. Okay. Don't be greedy, yeah. Oh, yummy, yummy. Now that, I can deal with that. I'll take you first, then you, and then you, and then you. Oh, you, yes. And this girl here. I'll take them all. All of them. They're all barefooted. Oh my gosh. And there's a shoe store. Oh. Don't you say no more. Don't say no more. Come on, baby, break. Let's get 5964.29 cents, please. Or a 5962.45. I'm 2 notches above the money now, too. I think that was a perfect trade. I wish I could do every one of them like this. Falling wedge, call it out before it breaks out. Once it breaks out with a big old hammer, jump in it. Then it dips on me and I buy another one. Now I'm forming another flag here, so I got to make a business decision real soon. It's kind of getting tired out, but we've been here before. But this has a lower low, lower high, so that's a little concerning. This one didn't. Hello? Donald Trump? May I help you? Yeah, I got your letter. Did you not see on there that I shined your shoes last week? Got a bold flag here, buddy. Say something nice. Say you're going to stop the tariffs. Where's your bold flag? You don't say no more. Please don't say no more. Oh. Yeah. We pray for you. Come on, baby. Well, I'll tell you, little fella, when we're out on the range, we don't have any cell phones or computers. All we got is this 6-year. And when you see a bull flag, you want to stay in the trade. As long as you hold that 21 EMA, my friend. Now, how much water do you have left? You better hold on tight to what you got. We got about 10 more miles to go till we hit Dodge City. Then we'll meet up with Jesse James. You know, that neighbor of yours from Missouri. Him and I have had a few rounds before. Dirt's dropped. Come on, baby. Let's not get too scared here. I'm at the 63 now. This is my last resort. Look at the elephant. That's too cool. What the hell? That is too cool.
File your taxes free.
How dare you interrupt that song? That was not cool.
In a snap with the TurboTax app and get your maximum refund.
That's just too funny. Hippos. Okay, I've had too much fun there. Let's break up to the upside now. I can sell them here. Then I do it and it pops. There's some pretty drastic changes on these prices. We got 4 minutes to power hour. Yoko said put. Three black holes. It's been a very profitable day for me today. I can't complain. Besides getting it stuck in that one trade. Looks to me like we could have a reversal to the upside here. Definitely went below support though. Left a little bit on the table that time. 860, I could have got 14 or 13 at least. I'm thinking about getting back in these here again. There's support right there. Are you out of your puts? $59.39.64. There's your shoulder right there. $59.39.64 has to hold. Nope. So then the right shoulder's right down here at 59.3506. If this doesn't hold, I think I should jump in. We got an inverted hammer and a long leg doji. You can see me na na na. Yay! I'm up. We're at $5 now. Ooh, Jose. Thank you for that A+. They're magnificent. I was waiting for Yoko to give it to me. Okay, we're at a double bottom now. I think right now you need to think like these fat cats. They are not bullish in this market. They've been telling you that right and left. Now they're taking action. There's going to be a lot of volatility. We're taking away their they've been very dependent on the government. They've been very we've gave them $36 trillion since Obama took office. And really Bush started it by handing out stimulus checks during COVID-19. When that day happened, capitalism went down the drain. I was happy to get a refund because I paid so much in taxes. At that time, I had my student loan, and I had been audited twice during the Clinton years through my picture frame shop, so I wasn't really happy with the government. And then we had 911. We got them stimulus checks. I got 3 checks for about $400 apiece. And that's when I bought my first computer. And that's when I started to learn how to start trading. So I predicted 2 years in advance that we'd have a crash, because about that time Obama started running for office. And all he could do was complain and bitch about Wall Street and the fat cats. That's where I got the fat cats from. I've been saying fat cats ever since. And then he ends up being in bed with them, becomes a multi-millionaire worth over $200 million. And he's in bed with the fat cats. That's who he hangs around with, the billionaires and the millionaires. So all that time was a big fat frickin' lie. And then they did Wall Street reform because retail traders started coming into the scene. And they wanted to make it to where the retail traders, so they passed the what do you call it, PTD rule or whatever it is. We're at $5 now. And finally there's ways to get around that. At that time, when George Bush got out of office, we were $9 trillion in debt. He added about $4 trillion to the deficit, 4 or 5 trillion. And then Obama came, added a bunch more trillions. And then Trump came and added a bunch more trillions because of COVID. The government started handing out money again, bailing out everybody, bailing out people that never worked in their entire life were getting checks. Prisoners were getting checks. And then we had Biden. We broke all records. Spent $14 trillion over budget. Unfunded liabilities went to the roof. Over 200 and some trillion, 250 trillion. Where it was at one time, during the Bush years, it was at 54 trillion. So now Trump comes in and he's wanting to put a stop to all that. He's still going to spend money. He's going to have to. Because everything's been, we had welfare reform, which was really a good idea during the Clinton years, and it got some people back to work. There's still going to be people out there that'll never hold a frickin' job, and they'll be living the rest of their life on welfare, white trash. It was already bad enough that the black people were that they done the black people that way, and then they started turning the white people that way, become more dependent on government. So you just can't wipe that out overnight. During this time, politicians made hundreds of millions of dollars, tens of millions. I heard this one senator's wife made $14 million through a government-funded agency of cleaning up beaches. That's just one of many. that have laundered money, and brought that deficit up so high. I won't be surprised if you don't get shot, Trump. Again. Okay, we're at the 63. We're breaking the 63. We're at $6 again. Let's see. $3 to 6 right here. You're up 100%, so you can take profit. $59.50s. Well, if the NVIDIAs are just a little bit low, the market will react in a negative manner. Unless they want to bring this market back up. That'll ignite all these other ones like AVGO. I haven't even looked at AVGO in a day or two. Tesla's about to hit my support. Jimmy said more selling on Tesla, and he was right.
Fourth quarter, which they said now, given again that Axon model, they believe that that was also built up on a whole lot of like hype. And I mean, I guess I because I covered this so diligently, I'm like that we did see advertising on 73%. Is that just completely made up?
Yeah, I mean, it could make for an interesting legal standoff on what's intellectual property when it comes to AI, or I don't know. I mean, I don't know the functionality, I don't know the software and how it's programmed, but it seems like a massive allegation, but maybe one that also might be in a realm of subjectivity with AI. I don't know on what is,
massive
open source, what's not. Okay, good stuff. Thanks, Jenny, very much.
Apple's down $7.
Market not too bad, off by about 15 bips. We're going to come back and talk about the economy, earnings as well, how they connect into it, and of course the role of big tech.
General Motors is up too much.
Productivity, perhaps.
Download the Schwab Network app and join in on the latest market trends.
Google,
anywhere, on any device.
man, Google,
Schwab Network.
a monthly sell-off. Here's one that was up too much.
Whether you're an experienced investor or just getting started, Charles Schwab
Now I like this.
webcast that's right for you.
I like this 165 area.
Trader, Our active trading webcasts are designed to help you develop a deeper understanding of
Google, we bounced off of it right here, we bounced off of it right here, and we could bounce off of it one more time. If that doesn't hold, this market's up, and it's still way overbought. I'll show you what I mean by overbought. 83 bucks all the way up to 207. So if it wants to stay bullish, it'd have to be that 166 area. 167.84. Right there. Let's clean this up. It's a scalping day on them breakouts. I've just left. When I bought it that first trade, I should have sold it. Right, magnificent. I mean, I left $1,000 on the table that I could have had. And I was in the trade this time. $1,000. I'm not complaining, but I mean, I wanted $2,000. So 168.09 for Google. $168.09 on the weekly 63 EMA. Now we're at the 50. That 63 has been a pretty good pivot point. See it touch here, touched here, touched here, touched here, almost touched there, almost touched there, touched there. And Tesla, we talked about Tesla yesterday. The 63 EMA on the weekly and the 200 SMA on the daily. And that's a gap. Right there at the bottom of that wick. 277 is what I had. Or it bounces off this. And this here's also sold off for 5 days in a row too. 5-day rule. And let's look at the SPX again. How much more time we got? 218, 318. There's a Jose. I'm about wore out. Supreme Court appears likely to side with straight woman in reverse discrimination case. I support the woman. You know them girls with 2 legs and beautiful eyes that have babies.
And a series of things, and I think that's pushed things up. Now, maybe quantum computing is the next thing. I don't know, but I would say if I'm looking forward, in our sort of prediction, we would say, look, it's reasonable to assume that the PE is probably going to be flat. There might be a bit of a reversal, and there's a chance for maybe some of those expectations to reshift internationally. Whether it's in EM, we've seen that this year, or in developed markets as well. And so we've seen, some impulses. There's always a catalyst. So I think for China it was the DeepSeek catalyst. And then in Europe, more recently, news was less bad, and there's more of a willingness and a need to spend on the fiscal side as well. And that's been a positive impulse in Europe.
Good answer. Another framing of the question basically is, do you view it as a zero-sum game if there's not a huge stimulus package or some type of big fiscal expansion coming? Is it somewhat of a zero-sum game, swapping those valuations, where if you have a big blockbuster year for international, does that imply a muted stock market here?
I wouldn't say that. I wouldn't say that. Clearly,
you wouldn't say that?
Assets can reprice. I think there is a little bit of an element where, if assets and flows shift one direction, perhaps there is a bit of a zero-sum game in the short term. But I think the long term.
Okay, get ready for the breakout.
Doesn't seem to be the case.
Love the conversation. And part of the stuff you guys like in the U.S. has been healthcare. It's been more defensive, and a lot of those trades have done pretty well in the year. Philip, thanks a lot for the catch-up.
Thanks for having me.
Appreciate it.
Thanks a lot for the catch-up.
When the U.S. underperformance has been one of the main stories so far this year. Will NVIDIA get us back on track this afternoon? Let's talk about that next. Mr. Ross Gerber joins. We'll talk some of the AI trade. We'll talk a little bit of Tesla, maybe, perhaps. Always a fun chat with Ross coming up.
Don't talk about Tesla, please. Don't get Jenny on there, especially. Uh-oh.
When it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
The best way.
Is it? At Schwab, how I choose to invest
This
is
woman's
up to me.
rude.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
I think it's a smart commercial. They must have got my memo because when I first started listening to him, you had the guy with the windows. My dad. He didn't charge like the other guys did. He used to charge $100 a window. He'd be proud of me right now.
Live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest.
They had some of the stupidest commercials. Now they're pretty funny.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on Schwab.
They're now at 6:50.
And on all your favorite streaming services.
Jimmy called it.
Available anytime, anywhere.
On any device for...
I called the double bottom Johnny. Remember that? They almost doubled in price. You're not in. Rob, did you do that? You weren't even paying attention, were you, Rob? Say yes. Rob. Oh, yes. RTP, how you doing today? You got your ears on? He said yes. Very good. Yoko made a good point. And the video's popping. The video's popping into close.
We've lost 25 million. We've been sellers, when the stock was higher. But, as I said, we still have a ton of Tesla. So I don't wish negative on Tesla. I would argue the opposite. I love Tesla. The problem is Elon Musk. We all know what the problem is. Everybody can bat around all these other issues, but on the actual surface of the company, you'd think they would be doing well, but nobody wants to buy their cars. People are protesting. And Elon, I think, has become one of the most hated people in the world. So this is not good for selling vehicles,
Yeah. All right. Well, the shares have been getting hit so far in the last couple of weeks. All that presidential premium kind of evaporating here. A little bit left in the trade. Well, 288, I guess, November 5th, we got like $30 left of presidential premium in the stock, I guess. Ross, thanks. Appreciate it.
Yeah, thanks. Thanks for having me.
Yeah, good catch up. Ross Gerber, CEO at Kawasaki Wealth and Investment Management. Let's look at options, flows, technicals, and charts. Mr. Kevin Green coming up next.
James, you're way out of key, Can't I play my kazoo? Not with that classical music. How about my washboards?
Trading at Schwab is powered by Ameritrade, bringing you futures and forex around-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter
We have 26 minutes
trade,
left.
Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade.
I'm excited to see what's going to happen tonight on the news.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services.
Oh, I got to do my checking account book.
Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network.
Stocks are now even about. Let's check in with Mr. Kevin Green on the charts. As today's had a good bit of up and down. KG right now it's about flat, but it was definitely a tough fade there around lunchtime.
Yeah, and it didn't seem like it was really kind of like a structural fade. It does appear that it was a little bit more news driven, especially when you're looking at tariff policy. So we did kind of get above that 6,000 level, and then we saw a little bit of a fade to the downside here. Right now we're sitting at around 59.50, and what we want to be able to do is try to reclaim at least the 59.68 level for now. And if we're able to do that, I would think that would be like ultimately a win here. Any type of failure going back down to 59.20. The 59.20 puts are definitely what I'm seeing print on the screen over the last 30 minutes, 45 minutes to the downside, unfortunately. But if we do have a nice little recovery and short covering event taking place, I would look at 59.68, 59.70 as that area to kind of hold here. And then actually that label to the top should say 6,000 as your positive gamma area. That's where we kind of faded today. I had that whole head and shoulders pattern and then once again faded on the news.
Okay, so as long as we're kind of within these key levels, this is maybe just jostling, maybe dry powder style action.
Well, we did have a risk on tone earlier this morning. A lot of that risk on sentiment has faded a little bit, but a lot of those companies like an Oklo or like CEG, for that matter, are still in the green. So they haven't gone from green to red yet, which is kind of symbolizes obviously a little bit of a fade in the market. If you're looking at the E-mini S&P 500 futures though, and if you're looking at volume uptick versus downtick, we actually have had 75% of the volume today still on down tick. So what does that kind of mean, Oliver? Was this a short covering rally for us to kick off the day? And did we see people selling into strength, which is kind of symbolizes obviously a lot more of that volume flow hitting to the sell side rather than buy side? I think that's one of the negatives for today. But once again, a lot of the risk on trades for the most part are still in the green if you're looking at those really speculative areas. And those should have been the first ones to really kind of fade and go red here. The last thing I will kind of say when it comes to this, the composition of defensive stocks did not actually catch a bid as we faded. And even right now, as we kind of consolidate around 59.50, defense stocks, just in general, defensive stocks in general continue to fade to the downside, especially if you're looking at utilities. The headline for utilities, if you're looking at the sector or you're looking at the XLU, it's not really telling you the full story. The traditional utilities like the NextEras and the Duke Energies of the world are actually sliding pretty aggressively here today. So unfortunately, we did not see an intraday rotation either. This might have been just a sell-off and just taking in cash until we see what happens with the NVIDIA earnings.
Okay. The big gamma potential for a squeeze, what if NVIDIA is like amazing? What if it's like awful? Where are those kind of boundaries at which we might get a critical mass in one direction or the other?
Yeah, so if we're kind of looking at NVIDIA, there's around a $10 to $12 implied move in the options market right now, and rightfully so. If you kind of look at the gamma levels that we're focusing on, the position concentration to the upside, it's going to be around $140. To the downside, it's $120. Now, if you're kind of looking at the put call skew for volume today, it's skewed a little bit. When you're looking at the aggressiveness of orders, skewed a little bit to the call side, even though if you're looking at put call ratio as a whole for open interest, it's pretty much balanced, sitting at around 1.06, okay? The key area that I feel like there's a fair amount of lottos being placed here today, and you can see this being printed all day, is going to be the call options expiring for this Friday, the 150 calls. So there's over 100,700 contracts that have been traded today. And once again, they've been getting picked off literally all day as NVIDIA was going up, as NVIDIA was going down. So if we were to see any type of melt up or a squeeze, or the market may think it could go, once again, a little bit of a home run, 150 is actually that level. The squeeze level, if you're looking at price action, is going to be around 143 in order to really create and generate a catalyst to the upside. And then to the downside, the unusual put that I have been seeing kind of hit the tape is going to be the $110
too
put,
far from me.
and then the 109 puts as well. Both trades or flows are really kind of buy side flows there. So everybody's all over the place, but it's definitely call side skew that hopefully people want to really see it kind of rip higher.
Okay.
That's the expectation.
Yeah, I think if we can at least push past the DeepSeek gap, then it'd be an important kind of milestone to getting this thing back on track. $140 being that pretty clear area on the chart. If we break to the downside, how much visibility is there below? I mean, 120 bucks kind of seems like one of the other higher volume areas on the chart. But if worst case scenario happens, what does the sell-off in NVIDIA look like right now?
Yeah, so worst case scenario is kind of, I don't want to say where we're at right now, but if you look at that blue line, it's basically showing you the volume weighted average price since the lows that we saw back in September, okay? So right now, we're actually trading below it, and it's acting as an area of resistance, which is not something that we want to see. As the stock was kind of in an uptrend, these pullbacks, we were kind of testing that moving average and then moving higher, continuing to bounce out. We did have an official break because of DeepSeek. We had an attempt to look above that moving average, and now we failed. And so today, even that candle going into earnings is not really a good candle because you kind of have this very long shadow to the upside. Any type of meaningful break, obviously 120 as you kind of highlighted there, but you start talking about 110 or so, getting back down to potentially seeing if some buyers are going to step in towards those middle of September, early October price levels. I don't know if that's going to happen, right? I don't know what they're going to say in order for us to kind of get down there. But the chart setup really doesn't look really bullish for me right now. It still has a lot to prove to the upside in order to really gain some confidence for the street.
Okay. All right. So it's kind of stuck in a no man's land a little bit, middle of the chart.
I'll be right back.
On to moving average.
She's moving up.
It seems like we should be expecting a big move.
But it's a massive flag.
They're at 720 now. We're almost to the resistance level.
Yeah, that channel. It's a massive flag. I mean, you're talking about
I'd probably go ahead and bail out here.
The primary trend technically is still kind of up. If you're looking at just this 6-month time frame, you go back farther, obviously the trend is still to the upside. But if you're looking at the last 6 months, primary trend, okay.
Been an easy day, actually, after I woke up.
Almost 60%, 65% since those lows. That's not bullish at all. So you need a really good report. You want to be able to get some buyers to really step in, get us out of this channel, this wide channel that we have, and then break higher, make new all-time highs. If not, once again, I get a little concerned that you
God, 38 times today.
And given the volatility that
you did more than I did
in the market, that would be an unfortunate event here for NVIDIA, and that could translate to other stocks within the overall equity market.
Okay, good stuff, KG. Thank you very much. Like that perspective, like to look at NVIDIA. Nice prep for the earnings, important levels to keep in mind. All right, let's talk some other stuff on the move. Bitcoin's been getting hit again today.
I'll be right back.
Take a look at Bitcoin's weakness. Dan Deming next. BTC right now at 84. Another rough session. Stocks looking much more stable.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hours.
Oh, tick.
You can trade brilliantly with Schwab.
Fuck.
No politics, no noise. Anytime,
Shit.
anywhere, on any device for free. Schwab Network.
Oh, I just left another 1,500 on the table.
Particularly weak next to stocks which are now back positive on the session. Dan Deming, managing partner.
Damn.
Financial, joining us for a chat about some of the other stuff this afternoon. Dan, what's up, sir?
Hey, Oliver, not much. How are you?
Trying to stay balanced, not go too far down the NVIDIA rabbit hole. But Bitcoin's kind of fallen down some sort of hole.
Sure has. Yeah, 2 heavy days of selling pressure, Oliver, as we now move to the lowest level since early November. You know, this is, again, the evolution of the space. The air pocket here is something that, maybe has further downside. Long term, I'm still feeling that it's going to be a place.
I just went in there to take a piss and come back, and they're at 1590.
Over the next several years.
I had to pee.
We hit these...
Look at that. Unbelievable. I wish I didn't have a penis. Unbelievable. I sat here and held that thing for, I had to go a half hour ago, and I held it, and I said, man, I got to go use the restroom. I can't take it anymore. I'm about ready to bust a kidney. Or whatever holds that urine. Ah, darn it. Oh, boy. I meant to say 1671. Oh. You know how much that was? That was about $1,800. I sold it $720. I was sold that third frickin' soldier too. 1, 2, 3, boom. I need a urine bottle, that's for sure. The guys on YouTube would say, "What are you doing, Jim?" Well, I'm trying to arrange my boys so I can take a leak. Not make it look so obvious. No, my. I think one of these days I'm going to have to take some time off and get my car fixed, repaired. Got to get the oil changed and put a light in and have them inspect it. That sucked. That's twice today. First time I held it until the end and held it until it got down. You know, that would have been another $5,000 day. At least.
Shift your perspective into full gear. Real-time example trades, a full hour.
Jeez. I really thought it was going to come back down. Oh, man.
What's real? Catch me up to speed. I was on vacation, and you know what? I'm not trying to lose any sleep keeping track of tariff ifs, thens, or buts.
Yeah, Oliver. I mean, the market is still trying to figure out what's real and what's a threat. You know, we got some dates coming up here. March 4th is the next deadline on the Canada-Mexico tariffs. You know, President Trump is talking about how those are going to go into effect. I think the market is pretty skeptical and is expecting another extension of the pause. We got mid-March, we've got aluminum and steel deadline, and really April is kind of when the big deadlines are. And I think we'll have more clarity in the sort of April, mid-April to late April timeframe on which of these are really going to go into effect. But you know, I think the market is growing pretty skeptical that anything is going to really happen here, and that could result in a surprise for the market if and when they do go into effect.
Okay. What do you think ranks highest in terms of priority right now, Mike, for big policy moves? How about this tax thing going through the House? It seems like it squeaked by.
Yeah, it squeaked by last night, but remember, this is like step 1 of 50 on this process. So what they did is pass the outline of a big budget bill that has $4.5 trillion of tax cuts, $1.5 to $2 trillion in spending cuts, $4 trillion increase in the debt ceiling. But first, the Senate now has to pass that, and it's not clear when or how they're going to do that. And then you have to go through the process of putting in all the specific details, every actual tax and spending provision. We're talking months before that happens. So there's going to be a lot of time to sort of see what the details are, and the details are going to be hard. I mean, it was hard to get this very basic blueprint passed in the House. It's just going to get harder from here.
Jeff, who's and I was going to phrase it as who's given the president the biggest fight on the international side, economically speaking? If the dollar is going to soften up, which economy looks like it's best poised to surprise to the upside amid all this?
Well, we've seen some additional strength here in the euro post the German election. That outcome really points to a grand coalition that's going to lift spending and lift this burden of a balanced budget in Germany, which has really kept Europe's growth in check for years now, really since 2009 when it was put in place. That may be breaking loose. And if so, you could see more upside there in the euro. I know there's still some skepticism about European economic growth, but look, it's getting better. It's still not good. It's got a long way to go. And I think that momentum, along with now not only monetary stimulus, but fiscal stimulus as well this year, could be what we need to see that turn around.
How much creativity is there on the fiscal side, Mike? To come back to conversation this morning, Jay Pelosi, TPW, we were talking about what he described as kind of we're at the limit for our fiscal expansion while the rest of the world seems to be finding a way to tap into it, to Jeff's point. My counterpoint was anytime it seems like we're up against the wall, we're not. We end up finding a way to print some more, and there's rumors flying around that maybe there's going to be like a Doge stimulus printed. I mean, do we really know the limits of this president and team's imagination to give people money?
Well, I think that's right. And if they get their way, they're going to send everybody $5,000, apparently, from the Doge. Although I think I saw a Bloomberg calculation that if they started now, everyone would get $11. So I'm not sure how stimulative that would be. But Oliver, in terms of things that to keep an eye on,
They'd give more than 11, my friend.
Shutdown in a couple weeks. I would also keep my eye on that. Historically, government shutdown's not a big market mover, but there's some risk here. I think that it just adds to the confusion, uncertainty for the markets, and that's something to watch because I don't see a clear path forward for Congress keeping the government open past March 14th.
So that type of like black swan stuff, we're not at that point. Are things generally kind of going the way that the narrative was building, that Trump and his team would have a mandate, if you will?
Well, I think what you're seeing is sort of right out of the gate all sorts of upheaval and disruption, and some of that is going to have to be sorted out by the courts. But I also think the pace of change is likely to slow down here. I don't know quite when, but probably in the next several weeks. And you're going to get into the real grind of trying to get this stuff through Congress, which is way, way slower than Trump, frankly, wants to move. And that could be frustrating. So I think that tension is going to be something to watch in the weeks ahead.
One more for you, Mike. Sorry, Jeff, last one. But I got to take advantage of the policy guy while I got him to talk some crypto. What are they going to do? What's that committee stirring up, Mike? Because crypto prices are falling out of favor here.
Yeah, I think this is going to be really fascinating to watch because there's actually a lot of consensus that we need to do something on crypto, right? You need to put some kind of regulatory framework in place. You need to kind of decide who's in charge. Is it a security? Is it a commodity? When is it which? And which agency is going to oversee it? And there's all these multiple committees running around trying to make decisions.
My average is about 5 to 6 trades a day. My wait time is probably about a half hour, 45 minutes. Today I took lunch and then I took a nap. So I was out for, I don't know, I think I was out for a good 45 minutes to an hour. And then that's when I took my first bad trade. I already had 3 down, I already did 3. So I took 6 today. That last one and the one before would have been $2,500 profit. I hardly ever overtrade anymore. when I do, I usually regret it. I'd say after 6 or 7 trades, I'd be over trading. So if I can do one an hour, I think I'm doing good. Sometimes it's more than one an hour because it depends, you know, it depends on the day. But today was definitely a day for patience. Waiting for the setup. I mean, I called that first snake out, that last, second to last trade out perfect. And then this other one here I did it pretty good, but damn, I hate going, coming back. I've not even got a minute and a half, 2 minutes, and it's up $1,000 or $700. I'm going, shit. And I held on to that trade for a good 30 minutes. It seemed like 30 minutes. It was quite a while. 5, 10, 15, 20, 25, 30, 35, 40. About 30 minutes, 35 minutes. On these 3 black crows, the double bottom, 5, 10, 15, 20, 25, 30, 35 minutes, 30 minutes. And it was, you know, stair-stepping up. Not even stair-stepping, just still good trade. I mean, this one here, I was really impressed. That one earlier, and how long I held it. And then what happens when you get greedy? You leave 1,000 on the table. That breakout. And I thought we, you know, well, I mean, I called that out perfect. And it pulled back on me. So I think it's good to wait for the knives. Like I said in my last video or the one before that, sell the rips and buy the dips. Because it's going to pull back on you. It's not buy the dips and swing them or buy the dip and wait. Sell the rips. So I'm going to get out of here. That's a JD Vance, fat JD Vance. So, I'm going to get out of here and watch a few videos. I got to call a mechanic, see when I can make an appointment. I'm going to try this other place out, J&S Automotive. They're just down the street. Take it in around lunch and get something to eat. Got to change my oil for sure. And put a light in it. So I'm going to make that appointment and I'll catch you all later. Oh yeah, NVIDIA. NVIDIA's got competition now. So they might be in the now. Decline in U.S. home sales. Markets mixed ahead of NVIDIA's earnings. We've had a good pullback. Yesterday would have been time to buy NVIDIA. and sell it today. So let's look at a different chart. Tesla's about to support, so I'm going to be loading up on Tesla pretty soon. Being in the now, you know, Nvidia's at the 200. Yesterday I called this out. 3 black crows off the 200. That's a perfect setup. Perfect. So resistance is going to be 134.08, the 50 SMA, and support, if it pulls back again, be right around 126.44. And if we hold 130.13, this thing's going to pop. Today, off earnings. If it just pulls back a little bit, which it might. But we're going to look at the 50 SMA as resistance on the daily. Those are my 3, that's it. Support, pivot point, and resistance. If it breaks, up to the gap at 140.82. $9 bounce. There's your gap right there. And I'll have a great evening with Nancy. I told her to put on a bra today. I know it sounds gross, don't it? Woo! Oh man, I'm tired. I gotta make some calls.